that fall that we saw. I think that could well continue. We might see some bounce, but I think that is an opportunity to sell. Most near-term levels that I'm looking at, 23,300, 23,350. If the Nifty is not able to sustain that, it's not a bad idea to go out and sell for levels of 23,000 with a stop loss around 23,500. So sell on rise is the idea for Nifty. And as you had already asked me about Bank Nifty, yes, Bank Nifty also is a selling opportunity. What's happening with Bank Nifty is that the volatility is way higher, especially when you compare it to the Nifty. When the Nifty is moving about 0.5%, either side, Bank Nifty is moving about 1.5%. So you would get that extra move on the Bank Nifty. The texture still remains, on the short side for Bank Nifty. 47,700 are the support levels to look at. But yes, I would look at an opportunity to sell on rise for both. If I want a riskier trade or maybe a more volatile one, then it's the Bank Nifty.
Okay, and your picks very quickly?
Sure, both is a mix of a long and a short. Budget round the corner. We've already seen movement in Apollo Microsystems. So this stock is recovered quite a bit after losing some ground. 135.5, 139 are the targets. 128 is the stop loss. On the short side, I've got Shriram Finance, which fizzled out near the 200-day moving average. 521, 517 are the targets on the downside. 533 is the stop loss, and this is why the Jan futures.
Aditya Shah also joining in. Very good morning, Aditya. Great to speak with you. And I'm actually going to start on a detailed tweet thread you put out about an hour ago on Kotak Mahindra Bank. I found that very interesting because you started by saying, is the pain finally over? And the numbers are out today. Banks otherwise have been not a very great scenario as far as numbers are concerned. We'll have to wait and see what happens with HDFC. But give us a summary of why you are feeling bullish, I presume, on Kotak Mahindra Bank.
Good morning, Tamanna. So we've seen that the results are really very stable. The loan growth at about 20%, the deposit growth at about 13-14%. The asset quality, when the entire industry is facing microfinance pain, the asset quality is a little bit deteriorated, but it is really very stable. Now, the real pain for Kotak Mahindra Bank was the RBI regulatory action on their 811 and online customer acquisition per se. And now bank is making really good strides in solving those problems and investing in technology per se. So I believe over the next 6 to 12 months, the bank should be out of that embargo that RBI has put in. The bigger point here is if you look at a 4 or 5 year chart of Kotak, you'll see practically nil returns where the Nifty is done pretty well. So the valuation now is trading at about 5 or 7 year low at about 2.29 times. And given the quality of Kotak Mahindra Bank, I don't believe that there is nothing to lose per se. Where small and mid caps are trading at record high valuations, this company is trading at record low valuations. So from my perspective, a lot of margin of safety is available here. And long-term investors could start to look at this stock from a 3 to 5 year perspective, where we feel that the larger banks will now take over the banking sector, and outperformance will come from the likes of HDFC, ICICI, to that matter, Axis, and to some extent SBI as well within the PSU banks. So positive within the larger private sector banks, and the pain is not as much as there is on, let's say, a company like an RBL Bank, which reported a profit before loss.
Okay, while we're on the, so I want to speak a little bit more on that RBL Bank number, Aditya, because it is symptomatic of what we're seeing in the MFI space, this special provision that is being made, and that's a huge negative, wouldn't you say?
Alex, the result is really very poor. RBL Bank has been particularly very, very aggressive on the micro lending and the credit card space, and that space is really bursting about. And we've seen the bank report 137 crore profit before loss because of the provisions that they have been taking. Now, what is happening is they are trying to diversify their book towards the secured side of the space, but really, this result is horrible. It is a shocker, and it really lays down the fact for all other micro lenders where results are going to be really very horrible. The only solace on RBL Bank is it is now trading at about 0.5, 0.6 times price to book. The valuation is cheap. However, the next 6 to 12 months will be a pain point not only for RBL Bank but for the entire microfinance space. So one must be really very careful. Mind you, RBL Bank is from its peak, it is down about 80%. and I think that the pain is not really over. So be really careful not only on the RBL Bank stock, but also on the entire microfinance lending side, where it is showing that India is in a pain point, and the government must use the budget and the direct tax code to get the people out of this pain that is really happening.
Vodafone up 10% first 4 minutes of trade. This is the pre-open session. Tata Tele up about 9%. We told you Telecom will be in focus. Indus Towers about 3.5%. Not surprising because of reports that there is going to be relief on AGR. I mean, I don't know if you would take this very seriously and use this as an opportunity to have a clear trading strategy in any of these. That question for Aditya Shah over there. How are you feeling about some of these counters? I just want to add Bharti Airtel to that list and see if anything is happening there this morning on the back of that news. Not confirmed. Not confirmed, I must say. Okay, Bharti Airtel not moving much because the desperate need is of Vodafone. So expect firecrackers there. But how would you look at it, Aditya?
So I would use this rally to say bye-bye to the Vodafone stock. I don't think that there is a future until and unless there is a huge capital infusion. There is an investor who will do a geo-type strategy, what Jio did in 2017. I don't think that Vodafone idea is going to survive fundamentally over a period of 5 to 7 years, unless and until there is a massive change. My bets would continue to remain with Bharti Airtel, and to that matter, Reliance as well. Reliance trading at a 52-week low, and Reliance Retail and Reliance Jio spinning off from the Reliance stock bodes well for the stock per se. So this AGR news is a short-term positive for the entire telecom sector if it goes through. But this should particularly be used by traders and investors who are stuck up in the Vodafone stock. The Vodafone as a whole, as a company, has a problem of losing customer base, as well as they are not able to make any new investments because of their existing debt. And now the debt is also a problem that even though the government could waive certain amount of interest, but still it remains a bigger issue. So use this rally to exit out of this.
Okay, just quickly want to mark some of the result movers. Look at a Kotak Mahindra Bank, which we started the conversation with, about 7% up pre-open. Wipro completely firing, 6.5% up. Expect some joy in the rest of the space as well. Kalyan Jewellers, I find that a very interesting move, nearly 5% up. So much controversy over the weekend as well. Motilal Oswal has put out a whole post talking about some of the rumors swirling in the market. So that has been moving. Hitachi Energy was on our watch list. I want to pull up IHCL. Good set of numbers. Is that reflecting as well in the pre-open price? And you're going to be seeing, yes, that is about 2% up as well. But Wipro, I think the story this morning. Kosh, I want to come to you quickly on anything interesting that you've spotted in this pre-open session with movers. And let's talk about Wipro. Let's talk about Vodafone.
Let's not talk about Vodafone.
It's huge retail participation. I mean, people have I think it's that 10 rupee price point.
Yeah, you know, that's the magic number which the retailers or the FMCG players don't want to get away with, right? I mean, I think it should be limited to that alone.
Chota pack.
Yeah, it should be limited to that alone. Far too much volatility, and as you rightly said, it's a overly crowded trade for anyone to maybe make money. So I don't think this is something worth looking at for any serious trader. However, given the kind of move that we're looking at, just some levels, 10.55 thereabouts is the first resistance level. Beyond that, there is 11.2. So these are the resistance levels just for someone who's trading it. So you might want to take an opportunity to at least partially book, at these levels, if not completely. What I find interesting, just to complete that conversation, Wipro, it's a stock which has not performed for the last 3.5 years. So you might want to take this as an exit opportunity. What we've seen in some of the result plays is that once the result impact is out, look at TCS, for example, or Infosys, had a iffy number anyway, HCL Tech also. So some of these moves fizzle out after a day or two. So I would actually take the opportunity that we're getting today on Wipro as an exit opportunity. And anyway, if in the large cap pecking order, Wipro always falls fourth, right? I mean, HCL Tech, TCS, Infosys, and then it's Wipro. So I would actually take this as an opportunity to move out. Just an update on SBI Life. This is one stock that we had discussed last week. In the volatility, the stop loss was triggered, but if someone did hold on, then 1545 was the second target. Today we are seeing it open above that as well. So this is one trade that I would continue to hold because of the kind of recovery that the stock has seen even before the markets recovered or even before the insurance sector recovered. So SBI Life is a hold.
Okay, all right. A lot of people wonder to the point of 10 rupees, Tamanna, ja ke kitna jayega? But then if it goes down 4 rupees, you've lost 40%. So
That's not how people see it, unfortunately. They see that, chota pack and it works for them, which is why I'm
huge capital loss. By the way, and a very interesting note coming in from Jefferies, it has maintained a buy rating on Adani Enterprises with a target at 3,800 rupees. That is a very considerable upside to the current market price right now. Anushi joining in to tell you what they're seeing in this report. Anushi?
Hey Alex, so 50% of an upside is what we are looking for Adani Enterprises. This is the target given by Jefferies. Now, a lot of factors in consideration. First is the asset monetization, which is expected to improve the cash flows going forward for the business. If you look, the company has also exited its food and FMCG business. We saw the exit in Adani Wilmar. This will raise around $2 billion more for the company. Other additional factors includes Navi Mumbai Airport, which will is expected to commence soon. And the new energy business is also going to start with the next round of capex, which will double its cell plus module capacity from 4 gigawatt to 8 gigawatt. Capex acceleration ahead is on the roads, and this hinges on the fundraise plans it has. So overall, a very considerable upside, as you've mentioned, that we are looking at Adani Enterprises, and a very constructive outlook going forward for the business.
Anushi, thanks so much for getting us those details. I want to come to you, Sony, on Adani Enterprises. Interesting moves in the recent past. Of course, the stock is currently trading with gains. What are the key levels that you're watching for? At what level would you be a buyer?
So Adani Enterprise, what I see on daily charts is that it's still below its all short-term major moving averages. And as long as it's not able to cross the level of 2450, now that's the bare minimum level that it should cross for any sustainable upside towards 2600. And that's the level to watch out for on immediate basis, 2380 to 2400. That 20 points range is a decent support, but only if it crosses the 2450 mark, one can actually look for a short, for a long trade towards a 2550 to 2600 levels. I think just wait and watch, let it cross the resistance, and then you can build a long position.
All right. I'm just coming to you on this one, Aditya. Just give us an opinion on this. You just heard what Anushi had to say from that report. Any comments on Adani Enterprises?
Alex, so I will not be able to comment on the entire Adani group.
Okay, fair point. Kush, I'll come to you on this one. What are the key levels that you're watching for?
Well, right now the stock is consolidating. So I think from a near-term perspective, you're looking at the range play, which is 2350 on the downside, and on the upside, you're looking at a 2550 kind of a move, closer to the lower end of the band. So if it does kind of give you that support, then the risk reward is favorable for a long trade. 2350 being the critical level that you want to look at. If that is broken, then perhaps you might want to exit a near-term trade. But otherwise, with that as a stop loss, for levels of 2550, that can be considered as a long trade from a positional standpoint.
Okay. Aditya, talk to me about insurance companies. We've had a couple that have come through. I want to talk to you first on ICICI Lombard, if you will. The numbers looked quite good, and the combined ratio, in fact, coming in lower than was anticipated. Give us your view on that.
So Alex, ICICI Lombard under the new CEO has particularly given concentration on the health insurance part, and that is triggering out a 30% move within the health insurance space. The new products, ICICI Lombard Elevate, is doing pretty well in the industry. Within the health insurance side, also they have reduced the combined ratio on that specific business, and they continue to remain very aggressive there. That together with the motor insurance, where ICICI Lombard is aggressive, this is boding really well for the company, and the results were spectacular. At a time when Star Health is really struggling on their health insurance part, ICICI Lombard is doing pretty well. So from that perspective, I'm really happy with the results. And within the general insurer and the standalone health insurance, ICICI Lombard would continue to remain my number one pick, given the aggressive nature of investments that the company is really doing.
ICICI Lombard, you'll hear from the management at 9:50 this morning as well. But just about 50 seconds left. Sony, one top pick before we hit the opening bell.
So I'll keep a watch in Zydus Life. It is opening above the 1,000 mark. If it crosses 1,010 odd levels on intraday, you can see it heading towards 1,035, 1,040. That's a level to watch out for. On immediate basis, 995 is a very good support. So I think risk-reward ratio-wise quite favorable.
Okay, Zydus Life on Sony's radar. Coach, do you want to quickly come in with a quick pick?
SBI Life is a continuation, so 1580, the 200-day moving average resistance looks like a very likely target. 1520 is a stop loss. So good risk-reward ratio and a good uptrend going anyway for it for some time now.
Okay, stock 0.5% up in the pre-open session. Zydus, SBI Life, watch out for IT. Watch out for Telecom this morning. Some quick plays that you'll see definitely coming in the first few minutes of trade, and there you have it. Markets open up fairly strongly, not half bad. 23,281 on the Nifty right now, and the bank Nifty actually is not looking too bad at all. Remember, it's a sell-on rise market is what our analysts have said this morning, but bank Nifty starting about 0.5% up nearly. Will it hold up is really the question. Nifty IT looking interesting, but you know, despite a Wipro and Wipro not with that much weightage that will pull up the entire pack, Wipro, Telecom, both were looking good. Let's pull up the heat map very, very quickly and give you a sense of what's happening there. I mean, no prizes for guessing. Kotak Mahindra Bank, Wipro, some of the two top gainers. But notice something. Apart from Wipro and Kotak Mahindra Bank, the rest of the green, you don't see that much of a rise. It's basically Wipro about 6.5% up, Kotak Mahindra Bank 6.5% up, both in a tussle for the top spot right now on the Nifty, and then quite a bit of red on the other side. On the lower side, Shriram Finance. I mean, we talked about how RBL numbers put a kind of pall over any company which is exposed to loans that could look shaky. Maybe that's why SBI Life, the numbers weren't bad, but the stock about 2% down right now at opening. Indus Ind, there has been a key CXO exit. And maybe that's why a bit of pressure in an Indus Ind. Otherwise, the banks are not looking great. HDFC Bank will report this week about 0.5% down on an HDFC Bank as well right at opening bell. So the standout stars, frankly, if you remove a Wipro and a Kotak Mahindra from that situation, the Nifty is not looking that great. I want to quickly pull up the mid cap and the small cap index before I hand it to Alex for other stock spotting that he's doing in the first few minutes. And muted, 0.25% up on the mid cap. Small cap is actually flat and mildly in the red, but I would say completely flat. So nothing firing up. I think it's going to take some time, couple of days of consolidation, and some numbers looking good. I don't know if I can pull up Telecom just very quickly. Telecom, before I hand it over to Alex and see what Tech Mahindra is doing. Completely flat. I think that confusion, or I would say that double view of whether the potential looks good enough to make up for the fact that the key indicators were missed in the numbers. Alex is playing out in the stock price as well this morning.
Absolutely, Tamanna. In fact, no real direction. In fact, while you were speaking, Telecom gyrating between gains and losses, currently in the red. But a few other stocks stand out as well. RBL Bank is one of them. We spoke about that pre-open, and it's having a torrid time at the start. 4.7% lower. In fact, Shriram Finance and a couple of the other MFIs as well, the microfinance institutions also losing ground. It's down about 4% as we speak right now. So watch out for that entire pack. If you have exposure to lenders in the MFI space, be a little wary as things stand. ICICI Lombard stands out as a very positive number, and it's certainly something that you should track. It's up about 1.8% as we speak, but it could head higher based on the kind of commentary that you've gotten and the performance. The telecom space is one to watch in trade today, and we spoke about this as well pre-open. Vodafone Idea gaining about 10% right now, but tread with caution on Vodafone Idea. Indus Tower gaining about 3% or so, and Tata Tele also gaining about 10%. Bharti Airtel a little more measured in the move upward. Reliance Industries, I saw earlier, was doing reasonably well. Let's pull that up as well and see where it currently is. And it is gaining about 0.7%, building on the gains from last week. Wipro and Tech Mahindra, Tamanna has already pointed out, Wipro is the big gainer in trade today. Indian Hotels from the hospitality space is one to watch. And it had a decent set of numbers, but the stock is currently trading with cuts of about 0.4% right now. Of course, some would argue that the third quarter is the strongest, and as a result of which the performance was par for the course. Finally, SBI Life also posted its numbers, and it was on Kush's watch list at the start. The stock is trading with cuts of about 2% or so. Kush, you want to review that, or does it reinforce what you already had to say?
No, it does reinforce what I was saying. For me, it's a buying opportunity at a slightly lower level. And then, as I said, even the day we discussed this stock, the very next day, due to volatility, the stock had hit the stop loss. I'm a little constructive, but since it was lower at opening itself, and I'm not sure if anyone would have gotten an opportunity to get in, above the stop loss levels, I think it's a good idea to wait and watch, especially given the market texture. Just a quick update on, the other stocks that we had discussed. Shriram Finance opened actually about 5-6% lower, still trading with cuts of 4%. Again, a trade which may not have given you an entry point, but still to keep on the radar on the short side. Apollo Microsystems, softish opening, recovery from lower levels, but this is one stock that you can consider on the long side. As far as the markets go, fair share of volatility. We saw some profits being taken off the table on the Nifty, at least Bank Nifty showing some signs of recovery. So the initial 5, 10, perhaps even 15 minutes are the BTST pressures at play. So wait it out. I still think it's a sell on rise kind of a market. From what level do you get that opportunity is perhaps something that, that we'll come to know during the course of the day, but it's still a sell on rise market for me at the moment.
Okay. Sony, you want to come in on anything that you're spotting just as the dust settles? Of course, that'll pan out in the next 10 minutes as well. Sony?
I think I still go with a wait and watch because it's quite in a range and you can see stock specific action happening on the long and the short side. There's a lot of volatility. Not much to watch out from here, but perhaps Havels is one stock which is attempting to break above its 20 exponential moving average on intraday basis. Provided if it sustains above 16, 20, 25 range, there's a possibility that the stock may see higher levels towards 1660 on intraday basis. I think just that one stock which is on radar, but as of now, looking at the volatility, wait for a while before aggressively taking into any long or short trades for the day.
Okay, I just want to get a quick take on a Wipro. Aditya, let me come to you. And, is this an outsized reaction on a Wipro, considering that, and Mohit Joshi seems to be walking the talk to some extent, but considering that the extent of disappointment we had in terms of Q4 guidance, and then you have one tech company which comes and looks pretty sanguine about it, how would you look at a Wipro this morning?
Tamanna, I would be cautious on the entire IT sector as well as the entire export-oriented sectors. We don't know what the new US president will come and do, and the cost of doing business is one of the major problems for all the IT companies. I think it is expected to move up. There will be a reluctance to issue new H-1B visas, and that would be a real problem for the entire IT sector per se. So right now, I would wait and watch. Today's inauguration will be a very important moment where Trump will try to lay down what kind of policies he wants to adopt, and that is a major trigger for the entire IT sector. So I would right now avoid the IT sector. I would wait and watch what happens and then take a call from there. But within the large cap IT sector, my top two picks will continue to remain HCL Tech and TCS. HCL Tech, though disappointed on the results, I feel they will do pretty well over the next 6 to 12 months. And the valuation with respect to other companies is slightly cheaper there. But wait and watch is the message on the entire IT sector.
Wait and watch on the entire IT pack, and in fact that is bearing out even right now, because just pull up that index and you will see that the only stock in the index, or maybe two stocks that are gaining, Wipro in a big way, 7.5% up, L&T Tech is up about 0.3% or so. Everything else from the IT pack down. Kush, you would be cautious on Wipro?
Oh, I'm very clear. This is an exit opportunity on Wipro, and I've been maintaining that this is one of the last stocks in the pecking order. This is a good move, but it is also now very close to the resistance levels of 305 to 310, that zone. So I would take this as an opportunity to exit. And as we've discussed just recently, that after the result, a lot of these stocks have seen some sort of profit booking, no matter the quality of the result, right? So that could well play out for Wipro as well. So for me, Wipro is an exit at current levels.
Okay, thank you so much for that, Kush, and great to have you on the show. Wipro exit on current levels, but I have one question for Aditya on a stock which has been in focus for, I would say, all the wrong reasons, which is Kalyan. Kalyan Jewellers up about 6% this morning. and so much back and forth on this, Aditya, so many questions on it. I mean, just your take on a Kalyan Jewellers this morning.
Tamanna, a couple of years ago, the stock was at 80 rupees and it is now at 600 rupees. So correction was part and parcel of life. The business is doing fairly okay, but the stock is extremely valuation. Of course, the pedigree of Titan is something which is really very different. Stocks like Kalyan Jewellers, stocks like PNG Cargill, stocks like Senco Gold, all of these will be really very.
Yeah, stock movement is part and parcel of life, I understand. But the stock movement, if it's based on valuations, etc., any news flow which is in the public domain, what's happening with Kalyan is a whole different story, isn't it?
Yes, it is. I'm saying that the stock has risen on 5x, 6x, and a correction of about 30-40% is not something that you should complain about. The stock already trades at about 80 to 90 times multiple, and it's really very expensive. To my knowledge, there's no news per se within Kalyan Jewellers. I think this is a part and parcel correction that is really happening. And this is an important message to every investor out there. If you buy a stock at any valuation citing growth, the market will be brutal and the market will correct the valuation as and when it wants. So in my perspective, right now also the stock is really very expensive. Investors should clearly avoid and hold controversy about some mutual funds investing. I would like to give the message to the investors. Mutual fund managers do their own checks, and we should trust the mutual fund managers they have done their checks and then invested in the company. There should not be any controversy if the stocks corrects by about 20-25%. That's part and parcel of life.
Yeah, everything can. I mean, that ups and downs is part of the whole thing. Just very quickly, Soni, if you have a view on Kalyan, if you have a view on Kotak Mahindra Bank and Wipro, I mean, the three hot stocks this morning.
I think Kalyan, we'll start with it, a very aggressive correction that we've seen, still below its all major moving averages on chart. So possibly no signs of any strong reversal from current levels that one can see. Long way to go. It may face resistance around 560 to 580, and only above that, perhaps there's a possibility that some short covering can be seen. But as of now, it looks weak. It's just forming a small, green candle for the day. Not very strongly to say that one can buy at current levels, but rather avoid. If you talk about Wipro at current levels, now Wipro, provided if it's able to sustain the gains that it has shown today and make a close above 305. Possibly then the stock can head towards 320 and by a short-term trade, you can say maybe like 2 to 3 days it can happen. So it depends a lot on how it closes. Lastly, Kotak Bank. I think Kotak Bank, rather underperforming, is one stock which is actually showing some strength. It is crossed above a 1900 mark today. And, although the gap up is quite strong today, but from current levels, it still feels that it can test 1940 before showing any profit booking signs.
Yeah, I mean, ultimately, some people have pointed it out already. I'm just reiterating. Kalyan Jewellers' valuations were stretched to the point where some had said it's untenable, right? So last week, amidst this correction, it was at one point trading more expensive than Titan. And despite the kind of drop that you've seen, after 40% down, if it was trading higher than Titan on valuations, then you had to ask, was it too costly?
Yeah. But the thing is that when the market is in a certain mood, no one asks that question. Yeah. Now when things are turning, I would say with a lowering tide, everything is getting exposed and then questioned. But thank you so much, Aditya and Soni, for joining us on the show today. Our next focus is going to be on some of those banking numbers that we've talked about. But before that, a story that we want to focus on this morning. Construction work will be commencing under the Adani Group-led Dharavi redevelopment project. And of course, all the standard disclosures there, you'll see those on your screen shortly. Construction work will commence with the development of the railway land parcel. The railway land parcel area is over 27 acres. In fact, Vishwanath Nair has details of that story. Vishy.
Right, Tamanna. So 27 acres of railway land, but the construction work is happening around over 2 acres where the development of a railway quarters is going to be taking place in Dharavi redevelopment project. This is the first construction under this new redevelopment pitch that Adani Group had made a couple of years ago. And now finally that construction work is going to start. So the expectation is that this will lead to further development of the Dharavi slum area, which is the actual goal here. important to note here that this is, of course, the beginning, but the expectation is that the groundwork will start over the course of this month or maybe in a couple of weeks after that. And once that is done, then the development of the railway quarters will begin as part of this Dharavi redevelopment project. That's the story that's coming in this morning.
Okay. The other story that we are focusing on this morning is, I think, a tale of two banks. Just two banks, because those were the two that reported over the weekend, Kotak Mahindra Bank and RBL. Let's start with the one that seems to have positively surprised, Kotak Mahindra Bank.
Yeah, so as far as Kotak Mahindra Bank is concerned, a couple of strong beats. You've got core business, which is your assets and deposits, both growing about 15-16%. And that's a strong number in the current environment. Despite that deposit growth of about 15%, you've seen net interest margin for the bank improve by about 2 basis points. So that's obviously something of a positive in the current environment where most banks are struggling with maintaining that net interest margin. What has improved for the bank on its balance sheet is actually the cost of funds. So there, because of a higher growth on current account deposits, which carry 0% interest, and a cut on the savings account rate, you're seeing that the cost of deposits have dropped significantly despite the rise of cost due to fixed deposit growth. And the net of that is that the asset quality, the net interest margin has improved. Another point that is contributing to this NIM expansion, marginal although, but still a good NIM expansion for Kotak Mahindra Bank, is asset quality. On that front, the bank has actually done quite well. Flat asset quality, flat gross and net NPA ratios, which is obviously a positive. What is one thing that we need to watch out for is the way the microfinance business is going to evolve for Kotak Mahindra Bank. BSS Microfinance is Kotak Mahindra Bank's microfinance business. There we need to see whether asset quality continues to remain sort of in a range-bound manner, and whether the bank is able to continue that business accounting for these asset quality issues. The main problem is that BSS Microfinance has reported a 50 crore loss during this quarter. So we need to see whether that turns around in the next quarter or couple of quarters. So according to the bank's management, these things are looking pretty benign. They're expecting that the asset quality on personal loans, microfinance, as well as credit cards continues to improve in the coming quarters. So that's obviously a big positive quota.
But the stock is 9% up.
Yeah.
So let's put this in a comparative situation, because we are waiting for HDFC Bank to report. We want to see what the major private banks do. What has Kotak Mahindra positively surprised the street with?
Mainly the net interest margin. So that's the positive. That's the big positive, because most other banks are seeing their net interest margins shrink. This is because their deposit growths are finally picking up, and because you have higher deposit growth, you have to pay more interest to depositors.
But the deposit growth is up as well. Despite that, they've managed.
Exactly. So that is, as I said earlier, current account growth has been higher, 12% year on year. So current accounts typically carry 0% interest. So if that deposit base is growing, then you're not really spending any money in terms of interest cost on those deposits, and therefore your cost numbers are looking much better now, and therefore the net interest margin is improved.
I just want to point out that, the first time Kotak Mahindra Bank ever traded at 1,900 rupees per share was back in November of 2024. And since then, if you consider how things have panned out, well, nearly no returns, a lot of overhangs, but it seems like a lot of that seems to be coming out of, out of it. And I reckon that at this point in time, a lot of investors will take and look at Kotak Mahindra Bank with a little bit more freshness in terms of point of view. Well, Vishy, thank you for joining us and taking us through.
No, actually, Vishy sitting in for this conversation.
I'm so sorry.
Adam.
I'm sorry. Yeah,
and we have Ashutosh in. We wanted to get a quick word on RBL as well. Ashutosh, if we could just get a second, we just want to set the pace for RBL before we come to you, because Kotak Mahindra Bank is wow, and RBL is like, what happened?
Yeah, so RBL Bank numbers are disappointing. If you see the profit growth, so profit before tax, they've reported a loss actually on the PBT front. So that's important to note. The profitability is only because of a tax write-back that they reported during the quarter. Advances and deposit growth still looking pretty decent. Advances up about 13%, deposits about 15%. But asset quality, now that's where the big problem is. Net gross NPA ratio up about 4 basis points, while the increase is not that much. The number is actually getting hidden because of a stronger advances growth during the quarter. Main problem is the microfinance book. That's where RBL Bank is facing significant losses. That's something that the management had confirmed as well. Their expectation is that by first quarter of the next fiscal, that is by June 30, is likely when these things start to normalize and they start to see an improvement on the microfinance front. Overall, the rest of the business is pretty okay. Credit card delinquencies have actually improved or are coming down faster than expected. Lowered delinquencies on the credit card portfolio, so that's obviously helping. But microfinance still a pain point for RBL. Remember, RBL Bank was one of those private banks that really took that microfinance business up a few years ago under the previous CEO. But that's facing those problems now.
All right. Well, stay with us, Vishy. Well, let's get in, a view on how these banking earnings are coming through from the street point of view. And we have Ashutosh Mishra. He's the head of research at institutional equity at Ashika Stockbroking, who joins us on the show. Good morning, Ashutosh, and thanks for taking the time out. We start off with Kotak Mahindra Bank first. Your view of the numbers, your view of what we can expect going ahead for the bank as well.
So Kotak Mahindra number was quite positive surprise for the market. People were not expecting a similar type of growth in a condition in which the bank is operating. Bank is constrained because of the RBI restrictions on the digital expansion part of the bank. Despite that, bank has delivered a very good set of numbers. So if we look from that point, the performance was very good, and that's why I clearly see that banks doing relatively well compared to many of its peers in coming days. Even when we look at positive trigger point of view, the management interactions really suggested that they are at a fairly advanced level of resolving the issue of IT infrastructure part of it, and most probably in the next few months we may get the positive new announcement from that front too. So keeping all this together and type of underperformance which we have seen in the past and positive trigger which we may see going forward from here, I think Kotak is very well suited among the large private sector bank at this point of time.
Okay, so Kotak Mahindra is doing well. Just, I'm going to get a quick word from you on RBL, Ashutosh. Is this more reflective of now a little bit of nervousness on the microfinance portfolio across the board?
I don't think so. There was a problem in microfinance portfolio, but if you look, MFIN data and all other things have started improving from December onward. A few of the state like different bank and NBFC management, which they are making comment is that things have improved substantially from December month, and it will take one more quarter to start getting reflected into the numbers part of it. So probably from the first Q of FY26 we will start seeing the banks which have relatively higher proportion of microfinance exposure may stability in their performance. Till that time, we will continue to see that their asset quality and credit cost will remain at elevated level. And in that, yes, RBL results clearly reflect that, and fewer more smaller size banks which have relatively higher dependence on the microfinance portfolio may witness similar type of the result it's coming.
Ashutosh, Vishwanath joining in. So is your assessment that Q1 is probably where we start to see a turnaround for RBL Bank, or maybe before that, maybe by the March quarter results might throw some kind of management guidance on improved numbers?
So management guidance may improve from the March quarter, but October and November was not so good for microfinance in terms of recovery. So that will get reflected into the fourth quarter results. So expect only substantial improvement coming in from the first quarter, not before that. Fourth quarter, probably they will use this to increase the further provisioning level. And that's why I expect credit cost to remain elevated for the all lenders which have relatively higher dependency on microfinance portfolio.
Just one last question, and this is on Kotak. I wanted to get your view. So they've seen stronger current account growth during the quarter. How are you seeing overall deposit growth for the bank? 16% number that they showed, sustainable in your outlook?
I think it's sustainable. Like non-deposit fund, lot of things has changed. Liquidity management and other part also we expect with changing. RBI policy stance may ease some of the concern which we have on a deposit front. Even credit growth has substantially softened up. So keeping that, I don't think so. Banking system is going to face any major issue on fulfilling their commitment of credit growth because of constraint on deposit front. At least in FY26, I don't see that situation coming in.
Just one quick last question, Ashutosh, and we've spoken about Kotak and RBL. Just what are you expecting from an HDFC Bank?
So SDFC, again, they have clearly indicated that this year FY25 will be the consolidation year for them. So there also we will see the credit growth remain very soft for them, and because of that we are not going to see a very very favorable P&L outcome. But on asset quality, I don't expect any negative outcome from that.
Okay, that'll be important. If an HDFC Bank delivers, then the whole mood I think will change a bit as far as private banks are concerned, and of course ICICI Bank as well. Thank you so much for that, Ashutosh. Great speaking with you.
Thank you.
Our kickoff and countdown to budget has begun. We have 10 trading sessions to go. The 11th, of course, will be on the 1st of Feb, Saturday. And what is India Inc. expecting from the budget? Ameera Shah is joining us on that conversation, promoter and executive chairperson of Metropolis Healthcare. Ameera, very good morning and great to speak with you. Thank you so much for joining us. Let's start with the overview of what you think should be in the finance minister's list this time round as far as your sector is concerned.
So just broadly speaking on the whole economy, I think the focus has to be obviously on boosting the economy and really moving into expansion and innovation. We need to obviously stabilize our fiscal deficit a bit. We need to focus on tax reform and obviously really spur investment growth, just broadly from the financial part of the economy. On our industry, it's very interesting. While the government has put a peg of 2.5% contribution of GDP from a healthcare perspective, we are very slowly inching up to that in every budget. And I really hope that we're able to make a bigger leap in this particular budget of FY25-26. Healthcare certainly needs more focus in our economy. And we certainly hope that there's more provision for investment there. There are a few framework decisions which are also critical. One of the key focus of the government is to really make healthcare more accessible and more affordable. Accessibility will, of course, happen through more expansion in private sector and public, for which we need to create incentive schemes to be able to really go to smaller towns where affordability may be a challenge. And second of all, we really need to focus on how do we reduce some of the costs, right? An example is there are a huge amount of import duties on all kinds of kits, reagents, and hospital usage devices when coming into India. If we want to make it more affordable, I think it would make sense for the government to try to rationalize some of these things so we're able to make healthcare more affordable for the Indian population. Second of all, in the diagnostic sector, for example, formalizing the sector, by making some accreditation mandatory. Which is not there currently. It's a free-for-all where anybody can operate. We would also like them to sort of put in a 0% GST. Currently, our industry has all the input costs for GST and no way to offset them. So it's actually burdening, again, the health consumer once more. We've also talked about the government really focusing on preventive healthcare going forward. To do that, currently you have about 5,000 of a tax exemption at the end of the year, which can be moved against your income. We do urge that this should be increased to 10,000 rupees because 5,000 for a whole family becomes quite challenging. And lastly, I think boosting R&D in healthcare is absolutely tremendously important. We have not really seen schemes yet that allow for R&D expenditures to be offset, like in the pharma industry, or any sort of incentives for boosting R&D, either in medtech or in diagnostics. And we would certainly hope that there would be a change there.
You made a few points, including formalizing the sector, GST, as well as boosting R&D in healthcare specifically. I'm going to take the last point first with you. And from the government's perspective, what are the measures that they can take within the union budget and outside in order to encourage and push that research and development in the healthcare space?
So, for example, in the pharma world, there have been ways to, sort of invest in R&D and have those costs offset. or to have them sort of, given a different treatment from a P&L basis over 10-year period, right? So if something like that could be organized for the rest of the healthcare sector, I think that would be quite interesting. For example, in diagnostics, we land up bringing a lot of new tests and innovating new tests in our industry. And frankly, for almost 5, 7, 8 years, these tests don't land up making any money because you need to invest in them, create the education, start all of those tests, and all of that costs money. When you're not being able to offset those R&D expenses at all, that doesn't necessarily become an incentive to keep starting it. Companies like ours at Metropolis, we keep doing it because we want to stay innovative, but having some commercial benefit of it would be helpful for this to become a larger, more, sort of broader trend across the industry. And of course, the GST point is very much in the government's control, right? Like we keep telling the government that, we have all the input costs, please help us offset it. It will really help the patient. And I think that's something, if they would pay attention to from a healthcare perspective, I think would really serve the industry in a very broad way and really help in formalizing it. Because, in the unorganized sector, there obviously continues to be, without proper GST tracking, there continues to be a lot of mismanagement fiscally, and I think formalizing it under the GST would actually help a lot in formalizing the sector.
Ameera, I also want to follow up on, accreditation and formalizing the sector. You did make a point about that. What we wanted to understand a little better is what is NABL accreditation and how can that help in, in exactly that, formalizing the sector?
So you have about, and we all estimate this, we don't know for sure, but we think there are about 300,000 labs in the country. And of this, 99.9% are not accredited. There are only approximately, I think, 2,000-3,000 labs in the country which are accredited, and that is voluntary accreditation by NABL, right? And at the end of the day, as a patient, when you're going into a lab, your expectation is that the government is monitoring what's happening behind the scenes, and therefore I can trust this report. But that's not the current situation. And by putting some accreditation, a minimum standard, and NABL has come out now with even more minimum standards for smaller labs. We must make this mandatory, because otherwise we are breaking a patient's trust who actually believe that there is some governance happening behind the scenes, but today there is no such governance happening behind the scenes. Considering how important the health report is for a patient to make a decision for their treatment, putting that mandatory accreditation or minimum standard will really enable a consolidation of the sector, because those who are just not doing the test or not doing it properly, will either have to shape up or move out. And that will truly help in formalizing the sector from a trust perspective as well.
Just one last take, Ameera, and in terms of, it's I think out of budget kind of question, but in terms of the kind of demand that you're seeing, I'm just wondering if you're seeing any flagging in demand at any of your centers, since right now the conversation is about discretionary spends getting tightened, and of course basic tests, yes, but are you seeing any kind of squeeze on maybe some of the most detailed tests and diagnostics?
So actually the discretionary test, which is more around wellness, preventive healthcare, etc., we are not seeing any tightness there. Actually, we are continuing to see that grow well. What we did see was October, November, December is obviously always the worst quarter in the year for the industry, because it is a quarter full of festivals where people travel a lot, they're focused on family time, and really people are not thinking about health. So usually Q3 is always the worst quarter. There's nothing new about it. This year as well, it is the lowest quarter, like it is every year, and that was actually expected. In the entire year. So nothing new that we are really seeing. Also it depends company to company, right? I mean, for Metropolis, we largely deal with a lot of patients who are unwell and sick. And therefore for them, it's not discretionary at all. And it is a must do, and we deal with very critical illnesses. But for companies or firms which are dealing completely in preventive care, they might see a little bit more of a compression in growth.
All right, thank you so much for that, Ameera. Ameera Shah there on expectations from the budget, and this time round I think expectations are higher, with all eyes on what the finance minister announces to actually boost the Indian economy. Now, on the sidelines of Bharat Mobility Expo, my colleague Tushar caught up with Shenu Agarwal, MD and CEO at Ashok Leyland, talking about their new launch, Sathi. It's an entry-level light commercial vehicle, and the road ahead for the company is also what he spoke about. Listen in.
We have done several launches actually this year. but the spotlight is on this product here, which we are calling Sathi. For the last few years, we have been saying that we are considering entry into this entry-level light commercial vehicle segment, and this is our first offering. Now, when we looked at this market very carefully and talked to several customers, we realized two things. One is that we thought that most of the products that are in the market today have some kind of compromise built into them. And it is very natural because when you develop a product for an entry-level segment, price becomes very important, right? And therefore, in order to meet that target price, people tend to cut corners on the vehicle itself, right? So that was one insight that we got. The other insight was that all these vehicles, or most of them which are in the market today, were conceived about 2 decades ago. India 2 decades ago was very different than India of today, right? The customer is very different. The customer psyche is very different. So what we saw that these new customers who have come up in this segment now, they do not want any compromise in life, right? They actually want the best. They actually want better power, more torque, they want more comfort, they want more safety, they want more potential of earnings. They are willing to work hard, but they need a vehicle which can go along, along with their aspiration. So we thought, let us not copy the products that are in the market. Let us create a very different offering, and that is how Sathi was conceived. Now, if you look at power, we are twice the power of what is available today. If you look at torque, we are twice the torque what is available today. If you look at the loading area capacity, we are 25% more than what is available today. If you look at payload, we are better. If you look at cabin space, we are at least 20-25% better in cabin space. So we have looked at all these factors and said, can we create 20, 30, 40, 50% better on the key characteristics of the product?
Okay, next earnings in focus. ICICI Lombard company has reported a 68% jump in net profit while commission ratio saw a spike. We spoke to the management on their quarter. Listen in.
Let me just put this in context. So again, if you look at from an ICICI Lombard standpoint, what we have largely spoken about is to continue to drive profitable growth as a theme. And that is what we have kind of stayed on across various years of operations in terms of how we have run businesses at. So that's the same thing that's kind of helping us. So for example, if you look at a couple of years back, when the market was very, very aggressive, obviously we took a guarded / cautious approach to writing risks. And therefore, to that extent, I think we have been able to possibly see a downward slope in the overall combined ratios for ICICI Lombard. And in that context is how you should look at even the current quarter / 9-month numbers. So pretty much on track in terms of the thought process or the gliding path that we have spoken maybe almost about 4 years back in terms of where do we want to see the combined ratios for ICICI Lombard play out at. The factors, I think clearly it's a combination of, I would say 3 or 4 elements. So one, maybe let me start at the macro level, which is, I think the regulatory environment has been very, very enabling, and therefore to that extent, that aids the market at large, and of course for companies who are very, very careful in terms of how they want to kind of ride the risk set. So hence, I think we have had a favorable regulatory environment that's kind of aided us in terms of the outcomes that one has seen. But when you have to come to specifics, I think the combined ratio improvement, what you see in terms of the gliding numbers, has kind of come through our shared focus on continuing to drive profitable growth in terms of top line. And equally, I think we have taken a lot of initiatives in terms of claims management. And finally, I would say at the end of the day, what we keep looking for is to see how we can be far more efficient in terms of operations. And hence, a combination of all the 3 factors are where they are in terms of the outcome on combined. I think the only caveat that I would put is increasingly we are seeing for the industry a lot of catastrophic events. And that's very difficult to kind of predict. And therefore, to that extent, in terms of outcomes, I think at different quarters, depending on how these events play out, the combined ratio for the industry and even for ICICI Lombard could take shape appropriately.
Okay, so at this point, your combined ratio is at 102.7. Would that be only bettered going forward? Is that the outlook the way you see it?
So let me just again put this in context. I think the reported combined of 102.7 that you're referring to is, let's say, for quarter 3. Now, that obviously has got a slight nuance, a nuance in the context of, again, a regulatory change. So effectively, 1st October, all long-term products, as per the regulatory stipulations, have moved to recognition of revenue or premiums over the contract period. And similarly, whatever acquisition cost or cost of sourcing that companies incurred, they will also be allowed to be amortized over the contract period. Again, as I said, a favorable enabling regulatory environment change over a longer term perspective. So if I were to kind of, so the combined of 102.7 for this quarter 3 includes the effect of that particular change. If I were to take that effect and look at it on a business as usual basis, the combined ratio would have got reported at 102.3%. So it has had a 0.4% impact on the overall combined. But having said that, to your point on how do we see the road ahead, I think pretty much as I talked about, I think what we are seeing is clearly a declining combined ratio trajectory for ICICI Lombard. And going forward, if the industry kind of continues to respond favorably, while there have been, if you look at the half year, of course, that we have seen an adverse change in the overall combined for the market. But assuming the market remains sensible, I think definitely there is no reason why we should not be able to see an improvement in combined from the current numbers as well.
All right, and with that, we have a new debutant on the last street. Today is Laxmi Dental. We have Varsha, who's joining us to give us more details on the company. Varsha, good morning.
Good morning, Agam. Thank you for that. So, on the final day, the IPO was subscribed 114 times. Well, the total issue size stands at around 700 odd crore, out of which fresh issue stands at around 138 crore. Now, about the company, if you see, it's an integrated dental products company. The company operates a fully integrated model, meaning they handle the entire process from design and manufacturing to distribution of the dental products. The most important thing here is 35% come from export, with a primary focus on US and UK market. And the important thing in overall this industry is the 95 to 98% of the market is unorganized. Laxmi is one of the companies which comes into organized market. So a lot of opportunity stands out for the company. What they're going to use with the money is they're going to repay the certain outstanding borrowings of rupees 23 crore, and also followed by the repayment of their subsidiary company borrowings, and they're going to use 43 crore almost for the funding of the capex, and they're going to invest in capex of subsidiary, one of their subsidiary company of rupees 25 crore. And the most important thing here is that asset turnover stands at around 5 times. So huge potential when it comes to whatever they're going to invest, around 80-85 crores. The money that 138 crore that they're going to invest, you have an asset potential of almost 5x, which is a huge for Laxmi Dental. And lastly, if I were to talk about the competitors for the company, Polymedicure is a listed Indian competitor for this company. So good response when it comes to subscription data on the final day.
Okay, Varsha, thank you so much for joining us and taking us through these details. Of course, we're still, it's going to be about 2.5-3 minutes away before we actually see the listing of Laxmi Dental, and it does seem like it's going to be a strong listing given the kind of traction that we've seen in terms of its subscription. But before that, I'm also going to take a very quick look at how things are faring as far as markets are concerned. So, the Nifty 50 is flat at the moment, and we have not seen too much change there. What, however, we are seeing is the Bank Nifty, where there is, in fact, a little bit of an up move coming through, and in the benchmark indices, if we can pull up the heat map of the Nifty 50 to see how things are faring, well, the clear day, gainer of the day today is Kotak Mahindra Bank. That's where we are seeing a huge up move of around well over 9%. And I don't remember the last time we saw Kotak Mahindra Bank advance by over 9% in the, and I don't remember ever. And we also have a sharp up move on Wipro, which is up around 7.4%. And these are the two counters which are actually showing substantial gains on the back of earnings coming over the weekend. Besides that, we're seeing a little bit of weakness in Shriram Finance, and maybe IndusInd Bank along with Trent to a certain extent a little bit weak. But save for that, we don't have too much going on as far as the benchmark is concerned. If you consider the broader market indices and how things are panning out, well, it's a little bit more trickier there. Also, in terms of your advanced decline ratio, it's not a great picture, if you consider today's day of trade, because there are more declines as compared to advances at the moment. The mid-cap and the small-cap indices are currently, well, marginally in the red, so they are underperforming the benchmark indices, which would include the Nifty and the Bank Nifty. And again, it's going to be one of those days where it's going to be a wait and watch. We are looking at a very sharp bout of short covering for something like a Kalyan Jewellers, which is up as much as 8%. But if you consider something like a Netweb Technologies, it looks like a strong quarter, but it does seem like, as far as the nitty-gritty is concerned, well, investors have taken this opportunity to go ahead and sell into the stock, which is why it's down 9%. But I'm going to shift focus to Laxmi Dental, because we are going to have the listing in just a few seconds. As Varsha was mentioning, we've had a very, very strong subscription, and it does seem like we're set to see it list at a significant premium. And it's going to be a very interesting company too, because it actually exports about 35% of its business, and the balance 65% of course comes from domestic markets. And we should have the price for Laxmi Dental for you on screen in just a few moments from now on, because we've seen a listing, and there you have it. Not a surprise, a 25% premium to its issue price at 545. And in a tough market like this, you still do have about a 25% premium as far as this IPO is concerned. So there you have it. We're gonna continue to keep an eye on this, but on that note, we slip into a short break, and on the other side, we continue with all the market action. Back in just a minute.
I present the budget for a historic
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime.
back to India Market Open. It's time to look at Profit Deep Dive. And what we have on Profit Deep Dive today is putting the spotlight on Dollar Industries. The company has been underperforming the peers and trades at a near 52-week low. We have Hiral joining us to tell us all about this particular company. Hiral, over to you.
Thank you. Clearly, this has been an interesting aspect to pick up because, you know, as much as you would think that there has been underperformance with regards to the business, but if you compare it to peers, it's a very interesting story that we're picking up. First, let's quickly pull up the performance. The stock has been trading at a 52-week low. In the last 1 month, it has underperformed peers like a Page as well as Lux. Similarly, that's been the trend in the last 6 months as well. However, if you see on a YTD and a 1-yearly basis, it's not dollar, but it's usually been a Lux which is kind of underperformed on a YTD basis. So that's the overall picture that you're picking up so far with regards to where the stock performance goes. But moving from there on, what is happening? You have the retail investors which are stuck with a dollar versus Page Industries. If you see the retail participation, 24.83% of the company is held by public in terms of where dollar goes. Promoters are at around 72.21%. Whereas if you see the thing with Page and Lux, promoters are at 42%, Lux 74% with promoters. The free float with regards to Page is absolutely no. The problematic aspect is the FI and DII picture, where you have good amount of FIs, DIIs holding Page and Lux to an extent, but dollar is where the FIs and DIIs are missing. So absolutely a promoter-driven company. Moving on, it's absolutely lagging peers in terms of return ratios that have been low versus peers. Secondly, if you see the sales and the profit growth, that also has been lower as compared to peers. Thirdly, the inventory has been high for a dollar industries and their cash conversion cycle has been worsening. So basically what's happening is the raw materials that they're purchasing, that as compared to the sales that is happening against it, that is not matching. These are the major problematic areas. Now let's quickly look at the inconsistent sales growth, return on capital employed and the return on equity. If you see FY22, 29.47% was the growth in terms of sales. FY23, it's dipped to single digits. It's come back to double digits in FY24 to around 12.8. Absolute inconsistency there. Similar is the trend in terms of the ROCE as well as in terms of ROEs as well. So you are not seeing a particular trend that's emerging on these parameters. Moving from there on, if you see, let's look at the quarterly numbers. For dollar, the sales growth in the last quarter has been at around 8.3%. It's come down from a 21.17% in the second quarter of FY24. Whereas for Page as well, it was around negative 8%, but then it's gone down to around double digits in the second quarter of FY25. And if you talk about Lux as well, it's gone in single digits. So there has been a degrowth in terms of the sales growth. Moving from there on, if you see in terms of the profit number as well, 43.84% was in the second quarter. So FY24 was absolutely strong. Last 2 quarters, it's been in the range of 5 to 6% with regards to where dollar goes. Whereas for Page and Lux, it's been in more than double digits. Talking about the higher inventory and the cash conversion cycle. Their inventory levels from the fourth quarter of FY23 have moved from 352 odd crores to almost 533 odd crores in the second quarter of FY25. So last 4 quarters, you'll see that increasing trend coming in there. And similarly, if you see their cash conversion cycle, from 15.9 crores, it's gone to 16.3 crores. So there is that mismanagement happening in terms of where receivables are concerned, as well as if you talk about the inventory. Let's quickly look at the key concerns now. What the management is indicating is that the consumer demand has been slightly subdued. However, they tend to see an uptick in the second half. Whether that will happen or not is what we need to see. Secondly, the competition from the competition has been absolutely aggressive from peers. So that is what is impacting business. These guys are sitting on a market share of around 15% so far. The capturing of the retail space has been on a priority for them, but that is becoming a challenge so far. And to actually achieve that 11 to 12% growth guidance for FY25, the company will have to achieve 15% growth in the second half. So whether that is going to be feasible or not is the question. And very lastly, the contribution from Project Lakshya and e-commerce is what they are relying on to achieve this kind of growth. This is a project that they've recently started to capture more markets and higher retail touch points. But if they are not successful at this aspect, then that more than 15% growth in the second half is going to be a major challenge. So clearly, yes, there are concerns not only from a company perspective, but across the industry, there are challenges with regards to newer regional players coming in, as well as the consumer spends, which are on the lower side.
Thank you for that, Hiral. Dollar industry is losing grip. Why is the stock pricing reacting the way that it is? That's the deep dive for you. And now let's talk a bit about Telecom. Telecom in focus because of news reports that there will be some AGR relief. Vodafone stuck on that 10% circuit since this morning. Indus Towers also blooming, joining in. And let's just check a Tata Tele very quickly. 4.5% on, nearly 5% on an Indus Towers, and Tata Tele also zooming today in trade. Now, while there is no official confirmation of these claims, if there is some relief in AGR dues, what does it mean for the sector and for these stocks specifically? To speak on this, I'm welcoming on board Somit Sarkar. Somit, great to have you back in the newsroom and at NDTV Profit. So welcome on your first story that you're doing with us. And tell us what the news reports mean for the telecom sector.
Well, thank you, Tamanna. It's good to be on NDTV Profit. So firstly, if this news is implemented and if there is a waiver when it comes to the interest and the penalty amount, then it will be a big positive for Vodafone Idea. Now, why is this news important? Because a few days back, Supreme Court had dismissed the curative petition that was filed by Vodafone Idea and Bharti Airtel to review the AGR amount. Now, given the fact that this petition was dismissed, telecom companies had to start repaying this AGR due starting October 2025. And because of that, there could have been a significant hit on the cash flows for both the companies. Now, for Vodafone Idea specifically, if you see, they had to repay around 43,000 crore rupees annually starting from FY27 till FY31. Now, this amount is very high when compared to their annual net cash flow from operation that they generated in FY24, which stood at just 21,000 crore rupees. So it was quite impossible or a very tall task for Vodafone Idea to repay this amount from FY27. But given the fact that now this could be implemented going forward, and if it is implemented, then the debt burden of Vodafone Idea comes down by around 48 to 52,000 crore rupees, and the annual cash outflow reduces by nearly 12 to 13,000 crore rupees. Now, this is also more important for Vodafone Idea because if this move is implemented, then this helps the company to secure more bank debt going forward, which will be used by the company for their capital expenditure, which is a must for the company to gain more subscribers in the market. And as per analysts, this debt reduction could add nearly 6 to 7.5 rupees on the equity value, which is a per share value that I'm talking about, as compared to the market price that is currently there of 10 rupees per share. Now, for Indus Towers, they are not a direct beneficiary of this move, but given the fact that Vodafone Idea spending capability increases, which indirectly improves the revenue visibility for Indus Towers from Vodafone Idea, and also given the fact that Vodafone Idea has significant dues repayable to Indus Towers, the recoverability of that also improves. Around 5 to 6,000 crore rupees is still pending to Indus Towers from Vodafone Idea. And lastly, when it comes to Bharti Airtel, this waiver could bring down their debt burden by around 33 to 38,000 crore rupees. And if this move is implemented, then the AGR dues for Bharti Airtel would be zero, given the fact that they have already done some prepayment of AGR dues. And post this, the revised debt of Bharti Airtel would stand at close to 1,08,000 crore rupees, which will be the lowest among all the telecom companies. And as per analysts, this debt reduction could add nearly 55 to 60 rupees to the equity value of Bharti Airtel as compared to the current market price of close to 1,600 rupees. So close to 4% upside is what the street analysts are expecting if this move is implemented.
If the move is implemented is the big question, then it also, the question is to what extent does that really help the financials of, say, a Vodafone more than anything else? Well, for today, the stock is up 10%. But let's get to our broader conversation in Talking Point. Today, we're speaking with Harish Krishnan, co-CIO and head equity at AB Sun Life AMC. Harish, great to speak with you as always right here on NDTV Profit. And we're speaking with you on an interesting day. I mean, Just about 10 sessions to go for the budget. The Trump inauguration is the big focal point. Do you think that we're going to be seeing a bit of guarded trade and maybe instability till things get clearer?
Sure. I think the first 2-3 months is going to be that of what President Trump tweets and how he's reacting, because he's given many contradictory statements in his rhetoric to the elections, to make America great again. Then, of course, there are sanctions on Russia. There is also a talk or a thought process of imposing tariffs. They want lower interest rates. They want a lower currency. So, therefore, there are these contradictory, actions that have won in the election. I think in the next 2-3 months, we'll get to see the axis in which his policy making will take a direction towards. And so our view is that, in the first term of Mr. Trump from 2016, markets took about 2 years to kind of figure out his various policies. In this tenure, we think that the market will kind of figure out in about 6 months or so. And therefore, we think that, this phase of volatility that is getting accompanied by what's happening on the global macro front is something that, we should be looking towards and increasing our allocations and increasing our allocations to various sectors and to equities amidst this volatility that is likely to be there for the course of this quarter at least.
I'm just wondering, Harish, how are you looking at Q3 thus far? You can argue that maybe not enough is there, but fair number of large companies have reported. So far, looking slightly better than Q2 or set for another disappointing quarter?
We do think that, earnings support for the markets is quite limited. We started the year of FY25 with a 16-17% kind of an earnings print, and more likely that we'll close the year with, say, close to about a 10% earnings print. So there has been a series of downgrades. Will we continue to see a downgrade cycle into Q3? Possibly the pace of downgrades, I think, is kind of reducing, but we would still see a reasonably marked deceleration in growth compared to what we had seen in FY24. In Q3 so far, of course, the IT sector and the banking sector, at least the few results that have come through, have been quite okay. But I think the bigger call is that of consumption, which has been on the weak footing. And over there, high frequency indicators like the GST collections don't necessarily give a very inspiring set of numbers that should come through from the consumption side. So I would think that, even over the course of the next 2 quarters, we would see some amount of moderate earnings. Again, how much of it is in the price is the bigger question, because we've seen a reasonable amount of correction across the board. The median stock in the NSE 500 has fallen by about 25% and more. So there is a certain amount of reset in these expectations that have already been kind of built through. But I still think that, earnings for Q3 and possibly even Q4 are going to be a bit more softer than what expectations are currently today at.
Keeping that in mind, how are you looking at valuations, especially from the broader markets, the mid-cap and the small-cap indices, which, while they have corrected, they have not seen as deep a gash as what one might expect at this point in time. And yet stocks and constituents of these indices still have, as you mentioned, seen very, very sharp corrections.
That's right. So I think it's been heavyweights, doing their work, due to which the indices have fallen a lot lesser. The second is, of course, there's been continual liquidity, both from pooled vehicles like mutual funds, but more importantly, in terms of retail participation into direct equities. We've seen a big shift in a post-COVID world wherein retail investors have lapped onto equities, and from data that's been released by the exchanges, we've seen a massive shift downward in terms of the stocks that they've gone towards, more in terms of say micro caps, nano caps, and even SME. So possibly that amount of liquidity support is what is kind of holding on as far as these segments are concerned. But when we look from an earnings standpoint, we actually have seen from a 3-year earnings CAGR, actually large caps now having a better deliverance of earnings compared to mid and small cap from a 3 years CAGR point of view. And given our outlook that the next 12 months is also likely to be a bit on the softer side, we don't see a significant support of earnings on the broader markets as well. More specifically, small caps, micro caps typically tend to do a lot better when the economy is on upswing, given the significant lower margin structures that they typically operate on, and therefore every incremental top line growth generally flows through to the bottom line a lot more. So therefore, we think that despite that liquidity support that's currently there, especially from retail investors, our portfolios are more geared towards the larger companies at this point of time, which are leaders in their respective sectors.
All right, Harish, a question then in terms of your constituting your portfolios at the moment. How are you going about weighing, firstly, large caps, mid caps, and small caps at the moment, especially when it comes to your flexi cap portfolios? And going ahead, do you think that there could be more weightage given to large caps given the current circumstances at the moment?
We've been geared towards large caps, over the course of the last year or so. We are almost 77% in large caps, with the rest in mid and small caps in the flexi cap fund. I do think that, over the course of the next 2, 3, 4 months, in this phase of intermittent volatility driven more by global factors, we will actually be increasing the risk. So we would be counter-cyclical. I think there are many companies that have corrected quite significantly, and we do think that this opportunity which will present itself, we would actually be slightly increasing our exposure towards the breadth of the market. So that's how our positioning from a market cap perspective is in some of our key funds.
All right. Also, in terms of the way we're playing out sectors, and what are your expectations with respect to slightly better prospects in terms of earnings? Or does it come down to not just sectors, but does it come down to stocks now? And will it be a little bit more of a bottom-up approach from here on?
So we think that this year is more likely to be a case of macro than micro. What do I mean by that is that in 23 and 24, we did see, greater reward for stock picking. This time around, especially given the fact that the first half is going to be marred by what Mr. Trump tweets and the global macro developments. And at the second half, we do think that, we're going to likely see a shift in terms of policy making, both from the monetary side, where we've seen a change in the governor, as well as in terms of potentially a greater support from the government in the run-up to the UP elections, which is likely in the next year. I think that, in the second half is where we're going to see a greater focus on earnings and micro stories out there. From a sectoral point of view, the way we look at it is that there are 3 sectors which we term as dark horse sectors, where near-term earnings isn't in the best of shape. Starting out from this list is private banks. We've been underweight the space for almost now 18 to 24 months. When everything was going good for the private banks, they had very good credit growth, they had very strong NIMs and very low credit cost. And yet these stocks got derated primarily because we think that these were supernormal earnings, as these banks gave out a 30-40% earnings growth. Now, as earnings is moderating, I think that the multiples is is likely to go up over the course of the next 18-24 months. So private banks, from being underweight, we have now started being a lot more constructive on private banks. The other two sectors which are dark horses at this point of time is metals, wherein if you were to look at the profit pool share of metals, you have to go back all the way to 2001 to arrive at today's profit pool share of metals in the top 1,000 companies' profits. We think that the infrastructure push and the investment push by the government will also influence demand of metal companies. Of course, metals are global cyclicals. In an environment where both US and China are likely stimulating their economies, and in an environment with a depreciating currency bias, I think metals can potentially be a dark horse where there is very little ownership. The third space where we think that there can be a potential kind of a dark horse space could be that of cement. Again, margins have come off very, very sharply. We do think that the overall investment cycle continues to be on an upward trajectory, even as consumption is taking a slightly back seat. And therefore, we think that cement could be under space, and we are moving money from real estate into cement, both of them having reasonably similar drivers. In sectors where there is an earnings momentum at this point of time, and where we continue to have a constructive view, those would include sectors like consumer durables, IT, pharma, and to a certain extent auto ancillaries and transmission and distribution in the capital goods space.
So IT, you're constructive largely, Harish, with the kind of, I think, pendulum swings of results that we've seen in the major pack?
Right. Do think that AI can be a big opportunity for Indian IT services as it gets mainstreamed with agentic AI, and Indian IT is quite capable of addressing to that opportunity. More importantly, our thesis rests on the fact that, compared to pre-COVID, we've seen a significant amount of offshoring which has gone up significantly for these Indian IT services. Yet margins are significantly lower than what it was pre-COVID, primarily because of the significant investments that they have done in hiring people when the demand swung very significantly in 2020 and 2021. And these high cost resources are now getting kind of rationalized over a period of time. And therefore, we do think that margins can potentially move up, along with the potential strength in the US economy. We think that, and with agentic AI, we do think that the overall prospects of the Indian IT continue to remain reasonably favorable. We've been positive on IT for now 18 months, and we continue to have that stance going forward as well.
Okay, well, we'll leave it at that. Thank you so much for joining us here on NDTV Profit. We wish you the best. And with that, it's a wrap on India Markets Open. But don't go anywhere. Ask Profit is up next. Stay tuned in.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue, steps to promote initiatives across the value chain, that is to promote
Hi, good morning. Thanks so much for tuning in. This is Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. Mahima, morning.
Morning, Alex.
And happy Monday to you.
Happy Monday to you.
All right,
as well.
let's take a look at how markets are right now, and it's wait and watch mode, if anything, with the Indian equity markets, like it is the case for a lot of global markets as well, because the big event to watch later today is the inauguration, if you can call it that, or the onset, if you can call it that, of the Trump presidency. The 47th president of the United States will be taking charge of the White House and indeed of the United States of America. And a lot of people wondering what is in store for not just the people in the United States, but also the rest of the world, particularly because a lot of comments have been made about what could come to pass in the first week. He's promised just yesterday thousands of his supporters that he would, as soon as he takes charge, announce measures to curb immigration. Now, there are no clear ideas as to what could come to pass in the first few hours. So therefore, understandably, there's a little bit of wait and watch playing out. Let's take a look at the equity markets, in fact, and you have gains of about 0.2% for the benchmark indices, and the broader markets at this juncture are sanguine, but then it's a lot of chop and churn. Mid-cap index down or more or less flat right now. You have the small cap index up about 0.1% or so, and really the moves are with individual names and quite a few of them reacting to results as well. Wipro, let's pull that up and see where it's currently trading. It reacted to a positive set of numbers and it was trading higher. It continues to trade higher by about 7% or so. Tech Mahindra, the jury was out earlier today. Some people going out and saying that it was positive. Others were saying that the headline numbers were negative. Brokerage is basically talking about the outlook for 2025 being better than 2024 and seeing positive cues from the deal wins that came through, 23% odd higher than the previous quarter, and so that's looked at as a positive. ICICI Lombard was the other that stood out to me. What stands out to you?
Right, I think Kotak Mahindra Bank is also something, on the back of Q3 earnings, excellent results. The stock is up 8.9%. In terms of advances, they grew by 15%. Deposits grew by around 15%. Their, net interest margins have improved to 4.93, and CASA ratio is at around 42.3. So a good set of numbers. The stock is up 8.9. Let's also pull up Kalyan Jewellers, because Motilal Oswal has come out with a clarification, with respect to the speculation that was going around. And because of the clarification, we see the stock, tanking around almost over 30% in the past 1 week, but the stock is up 7%. It did touch an intraday high of almost over 9%, but right now it's up around 7%. Let's also pull up RBL Bank. Weak set of numbers there. In terms of the gross NPA, it stood at 2.92%. Net profit was down 86% for the counter. It did see a slight, negative opening, but I think it's come off from its day's lows and down around 0.5%. So these are some of the counters, on the back of, Q3 earnings and of course certain significant updates.
RBL actually recovering quite a bit from the low point of the day. Dow was down about 4.5% at the start, and the entire lenders in the microfinance pack you should watch out for on the back of that, because they had to make special provisions in the quarter gone by, credit costs as a result of which went up quite substantially in the quarter gone by. Let's get on our experts for the day. We've got Brijesh Iyer joining in, and we've also got Saurabh Jain of SMC Global. Gentlemen, thanks as always for taking the time, and good morning to you. I believe we've got our first caller for the day. Ankit is calling us from Ahmedabad. Ankit, good morning, and thanks so much for calling us. Are you looking forward to the Coldplay concert?
No. Actually, I am on the road.
Okay.
Going to the office right now.
Okay. All right. So, what do you want to know about?
I want to know about Bank of Maharashtra. I am looking to invest in Bank of Maharashtra. So, I wanted to know that what is the exact, what are the levels in which I should enter?
Okay. And what is the time frame that you have in mind, Ankit?
For long term, I guess 2 to 3 years.
2 to 3 years. So on the fundamentals, based on that, you want to decide whether to buy. Saurabh, a lot can happen over the next week, and some people looking for triggers from the budget recapitalization of banks, if at all. But Bank of Maharashtra, what do you make of the fundamentals?
Hi, good morning, Alex. Thank you for having me on the show. See, it is one of the best balance sheet among all the PSU banks. With the net NPA at 0.2, the bank enjoys good net interest margin. In this quarter also, the bank has reported more than 35% kind of a growth in their profitability, and quite confident of doing even better than in the last quarter of the financial year. So for the next 2-3 years, I think it is a good choice. Trading at a normal valuation of trading at around 8 times to trailing profit, trailing earnings, and about 1.7 times to book value. It seems to be a good bet for next 2-3 years. So my take would be go ahead.
Go ahead is the view coming in on Bank of Maharashtra. And moving on to the next banking counter, Utkarsh from Varanasi has bought 100 shares of ICICI Bank at 1226, and he wants a perspective from a short-term trading view, and he wants to know whether he should hold or sell considering the current levels. Brijesh, I'll come to you on this one. ICICI Bank is the counter. How does it fare on charts?
Hi, morning.
Morning.
So, yeah, specifically ICICI Bank, I think there has been a correction, and from the technical point of view, we are now coming closer to 200-day moving average. The value of the 200-day moving average, 1,211. So we'll net off it to 1,200. So my understanding is that since the market has fallen a lot, and then we are in the oversold zone, and even the ICICI Bank is in the oversold zone, one should hold the long positions. Some pullbacks can be expected. 1260 to 1280 can be the pullback zone in the coming trading session. So I would hold my long positions, and I'll keep 1200 as a stop loss.
Kalyan Jewellers, there's a lot that is going on social media about this, and this relates to Motilal Oswal's acquisition and the quantum that it held in Kalyan Jewellers. Of course, the stock price, let's pull up the slightly longer term charts, and you have had, this is 1 week, but let's pull up the 1 month or in fact even 3-month charts just to give you an idea of how quickly the stock came off. 1 month it's down about 25% or so. It is up about 7% in trade today. The question from Rajesh in Kerala is that he's bought at levels of, is that right, 700? Yeah, so he's bought at very significant elevated levels, and he's wondering whether it can be held for the long term. He defines that as 3 years. Saurabh, on the fundamentals, the concern was always about valuations, because even last week when I looked at the price to earnings multiple, and I'm talking about trailing, it was very close to Titans. And so how do you justify that? Would you say that it's still a hold for 3 years?
I mean, clearly, Alex, the valuations at which the stock is trading it is discounting the growth that the company is going to witness in the next maybe 2-3 years. Even after the correction, the stock is trading close to 100 times to its trailing earnings and approximately 12 times to book value. While on the operational front, the existing stores are growing at a rate of 20%. With the addition, the company has posted growth of more than 30%. And the management is quite confident of posting similar kind of a growth in the ensuing quarters also. So in my opinion, he is bought at a higher level. I mean, at a very, very high valuation. So I think since the company is good and the business operations are good, he can hold for the next 2-3 years to get his price. So I will not suggest to average it out, but at the same time, you can hold on to it.
Hold is the view coming in on Kalyan Jewellers. Moving on to the next caller. Sheshu from Hyderabad is calling in. A very good morning to you, Sheshu. How can we help you?
Yeah, good morning too. Thanks for connecting. Thanks for, I think, I just want to check with you, like I'm just holding for BDL for long term. It's almost from last 5 months, I'm holding it. Actually, I took for long term.
Okay.
So it's around 14-20 quantity and 13-16 price actually.
Okay.
So how good actually for long term, like more than 2 years or 3 years, maybe if I'm okay. So that's what I'm just thinking. Is there any advice from your side?
Got it. Sheshu, I just wanted to know as to what was your thinking behind buying, Bharat Dynamics?
No, actually, it's mostly like it's a BJP government, definitely. Like there are, like recently also we have seen some up also. Like that is the reason we decided to buy this stock actually. And also recently, like there is a one offer came, right? Like there is a, I think some 2,000 crores, some project also came to Bharat Dynamics also. So that is actually I'm looking for long term only. So still I can hold for more than 3-4 years.
Got it.
So I just want to know.
All right, Saurabh, I'll come to you. Bharat Dynamics and the likes of Bharat Dynamics. What is your view on the entire space?
See, the space is quite interesting, and it holds up a good potential for the next 3-5 years. And the government focus is clearly on the defense side, and budget is also around the corner. So maybe we'll see some kind of activity during the budget, after the budget announcements also. But having said that, I think again it is a case of higher valuation. I think in the last 2-3 years, PSU stocks got re-rated very, at a higher scale. I mean, they got re-rated at a massive pace haven't seen in the past. Same is the case of with the Bharat Dynamics trading at 13 times to book value. The PEs are also on the higher side, and we are yet to see the order book conversion coming into the revenue. So while the government focus is there, but at the same time, I think the valuations are dearer. So in my opinion, I think it is best to take some profits around the budget when the stock is likely to move upwards, and then wait for the market's correction to buy the stock in a staggered manner for the next 3-5 years.
Okay, Brijesh, I'm coming to you on the next question. This is a question from Vaishak, and asking about TCS. It's a stock from a pack that is in focus and has been over the last week or so on account of earnings. He's bought at levels of 4,275 and he's incurring a loss right now, but he says that he can hold for a year. What are the prospects on the charts for 1 year?
Yeah, so maybe from the year perspective, yes, we can hold. But then on an immediate basis, I think there would be some like whatever the move we were expecting in the IT space and specifically TCS, it has been done. And more or less, it has a potential to break 4,000 mark. So on a short-term basis, some profit booking or maybe some distribution will be there. But then from the year perspective, we need to understand from where, how long this stock would sustain, like what kind would be the lower side demand zone. Maybe once 4,000 mark is broken, 3,800, 3,700 would be the likely downside. So once we see those level, and then we need to understand what kind of upside will be there. But hold can be the view, and whatever the recent high 4,400, so stock can go back to 4,400 levels. So maybe when it comes to 3,800, 3,700, one should look to add or maybe some averaging the long positions.
All right, so that's the view on Tata Consultancy Services. I believe we've got our next caller. Viru is calling us from Hyderabad. Viru, hi, good morning. How can we help you today?
Good morning, sir.
Good morning. Please go ahead.
I'm Viru from Hyderabad calling.
Got it, Viru. Please go ahead.
I want to know the right time. Is it right time to enter into Venus pipes?
Okay.
At this price, because for a long time horizon of 2 years.
2 years. Okay. So, what do you like about Venus pipes, Viru?
Yeah. I'm expecting in next 1 to 2 years there will be a good future for nuclear industries and chemical and power industries. Venus pipes is a manufacturer of seamless and welded pipes.
Okay.
Which will have bright future and with these industries like that.
Okay, so industrial applications of stainless steel pipes is what you anticipate. Let's find out if Saurabh is of the same opinion. Venus Pipes has come off, Saurabh, from the relatively higher valuations that you saw a while back. From what I can see, it's currently trading at just under 6 times price to book at 1,417. 200-day moving average is 1,800 plus. Would you say that it's buy at this point for the next 2 years?
I think yes. I mean, he has done his homework correctly. It certainly makes sense that the company is likely to do well in the next 2-3 years because of the expansion which will be seen in the manufacturing sectors, and because it is the ancillary provider. I mean, kind of ancillary company providing its products to the in various manufacturing units. So the froth in the valuations have subsided. It is clearly seen that the stock has corrected a lot, and now the valuations are on the lower side also, and the company is posting good set of numbers also. If you look at the September quarter earnings, the company has posted approximately 25-30% kind of a growth year on year, while sequentially there was a degrowth. So I think the business performance is quite good. The valuations have subsided. So it makes a sense to, buy stocks in a staggered manner. I would say I would say buy in tranches in during market corrections.
That's the view coming in on Venus Pipes. Moving on to the next query, Yash has a query on Lux Industries. He's holding 30 shares. And he's bought it, he's saying that he's bought this almost 3.5 years ago at the levels of 3,300. So he's sitting on a loss of almost 44,000 rupees because currently the stock is trading at 1820 levels. He wants to know whether it's worth holding this or should I switch to some other stock because this is not performing since quite some time now. Saurabh, I'll come to you on this one because he's been holding this for 3.5 years. Do you see that fundamentally the company is going to change in the coming years? We are seeing that the retail is now picking up, and since this, is a part of, the sub-premium segment when it comes to innerwear, do you think that we'll see a demand uptick and henceforth change in terms of its revenues and bottom line?
Yeah, I mean, certainly the textile sector is looking up to me. I mean, on the business metrics also, the Lux is doing only well. The valuations have subsided, clearly trading at 3 times to book value, and PE has also settled. The things are looking up for the sector as well as for the company. So, in my opinion, he can still hold those stock.
Okay, still hold the stock is the view coming in on Lux Industries. Moving on to the next caller, Gautam from Vizag is calling in. Gautam, a very good morning to you. How can we help you?
Yeah, very good morning, ma'am. My question is, I have purchased Cochin Shipyard shares,
okay.
Total 174 shares.
Okay.
and the average price is 1738.14.
Okay. What do you want to know, Gautam? Yeah.
Yeah, I want to hold this share for another 14 to 16 months.
Okay.
So is it a right decision, or should I exit? Could you
Okay.
please tell me?
Do you want to, have a fundamental view on this? Did you, buy the stock seeing the charts, or did you see the fundamentals of the company?
Yeah, by charts only.
By charts only. Okay. So then we'll get you a technical view on this one. Brijesh, I'll come to you. 14 to 16 months is the time horizon. How does it look on charts?
Specifically, there are most of the defense stocks they were correcting, and lately they have taken support, and maybe has ahead of the budget there is some bounce expected. So the value of this 200-day moving average is 1750. So I think that bounce is there in the on the Cochin shipyard. So somebody can take fresh positions and play for the 200 points move. So 1750 to 1800 can be possible in the next couple of months. So view would be positive, and on the immediate basis, the recent low was 1360. So somewhere below 1360, that one should keep the stop loss.
All right. That's the view on Cochin Shipyard. Stop loss has also been given, so make sure you pay attention to that. The next question is from Subhashish, who's writing about Fortis Healthcare. He's got 6 shares that he's bought at levels of 709, and the stock is currently trading just below 650. So he's lost a little bit of ground. He's wondering whether the long-term prospects for this stock are good. So from the fundamental, Saurabh, would you keep hold of this? Would you buy something else in the hospital space? What about an Apollo Hospitals or something else, one of the smaller specialty hospitals?
Well, the sector is looking good. I mean, in the industry, we are seeing continuously that they are keep on adding beds, and the utilization rates are also going up. I mean, their per bed profits are also going up. So, but on the valuation sides, all the hospital stocks are on the expensive side, be it Apollo or Fortis. So, I think the space is good. He can stick with it.
It is the view on Fortis. Abhirami is calling us from Chennai. Morning, Abhirami, and morning again, and thanks so much for calling. How can we help you?
Sir, I want buy right this time for BEL.
Okay, and what's your time frame? I'm guessing it's a few months, right?
Yes, sir.
How many months?
Sir, because I get the news for NDTV budget investment sector.
Right.
Ad will be BEL defense sector. I bought this stock.
Yes.
That's only I want to buy this stock for this.
Okay. So is it 2 months, 3 months? Is that the view you're seeking?
6 months. 6 months, sir.
Okay, 6 months. Brijesh, on the charts then, BEL currently trading with gains of about 1% at 285. Would you buy?
I think it is one of the counter which we are also recommending to our clients. And the recent low, it has already taken a support. So I would be betting for 315, 320 on the higher side. That would be the immediate upside. So definitely it's an opportunity to play this move. So 315, 320 would be the next level to watch on.
All right, so that's the view coming in on BEL. Just quickly, a quick mention on Globus Spirits. The stock is up almost 14% right now. Consumer Affairs Ministry has notified reduction in price for rice for supply of, ethanol distilleries. And price for rice reduction is to 22.5 kgs from 28 kg. Now, this is the only distillery which uses a lot of rice for their ethanol production, which is why, since the raw material prices will go down, their overall margins will go up and their bottom line will get boosted, which is why we're seeing a significant uptick in Globus Spirits as we speak. Moving on to the next query, Sunil from Haryana is calling in. Sunil, a very good morning to you. कैसे मदद करें आपकी?
नमस्कार मैम.
नमस्कार.
एलेक्स जी को नमस्कार.
नमस्कार सुनील.
मैम मेरा क्वेश्चन ट्रेंड पे था. मैंने आफ्टर कोविड 900 शेयर लिए थे. सॉरी 120 शेयर लिए थे 950 पे. सॉरी.
ठीक है.
तो उसमें मैम काफी अप्रिशिएट होने के बाद अभी ये डाउनफॉल पे चल रहा है. 8000 से वापस 6000 पे आ गया है.
करेक्ट,
क्योंकि आई थिंक इसकी ग्रोथ काफी पहले 55-56% होती थी, अभी 39% हो रह गई है।
करेक्ट।
आई वांट टू नो कि लॉन्ग टर्म इसका फंडामेंटल व्यू और इसको मतलब ग्रोथ वैल्यूएशंस का क्या हिसाब रहेगा अभी
जी।
फ्यूचर के हिसाब से?
सुनील, पहले तो आई थिंक आपने बहुत करेक्ट लेवल्स पे स्टॉक को बाय किया है। आप 6 लाख के ऊपर के प्रॉफिट पे बैठे हैं, तो पहले तो कॉन्ग्रेचुलेशंस फॉर दैट। मैं आई विल गेट योर फंडामेंटल व्यू ऑन दिस। सौरभ, आई विल कम टू यू। Trent is one of those counters जहाँ पे there was no stopping at one point of time, but Q2 numbers आने के बाद it did take a hit. How are you expecting Q3 and should he keep holding it at this level or should he book partial profits?
देखिए, मुझे लगता है सुनील जी, आपने एक बहुत ही अच्छे स्टॉक का चयन किया और आप उसके साथ बैठे रहे, अच्छा प्रॉफिट्स भी आपको आ रहे हैं। आपने एक बात बहुत ठीक बोली, जो ग्रोथ थी कंपनी में जो देखी जा रही थी वो अभी टेपर ऑफ हो रही है, इसीलिए स्टॉक प्राइस भी टेपर ऑफ हो रहा है। अगर वैल्यूएशन की बात करें तो यहाँ पर स्टॉक तकरीबन 45 गुना बुक वैल्यू पे ट्रेड कर रहा है और इस स्पेस में कंपटीशन भी काफी इंटेंसिटी से बढ़ रहा है। नो डाउट कि ज़ूडियो एडिशन काफी अच्छा कर रहा है कंपनी के लिए, स्टोर एडिशन हो रहे हैं और ग्रोथ भी हो रहा है, बट इट इज अ लोअर मार्जिन बिजनेस। और भी कंपनी के कई सेगमेंट्स है जहां पर अच्छा ग्रोथ देखने को मिल रहा है। कंपनी अच्छी है, ग्रोथ भी अच्छा आने की उम्मीद है, लेकिन जो ग्रोथ है वो टेपर होने की वजह से वैल्यू स्टॉक प्राइस नीचे की तरफ और भी आ सकता है। मेरी सलाह ये रहेगी कि आप यहाँ पर अपना मुनाफा जरूर बांध दीजिए, क्योंकि वैल्यूएशन अभी भी जरूरत से ज्यादा दिखते हैं।
आपसे पूरा मुनाफा बांधना चाहिए या थोड़ा सा होल्ड करना चाहिए? कॉस्ट प्राइस रिकवर करके फिर होल्ड करना चाहिए?
एलेक्स जी, मुझे लगता है कि 5 गुना 6 गुना इनके पैसे हो गए हैं। मुझे लगता है कि एक ठीक ठाक एक अच्छी कंपनी है, लेकिन प्राइस अच्छा नहीं है, तो अगर ये पूरा मुनाफा भी बांधना चाहे तो मेरी समझ से बांध सकते हैं।
और अगर ये पूरा मुनाफा बांध लें तो डिप्लॉय कहाँ पे करना चाहिए इस मार्केट में?
देखिए, डिप्लॉय करने के लिए मुझे 3-4 क्षेत्र अच्छे लगते हैं। कैपिटल गुड्स अच्छा लगता है, आपका एनर्जी सेक्टर काफी अच्छा लगता है और एक बैंकिंग क्षेत्र काफी अच्छा लगता है। एनर्जी क्षेत्र में मैं कहूंगा कि जैसे कि ग्रीन एनर्जी वाली कंपनियां, सोलर एनर्जी वाली कंपनियों में ये पैसे डाल सकते हैं, हाइड्रो पावर में डाल सकते हैं, जैसे कि SJVN हो गया, NTPC हो गया, जहां पर NTPC अब हाइड्रोजन में भी कारोबार कर रहा है। बैंकिंग क्षेत्र में मुझे लगता है कि जो बड़े बैंक हैं प्राइवेट क्षेत्र में, ICICI जैसे, या फिर अभी हमने छोटे बैंक की एक अपने शो में ही बात करी, बैंक ऑफ महाराष्ट्र या मे बी कैनरा बैंक जैसे, उनमें पैसे डाल सकते हैं। और कैपिटल गुड क्षेत्र में मैं समझता हूँ लार्सन टुब्रो जैसी कंपनी में पैसे को डाल सकते हैं। तो इससे ही अगले 3-5 साल के लिए सालाना 15-20% का CAGR आराम से एक्सपेक्ट कर सकते हैं।
ओके, थैंक यू फॉर दैट व्यू। जस्ट अ क्विक रिमाइंडर, वी कैन स्पीक टू यू इन इंग्लिश। हम आपके साथ हिंदी में भी बात कर सकते हैं और मराठीत पण आम्ही संपर्क करू शकता, तर आम्हाला प्लीज कॉल करा. प्लीज कॉल अस ऑन द नंबर दैट यू सी ऑन द स्क्रीन. इन द मीनवाइल, लेट मी टेक अ very quick question on Lloyds Metal. It is currently trading. Let's pull that up and see where it's currently trading. The stock has been bought by Abhineet at 1,100 rupees. He's in the green right now. He's wondering whether to hold for 2 years. Saurabh, on the fundamentals, would you hold on?
Alex won't be able to comment on this. It's not in coverage.
Okay. Let me then take a very quick view on the technicals. What's the view, Brijesh, on Lloyds Metal?
I think the stock is performing. Lately, the stock has seen a good rise. So I think that structurally, the higher term, higher bottom structure is quite positive. So we can expect this to go 1,500, 1,550 on the near term basis. So there is no reversal. So I would like to hold the counter.
Hold, all right. So it's a hold on Lloyds Metal. Hope that answers your question, Abhineet. We have to slip into a very quick break, but on the other side, we'll take more of your questions, and also Laxmi Dental Management is going to be speaking to us. Remember, it's a listing that we have to talk about today, so do stay tuned.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the Finance Minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. You're watching Ask Profit, and this is the show that gets you answers to all of your stock-related questions. As things stand, you have the markets that are trading at very close to the high point of the day for the benchmark indices, and it's a very tight range, about 1/3% higher for the Nifty 50. The broader markets are currently in the green, 0.1% for the mid-cap index and about 0.2% or so for the small cap index. So right now gains, small gains at that, but still wait and watch mode. The first question that we will take on this side, and by the way, Brijesh L had to leave us. Thank you so much, Brijesh, for joining in. And we're joined right now by Ajit Mishra, who will take all of your technical questions. Ajit, welcome to the show. The first question I will take is on Sterling and Wilson Solar. And it's a stock that has been beaten down quite drastically in the recent past. Even on Friday, it was down by 10%. Chandi from Cochin has got the question. He's bought at levels of 577. So elevated level. Stock is down a further 5% today. Rajesh, anything that you can say on the fundamentals? Saurabh, anything that you can say on the fundamentals?
Yeah, I think it is the higher valuation which is keeping, which is putting pressure on the stock. I mean, the stock was pricing its future revenue growth visibility. Still, after coming after reaction also, it is trading at approximately 10 times to book value, which is way higher than its peer group. So in my sense, it can further come down.
All right, that's the view coming in on Sterling and Wilson. Moving on to the next caller, Ranga from Bengaluru is calling in. Ranga, very good morning to you. How can we help you?
Sir, good morning. Good morning.
Yeah, good morning. Go ahead with your query.
Sir, I bought Motilal Oswal 400 shares
Okay.
at 958.
Okay.
Hold or sell?
Okay.
Short term.
Sorry? Short-term view. Okay. All right. So you want a technical view on this. Ajit, I'll come to you. Motilal Oswal is the counter. How is it faring on charts?
So, Mahima, we are seeing, profit taking because the level he bought it is almost at the record highs. The stock was trading in a consolidation range for almost like 2-3 months in the recent past. And post breakdown, we are seeing gradual drift, and indications are in the favor that we might first test 750 area before making any meaningful recovery. So as of now, he should maintain a stop at 750 if he wish to hold, or exit at least partial position at current levels and maintain a remaining position with the stop loss with 750. In case of bounce, the first zone would be around 860 to 900. Once we cross that barrier, then again the stock might inch toward 1000. So it's a short-term basically correction which might continue at least for next 2-3 weeks. So if you are okay with a 1 month of time horizon, you can continue to stay put.
I'm guessing you're going to have a similar view, Ajit, on the next stock, SJVN. It's a stock that Akash has bought at levels of 104, and the stock is currently trading very close to that point, but it has lost ground in the recent past. What are the prospects for the short term?
So Alex, last week we witnessed that some of these stocks from the PSU basket in run-up to the budget, they have started seeing some traction. And SJVN also, after this decent correction from its record high, we are seeing that the stock has been witnessing a rebound, but we are still below its short-term averages. So there could be a hurdle around 100 to 103 area, which is very close to his buying price. Once we cross that barrier, then the stock may witness fresh momentum towards 110, 115. So as of now, my view is to stay put with 95 as a stop loss. And once we break that barrier of 102, he can trail stop loss to 98 and wait for 110 and 115 as a positional target.
All right, so that's the view on SJVN. We've got a caller. Suresh is calling us from Andhra Pradesh. Suresh, thanks so much for calling. How can we help you today?
Thank you, sir. Very good morning, sir.
Good morning. Please go ahead.
Actually, I bought Shakti Pump shares at 3 intervals at an average cost of 1067, 1067 rupees.
Okay.
And total number of shares is 129.
Okay.
Recently, it went up to around 1400.
Yes.
Again, it came back to 1020.
Yes.
Today, it's at 1100 rupees.
Yes.
I am at a profit of 4000.
Yes.
I want to know what is its share after 1 year.
1 year, okay. So
can I sell it or hold it?
Okay, when you bought it, did you buy it based on the price movement, Suresh, or did you buy it based on the prospects and the fundamentals?
Actually, it's based on the fundamentals. Actually, it's performing well. ROE is above 34 actually. Actually, it's related to solar, renewable energy.
Shakti pumps, you're saying?
Yes, sir. Shakti pumps.
Okay.
Recently, it's 5:1 ratio.
Okay. But it's in the irrigation space, not in the renewable space, Suresh.
Actually, it is based on the solar pumps. Okay. Irrigation department only.
Yeah.
Agricultural.
Horticulture, domestic water supply, commercial and industrial applications. Yes.
Actually, it's working on solar.
Okay. Okay, let me get a view from Saurabh on this. Fundamentally, Saurabh, do you like Shakti Pumps? It is trading at 1,100, 5% higher in trade today. Would you stay invested?
Initially, it was a very small company. Now it's growing at a very good pace. The company was able to get good orders, and that is why we have seen good amount of growth stupendous growth in the revenue and the profitability. So year on year, that is why the stock got re-rated. But on the valuation front, I'm afraid it is still expensive. Even after the correction, quoting 17 times to book value and approximately 40 times to its trailing 12-month earnings. So in my sense, I think it is, while the space is good, but if he wants to stick for the next 2-3 years, then it is quite okay. It is simply okay. But if he is there for short term, I think it is better to take profits off the table. So in my sense, for the short term, it is better to sell.
That is the view coming in on Shakti Pumps. Moving on to the next query, Sumit from Bengaluru is holding Dixon Technology, bought at the levels of 17,600. His quantity is 150, so he's sitting on a loss of 32,000 rupees, over 32,000 rupees. He wants to know as to what is the understanding with respect to stock price movement with results expected at the end of this month, and what is the view for the next 6 to 8 weeks. I'll come to you, Ajit, on this one, since he wants to know with respect to charts in the next 6 to 8 weeks. But he's also factoring the results. I mean, if you have a view along with that, if you can, please.
So, Mahima, we all know the kind of surge that most of these manufacturing names they have done in the recent months. In fact, if you'll talk about Dixon, particularly the stock had moved up almost vertically from 4,000 to 19,000 mark. In between, if you'll see the last 7-8 months, there were phases of intermediate consolidation, but the overall trend is still positive. So if, let's say, if it's, there's two sides to this, since the earnings season is already undergoing, and we are seeing that stocks wherein if there is any expectations are high and it failed to match with the expectation, where we are seeing sharp corrections also. So if his view is 6 to 8 weeks, it's too short for any investment. In that case, he should definitely maintain stop losses. So for this position, the stock is quoting at 17,300 mark. 16,800 should be his stop loss for this position. And upside, 18,000, 18,500 is the area basically where we have the next resistance placed. So irrespective of the result, if your view is short term, you should definitely maintain stop losses with 18,000, 18,500 as a position target area.
16,800 is the stop loss for the counter for the next 6 to 8 weeks, and 18,000 to 18,500 is the target given by Ajit. Moving on to the next caller, Rishabh from Bengaluru is calling in. Rishabh, a very good morning to you. How can we help you?
Good morning, ma'am.
Good morning.
I wanted to ask about the Indian Oil Corporation stock.
Okay.
My average is around 164 rupees.
Okay.
I bought 180 quantity.
Okay.
I should know. So I wanted to know, should I buy it and average it out, or should I continue to hold the stock?
Right.
It's for a long-term view.
Okay. What's the kind of thinking with which you bought IOCL?
Ma'am, the thinking for IOC was purely the fundamental analysis. Given the company wants to be a $1 trillion company by 2047, and I just want to hold it for a very long term prospect. And yeah, but the financials past quarters have shown very weak financials. So I just wanted to know, should I continue to buy or hold the stock?
Right. Saurabh, I'll come to you. As he rightly mentioned, weak quarters, in the past few quarters. But, even these refining companies have been in focus, because we've seen that, the Singapore gross refining margins have also crashed, and they've crashed around 70% in the last week itself. And we had, kind of seen the impact on all of these, OMCs. Your view with respect to IOCL?
He has to go only contrarian call. He has to take contrarian call, because the stock is trading at a price to book value. If the global growth starts picking up, then we'll see some Singapore gross refining margins also going up, because this type of crash will not hold for long. And if he wants to invest for the next 2-3 years, he can chip in, because he's also having a good dividend yield, close to 8-9%. And I think it is a value stock. It's only a contrarian call which he can take.
Okay. All right. Let's take the next one. Shriram Finance is a stock that was under a little bit of pressure in trade at the start today on account, I think, of the RBL results. Let's see where it is right now. It is up it's down about 1.6, but recovered from the low point of the day. Deepika from Hyderabad has asked in this question. She's bought 250 shares at a price of 591. Stock is currently trading at 517 or thereabouts. She's looking to hold for only about 2 to 3 months, so she's wondering whether to sell at this juncture. Ajit, on the charts?
So Alex, we are seeing profit taking for almost 2.5 months now. The stock has retraced from 700 to 500 zone. Post numbers, we are seeing that the stock is trying to witness some recovery. So yes, there's a possibility that we might see this recovery continuing due to the oversold position, and 540, 560 is something that the stock might test. So as of now, my recommendation is to stay put with 500 as a closing stop loss for the day, and 560, 570 zone around that area. She should at least reduce some position and maintain a trailing stop loss at 540 for the remaining trade.
I think there was an interesting commentary coming in from Kotak as well today on Shriram Finance, which was, they've mentioned that the goods segment has been showcasing a weak trend, and they've witnessed increase in the delinquency in truck operators, which is why, the stock is seeing a significant pressure.
So commercial vehicle lending, MFI lending, microfinance lending, all in trouble.
And collections and underwriting in the commercial vehicle segment are also kind of tightening, which is why there's a negative sentiment on the stock. Moving on to the next caller that we have. Ram from Hyderabad is calling in. Ram, a very good morning to you. How can we help you?
Yeah, good morning, madam. Good morning to all panel members. I would like to know about Goldium International, madam.
Right.
I bought it at 490 rupees 1,000 shares.
Right.
I would like to know the prospectus feature about lab-grown diamonds place.
Right.
And these people are entering Titan, Westlife, and Reliance Sands, all are coming out with outlets.
Right.
And these Goldium people also recently they are entering 500 branches and online sales.
Correct.
With the app.
Right.
I would like to know information kindly.
All right. I'll take your query with Saurabh. Saurabh, Goldium is, kind of involved in exports of jewelry, and as far as I know, I don't think they've yet entered the lab-grown manufacturing space. But your view with respect to the counter, if you have coverage?
A few days back, its management was there on the air, and they were saying that they have entered into the lab-grown diamond space, and they have tied up with many vendors. Also, they have their own lab-grown manufacturing units also. So, in that sense, the company was quite the management was quite confident of the space and the demand, which is growing exponentially, largely because it is exporting in the US markets and all. So in that sense, I think the company is good, and the growth prospects are looking quite firm. So my sense, he can hold on to it.
What is the view coming in on Goldium Industries? Now moving on to the next caller, Upasana from Goa is calling in. Upasana, a very good morning to you. कैसे मदद करें आपकी?
Very good morning, ma'am.
जी.
Yeah. I have a query. I bought a share of JP Power Venture.
ठीक है.
I have bought 2,703 shares.
ठीक है.
For average price is 8.20 rupees.
8120, ठीक है.
हाँ, मुझे जानना है कि मैं ये होल्ड कर सकती हूँ लॉन्ग टर्म के लिए फॉर 3 to 5 years.
ओके. आपने कोई स्टडी किया था इसको बाय करने से पहले, या कैसे, मतलब जेपी पावर क्यों?
हाँ. मैंने मार्केट कैप के बेसिस पे इसको बाय किया था एक्चुअली.
अच्छा, ठीक है. Saurabh, I'll come to you on this one if you have coverage on JP Power.
पावर जनरेशन स्पेस एज सच काफी अच्छा लग रहा है, बट जिस समूह की ये कंपनी है उससे थोड़ा सा प्रॉब्लम लगता है कि उस समूह के शेयर्स थोड़ा कम, समूह थोड़ा परेशानी में चल रहा है. कंपनी अच्छी है, वैल्यूएशंस भी अच्छे हैं, आप रख सकते हैं.
11,000 crore market capitalization. Hope that answers your question. Shankar is calling us from Chennai. Shankar, morning. How can we help you today?
Morning, sir. First, my sincere thanks to you and your TV and your guests. Past 1 month, I inquired about 12 stocks.
Okay.
Now my final stock inquiries. I'm holding Orient Green.
Okay.
3,600 shares at the rate of 19 rupees and 50 paise.
Okay.
Past 1.5 years back, I bought. I am ready to hold 10 years, 15 years, or another 20 years also. Okay. I want to know only about this company's fundamental and technical.
Okay. 13 is an...
I'm not greedy, but I am expecting more.
No, that's fair, that's fair. Shankar, and 13 is an unlucky number, so I'd invite you to call us about the 14th stock as well. And don't stop calling us. I hope that we can continue to help you.
But my inquiries is only to fresh buys. Only I want to know your ideas.
Got it. Okay. So you're holding...
At present, I am holding shares I inquired. In future, I inquired only fresh buys.
Okay. Okay. I understand. But you want to know about Orient Green Power, which is currently trading at 16.6. You bought it at slightly over 19 rupees on the fundamentals. He's willing to hold for the very long term. He's he's seeing a loss right now. Saurabh, on the fundamentals, would you hold on to this, or are there better prospects?
I think it is not the best of the lot. While the sector looks good, I think we have no information about the future growth prospects or the future expansion plans of the company. Moreover, the promoters are only holding 25-26% share in the company, and a large chunk of is that pledged. So, in my opinion, I think if you want to go in the same space, I think NTPC, SJVN, NHPC provides better opportunities for the next 15-20 years.
So that's the view coming in on NTPC, I believe, and SJVN. Okay, moving on to the next query. Krupesh from Karnataka is calling in. Krupesh, a very good morning to you. How can we help you?
Hey, good morning, madam. Good morning, everyone. So my query is, I wanted to buy Netweb Technologies because I found the fundamentals are very strong.
Right.
I would like to keep it for a longer time. So I wanted to know, is it the right time to enter, or if I can expect more correction in this?
All right. Krupesh, as I can see, the stock is down 3% as we speak. But in terms of the Q3 numbers, revenue was up 33%, EBIT was up 23%, margins have improved, has slid tad bit by 100 basis points, and net profit was up 18% for the company. The cost of raw material has gone up, but it's been a highest ever quarterly income and PAT, and order book stood at 360 crore. Saurabh, I'll come to you. Q3 numbers looked good, but the street is not very happy. What do you make of this?
I think it is the only valuation concern. Stock is trading about 140 times to its trailing earnings and about 25-30 times to book value. I think while the company is growing at a very good pace, but at the same time, the stock is very richly priced, discounting, I think, next 3, 4, 5-year earnings. So in my sense, I think it is best to avoid.
Okay. Gentlemen, thank you so much for joining in and for answering all the questions that you did. Always a pleasure speaking with you and having you on the show. Now, it's time to address today's new listing and the newest kid on the block. This is Laxmi Dental. It is a company that is involved in the manufacture of dental products, and there are several that they have. The stock has had a strong listing. It was oversubscribed quite considerably during the IPO process, which was a mix of a fresh issue as well as an offer for sale. We're joined by the management. We've got Rajesh Kakkar as well as Samir Merchant joining in. Gentlemen, thanks so much for taking the time, and I must say I love the outfits. Very bright and colorful, and congratulations on the new listing.
Thank you.
I've been practicing my smile, but I must admit that I don't go to the dentist as often as I should. You need to tell my viewers what the prospects are for the space that you operate in. But first, let's talk about the utilization of the proceeds. So you've already disclosed, of course, but what are the timelines here? I'll come to you first, Rajesh.
Yeah, so it's better Samir give this answer.
Okay.
So let Samir to give this answer.
Okay, Samir, please go ahead.
Sure. So firstly, I would like to thank thank you. Firstly, like I said, I would like to thank all the public investors and the institutional investors for putting their faith on us. So a heartfelt gratitude to all of them. Now coming to the utilization, when you said, we have disclosed majority of it, all of it in the UDRHP and the RHP, where half of the money is going towards capex. There are some portion which is debt repayment, and the other is GCP. Now, in terms of timeline, of course, the goal for any company when they raise capital is how quickly and how efficiently you can deploy it, and that's the same with us.
Right.
No, but okay, so I take that point, but would you say that, for example, the repayment of the outstanding borrowings will take place in this financial year itself? I'm talking about FY26. Samir?
Like I said, we have already started talking to the banks, and the goal, yes, like I said, we have already started talking to the banks, and we will try and do it as quickly as possible.
All right. Rajesh, Mahima also joining in. I just wanted to understand, it's your margin trajectory has been significant, from 5.5 in FY23 to 12.3 to now 19.4 in first half of FY25, if I'm not wrong. Where does the number go from here, and what has led to this kind of growth in margin levers?
It's all, as we mentioned, that automation and the digitalizations and in last 2-3 years we have introduced new products, so it gives us a good edge to increase the margin and to do the good business. Otherwise Samir can add here.
Sure. To add here, if you see historically for us, like you said, the margins have grown. It's a hybrid mix of couple of things. It is automation that we have put in post-COVID, where we are trying to automate as much as we can to be ready for the next level of scale. We are digitizing a lot, which means the dental impressions, which is typically physically taken by the dentist. We have added a lot of digital scanners, and we are taking that route to automate as well. Then third is a profile mix of our pediatric, our aligners, and our crowns and bridges and dentures. That is also changing as we speak, and coupled with that, our international expansion as well. So it's a mix of a lot of hybrid process that we have done through a lot of hard work pre-COVID and during the COVID, which is bearing a lot of fruits right now.
Samir, where does the international split or the split between revenue, international versus domestic, currently stand, and where does it go in FY26?
So currently it's at 35-65 approximately, like H1 was about 33-67. So it will keep fluctuating between, I would say, those delta, and we will keep maintain momentum, because India is also very strong in terms of growth as well as international.
Samir, what kind of opportunities are you seeing with respect to, government trying for import substitutes of the products?
So on the import side, when they're trying to get import, that's on the raw material side. Now on the finished goods, where there's the caps and crowns and other part, there is very little or there is none which is happening on the import side. So we are focusing a lot in India, spreading our wings across pan-India and growing the company. At the same time, like I said, we are in close to 95 countries across the world. And hopefully the products are great that we have built, and we keep evaluating how many more countries that we can keep adding based on regulatory clearance. And we'll keep doing that in the future.
And our dental industry, if government think about the dental tourism, because we have a medical tourism in India, if a government think about the dental tourism, it's good for whole dental industry, for our dentist. And we strongly believe our Indian dentists are one of the best dentists in the world.
Yeah, I can attest to that. Thanks so much, Rajesh and Samir, for joining in. Pleasure speaking with you, and wish you all the best. All right. That brings us to the end of this edition of Ask Profit. It's been an interesting one, and we've got lots lined up over the course of the day from Mahima and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand.
Hello and welcome. This is KYC, a brand new show at NDTV Profit, and in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today we're going to talk about a relatively smaller company, that's Waaree Renewable Technologies. Now, in terms of how things have fared and panned out, well, in terms of what the company does, it is an engineering, procurement, construction company for solar power projects. The projects, of course, include ground-mounted solar and rooftop solar, and has about 1.82 gigawatts of projects commissioned, another 3.39 gigawatts of project sites under execution. And well, the company also offers operations and maintenance services as well. Now, moving in, what we tend to do is we rate all these companies on how things have fared for the very many parameters as far as the company is concerned. So we start by talking about the income statement, the balance sheet, as well as cash flow statements. I'll also give you an idea of the return ratios. Of course, we'll also give you an order book picture, because that's where we'd actually get a better idea about the visibility of the company. Moving in, we also talk about return ratios, shareholding, street credentials, as well as street coverage. Pardon me. And as usual, we usually start by talking about the the income statement particularly. So well, let's talk about that. Let's start by how things have fared in fact in terms of the past. And if you consider just the first 9 months of this financial year, you see that we've seen an 86% growth in your top line. Your revenues have risen 40% and your profitability has also risen 44%. But if you consider how things have fared when it comes to your three-year CAGR, we've seen a 37% CAGR when it comes to revenue, EBITDA growing by around 89%, and the net profit is not 315 times, it's 315%. That's the kind of CAGR that you've seen as far as profitability is concerned. So it has gone from strength to strength. As far as value renewable technology is concerned. But on that note, let me also get in my colleague Mihika, who's going to give us a better idea and several insights into several of the other factors here as well. Mihika, welcome to the show. Let's talk about the order book and what it means for visibility going in.
Yeah. So, 2023, we started off with a small set of order book, it was 817 megawatt power. But if you see, in your, over the years, especially, it's grown significantly. Even 2023 versus the starting of FY25, we've seen a strong jump from 817 megawatts to 1,091 megawatts. And even if you look at the picture as of Q3, FY25, well, that's seen a significant amount of growth as well. Right now, Warrior Renewable Technologies has a total of 3,398 megawatts or 3.3 gigawatt of order book. So it's thumbs up on when you look at the order book position, how much it has in terms of, visibility as well as how it's been growing.
Yeah, so, significant advances for the order book in terms of visibility too. And the management seems to be very, very actively, positive when it comes to the order book as well. There are a lot of advantages in terms of its balance sheet too. But, speaking of which, let's talk about that. So we do have equities shareholders standing at shareholder value standing at around 318 odd crores. And the company does not have significant borrowing. In fact, its overall debt is around 35 crores. The company will tell you that, in fact, they do not need any more, debt. And the cash balance stands at around 19 crores. In fact, when it comes to working capital, their working capital requirements as well are, next to nothing at all, considering the very strong accruals that the company has. So all these factors are certainly working in favor of the company with respect to, what the outlook could be potentially. So it does have a very clean balance sheet, including working capital, which can otherwise be very, very large, but it does seem like the company is making worth and making for the requirements of working capital. So that's something to keep an eye on, which is why we'll give this one a thumbs up as well. But now that we have spoken about the income statement and balance sheet, along with, of course, with the order book, let's also talk about the return ratios. Mihika, what do you have for us?
Yeah. So 2021 was not a very good picture in terms of your return ratios. We saw negative return ratios. But as you see it progressing till 2024, we've seen a strong jump, whether it's from 2022 to the 2023 timeline. Return on equity has gone from 32% to 96%. ROC, which is return on capital employed, has seen a big jump as well, 3.9% to 48%. In 2024, we have seen return on capital employed become even better. Some normalization in terms of your return on equity, but that's just because of some of the share performance that we've seen towards the latter half of the calendar year 2024. So that's where that's coming in. But overall, it's a good picture. We've seen, levels increase on a year-on-year basis, and so it's a thumbs up on the return ratios. But in terms of cash flow, Agam, how does the net cash flow for the company look?
Yeah, very, very positive. If you consider how things have fared over the last few years, just take the cash flows from operations and you will see that it has actually grown from strength to strength. So back in FY22, you had about 46 odd crores for cash flow operations, moving on to 70 crores and then about 152 crores. Even if you consider on a net basis, nearly 16 odd crores coming in terms of net cash flows after all the investing activity that has been through and all the financing activities that you've seen coming through. And while there was a very small blip in FY23, FY24 once again looking at very strong numbers. So there is no doubt about the fact that it's on a strong footing when it comes to cash flows as well, and that's very evident in your balance sheet too. With the kind of movements that you are seeing, they don't need to raise any debt or for that matter equity either in terms of what they have in store. But let's move on and talk about beyond income statements. So as far as this income statement, just in general financial statements are concerned, that would include the income statement, the balance sheet, as well as cash flow operations. It looks like it's on a very, very steady footing. But Megha, how are you looking at shareholding?
Yeah. So very strong promoter shareholding for Warren Renewable Technologies. We've seen promoter shareholding be around the 74% range for since the last quarter. We've seen December 74%, September also 74%. Institutional holding in terms of the domestic and foreign institutions, that's on a lower end, barely, not even 1%. But we have strong interest from the retail side. 24% is what we are seeing from the retail side. That has actually increased certain barely any basis points in the quarter from September to December. So it's a thumbs up on your shareholding pattern. The next thing I want to talk about is actually the street cred.
Let me just address one thing before we go to the street cred. In terms of institutional holding, for a company which is of this size, with the market capitalization of around 11,000, 12,000 crores, we'll just stop there and cut across to Gautam Adani because he's making a speech there.
While my early experiences made me wise, I have come to realize that formal education rapidly expands one's knowledge. To acquire wisdom, one must experience life. But to acquire knowledge, one must study. These are complementary. And although I will never really know, I do reflect at times that the expansion in my abilities may have been faster had I gone to college. The fact is, over the years, my respect for education has only grown as I see what the many highly educated professionals have done for the Adani Group. My dear young friends, the India of my childhood was very different from the India you have today. Earlier, opportunities were very few, and ambition didn't have the runways to take off. However, the India I see now is alive with the runways, and you are India's global ambassadors in making. You are the wings that will lift India. You are a part of generations that has more potential than any generations that has come before it. You will do both, take India to the world and bring the world to India. And my young friends, in this new India, education is your greatest foundation to differentiate. Failures will come and setbacks will test you. But remember this, failure is not the opposite of success. It is the most important companion to success. The only difference between ordinary and extraordinary success is resilience. The courage to rise after every fall. I hope you learn this as you walk your path. And I understand this well, because when I started my journey, I did not have a roadmap, resources, or connections. All I had was a dream to build something meaningful, something that could contribute to boosting my own confidence. I would dream of this every single day. And as I look back, I can say that dreams are not the privilege of the rich. They are the reward of those who dare to believe and have worked tirelessly. While the Adani Group is today India's fastest growing conglomerate and has set the pace to create more new businesses than any other business house in the country, our journey is not just about creating businesses. Every decision we made, every risk we took was driven by one goal. How can we create something that serves the greater good? It has been about having the courage to give wings to our dreams and tenacity to fly higher and faster than anybody else. It is about setting a benchmark not to measure against others, but to measure ourselves against our own capabilities. Therefore, my advice to the parents in this room: your children get more than just your wealth. They get your values. Equip them with a resilience, empathy, and the ability to serve others. Encourage them to explore, to innovate, to dream, but also give them the roots so they never forget the soil they came from. Teach them that success is not just about personal achievement, it is about creating a better world for others. Educate them that wherever life takes them, whether they choose to build their future here or abroad, they must carry the spirit of India with them. Allow them to be a global citizens, but teach them so that their hearts always beat for the nations we call our Matrubhumi. Parenting is not just about shaping your child's future. It is about inspiring them to shape the future of India. My advice to the educators here is that you are the creator of dreams. Every lesson you teach, every word of encouragement you give, shape the trajectory of a life. In today's fast-changing world, your role is more critical than ever.
All right, that's Adani Group Chairman Gautam Adani making a speech on the occasion of opening of the Adani International School in Ahmedabad. But we shift focus back to, we were talking about very renewable technologies, and at the moment, the point that I was trying to make was that a company of the size of about 11,000, 12,000 crores has a relatively small or rather negligible institutional holdings. That's something to keep in mind. But other than that, given the fact that the promoters hold nearly 75%, 74.4% to be precise, in the company, it's certainly a positive. But Mika, let's talk about perhaps the most important aspect here, and that is street credentials, the kind of returns that the company has shown, as well as how valuations stack up in this case.
So on a 6-month share performance basis, the stock is down. It's under pressure, 43%. But this is a theme that we've been seeing across the renewable space. 1-year share performance, despite the steep correction, is up 73.5%. So that's something when you look at it from a 1-year perspective. And from the 5-year performance, it's 298 times. Now, this is to be noted that back in around 2020, 2021, this was a stock that was below the 10 rupee per share mark, and you can actually see notable upward momentum just at the starting of December 2023. So majority of this 5-year performance gain has been coming from the end of 2023. And lastly, when you talk about valuations, current price to earnings ratio is at 73.44 times. This is much lower than what we saw at the end of FY24, which was 98.94, but it's still higher than the 3-year historical average of 65.5. So in terms of the street cred, we've given water renewables a neutral, while the long-term performance has been higher. And in under 6 months time frame, it has been under pressure. And even if you look at valuations, while they have moderated to what we saw at the end of FY24, they're still above their historical averages. But lastly, in terms of street coverage and the overall rating, Agam, what's the
Right. So Mika, we don't have street coverage. It's going to be a negative there because while the stock has not just recently listed, it's been around for a while, and yet after the tremendous financials that we've seen for this particular stock, we don't have any coverage when it comes to the street. So that's always going to be a negative impact. But on the whole, if you consider all the parameters, all the things that we actually did want to talk about, it does seem like the company has very strong fundamentals. Strong income statement, order book picture, balance sheet, cash flows, as well as shareholding pattern. All the other factors taken into consideration, it does look like a good one. Street credentials, spectacular returns. The only reason why we're giving it a neutral is because of valuations at which it currently stands at. Street coverage, of course, is a negative, which actually brings our overall score for the company to 6.5 out of 8. So it's certainly a very, very good showing as far as the company is concerned. But let's take this forward. Well, I spoke to, in fact, the management of the company, the CFO specifically, Mr. Panjwani, where we asked him about the outlook beyond just the third quarter. This is what he had to say. Listen in.
First of all, I would like to digress a bit by saying that EPC companies need not be measured on a quarterly basis. EPC companies are more, if you look at our work profile, they are about like 12 to 15 months, 18 months kind of a work. So quarter on quarter will not be an appropriate measure. If you look at our 9 months performance, we have already done excellently well, going up by 85% in our top line, 42% up in our EBITDA margins, 43% up in our PAT margins, one quarter bit here and there, it doesn't matter, what matters is your order book size, your kind of work that you are doing.
Point taken, sir. So in that case, what can we expect in terms of the entire year? I believe that you've already seen such a strong year in terms of your top line growth, in terms of your margins expansion, as well as profitability. To what extent are you expecting the fourth quarter to come through in terms of your contribution coming ahead? Because, and the reason I'm asking you this is because, at least as far as the sector is concerned, seasonally, the fourth quarter tends to be relatively larger as compared to the preceding 3 quarters. Your view here?
Yeah, so you are right. The last quarter need to be good, and we are expecting the next quarter to be better for us in terms of volume size. We have delivered a volume of 319 odd megawatt in our deliverance in Q3. We are expecting about 600 or 500 to 600 megawatt of business in the coming quarter as well. That should take our all-round year growth at the same level that we have been discussing.
Right. Mr. Panjwani, can you tell me about your current order book, where it stands at, and how much are you expecting to execute over the next few quarters? I do have a follow-up question to that, but let's start with this for now, sir.
Please look at the recent order win that we have done. The complexity, the volume increase. Industry highest ever 2 gigawatt order that we have booked. So our current order book stands at 3.4 gigawatt, roughly around 3,700 crore order book, even as we stand today. So that's the volume of the work that's in our hand as of now.
Right. So 3.4 gigawatts worth of order book right now. Any indication as to what this order book could go and climb to in the fourth quarter? And once again, seasonally, if the fourth quarter becomes the one where there's highest amount of awarding activity as well. So what can you tell us about what we can expect in terms of awarding activity in the fourth quarter?
See, this sector is led by a lot of tailwinds. You look at the reports that have come in the last quarter. Solar has delivered 24 gigawatt of installations, and as we go, reaching the target of 280 gigawatt of solar energy and about 500 gigawatt of renewable energy, a lot of work is coming through. We are now looking at 24 gigawatt of our pipeline. Our pipeline has also increased, and now it stands at 24 gigawatt in our customer chase. So though it's very difficult to pinpoint as to what the coming quarter exactly will look like, because this all becomes how much the customers turn around with us. But definitely the indication of this long pipeline indicates there's a very robust business that's sitting in the sector.
Right, that's the management of Vari Renewable Technologies telling us about the way forward. But on that note, we have completely run out of time on this edition of KYC. Lots more lined up on the other side. Stay tuned in, and we'll be back in just a bit.
I present the budget for a historic
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines.
All right, we're talking today about Indian hotels. Numbers actually have beaten estimates, and quite a rip-roaring quarter for Indian hotels. Revenue up 29% this quarter at 2,533. EBITDA up 31% at 962. Margins have expanded from 37.3 to now 38%, and net profit up 33% to 633 crores. Clear beat on estimates as far as profits are concerned. Revenues and margins were in line. Margins up despite consolidations of lower margin Taj Sats business. To get a sense of this quarter, I'm speaking now with Puneet Chhatwal, MD and CEO of IHCL. Mr. Chhatwal, great to speak with you as always. We enjoy our chats here on NDTV Profit. The numbers I think have just been exactly what the street had hoped for and a little more. Some would say that this is a great quarter seasonally for your space. But despite that, do you think that there have been any positive surprises with the way this quarter panned out?
Yeah, there are a lot of positive surprises, but you just alluded to what we always say. We say we promise, we deliver, and preferably a bit more than what we have promised. So I think the guidance we have been giving consistently is very much in line with no big surprises in the results. But what is positive is something happened very different. We realized that many of our destinations, the New Year Eve was full. It was sold out. It's not that it was not, but a lot of arrivals started happening on the 2nd of Jan till the 6th of Jan. Now, this is something new. Usually the hotels would start getting empty on the 2nd and 3rd of January, and they start filling up again from 10th, 11th, 12th Jan when people come back to work. So a lot of people were very clever in their spending, and which is good for us because we got more occupation and started the calendar year on a good note. That's one surprise positive. The second positive surprise has been that the spiritual destinations continue to outperform our expectations. Even the newly opened Taj in Puri on 24th of December has been just doing phenomenally well. And the third one, which is a positive surprise, we expected 35% growth on our new businesses, which we have been communicating, but we got with Ginger more than 40% growth on the top line. And we also opened a very big Ginger in Goa, in north of Goa, 260 rooms, also towards the end of the year. So I think all that will start helping the business further as we go forward into the last quarter and the next financial years.
Just an aside before we go deeper into the numbers, this would be now your 4th property in Goa. At a time, this entire festive season, there was this concern, question, narrative that Goa is losing its steam, less tourists coming in. But you have now 4 properties in Goa. Have you seen any of that playing out?
Amanna, we have 5 Taj branded properties, we have 5 Ginger branded properties, we have 2 Vivantas, we have Selections, we have several hotels under construction and development in Goa. We have another 40 homestays, and we can say that we spent a lot of money in Goa in the last 2 years and are spending more, renovating, upgrading, because we just celebrated 50 years of Fort Aguada. And the main block in Fort Aguada is getting a complete new makeover. So we are very positive. And, when we reported our results on Friday in the investor call, we also gave separate, results based on the markets, how Mumbai did, how Delhi did, and how Goa. So for us, Goa is a growth story, has been a profitable story. Yes, during and post-COVID, Goa hit very big highs. So going higher and higher on a very high base with the same percentage level may not be possible, but on an absolute amount, we are very well positioned with Goa.
Let me just come to the margin figure. There's been an expansion of 70 basis points in a quarter where we saw consolidation of the Taj Sats business. What has been the reason or the key driver here and the sustainability that you see?
Actually, the occupancy levels have hit very high, and when your occupancies hit 75% or more, then your ability to charge becomes higher. And the higher you are able to charge on the rate, the stronger is the flow through to your bottom line. And the stronger the flow through, the higher the margin. But more importantly for us, our not like-for-like growth is very strong in the last few years. We have opened so many hotels on capital light model that we have reached that balanced portfolio of 50% on capital heavy, 50% on capital light, and a lot of new businesses, as I said, driving very high margin growth. So you can expect the margins to sustain in that plus minus 200 basis points because of the change in the business model.
Plus minus 200 basis points to 38% where we are right now?
Yes, it could go up to 40 plus. And in a worst case, if there were headwinds, maybe it comes down to 36. But the size of the business will keep growing at the enterprise level because we are opening 24 hotels this year. We have already opened 20. We'll be opening 30 in the next financial year at a minimum, if not more. So all that coming on capital light will also help increase your share of capital light businesses, which will help to provide very strong foothold on high margin business.
Now for FY25, you have guided for double-digit revenue growth. Is that on track, Mr. Chatwal? And then if you achieve it, as it seems perhaps likely from the first 3 quarters, then do you have an even higher guidance for FY26? What is FY26 then looking like?
On a lighter note, double digit is anything till 99%, right? So I think if we keep anything between 12 to 15% on a very large portfolio, on a very large base that we have, it will be a very good number. So we are very confident of achieving that. Mathematically, we have 9 months behind us and first 19 days of the last quarter. There's nothing that we know of based on the business on the books that would suggest that we go anything below the current average. If at all, we could only go higher than the current average of 9+ months. And that is because the first quarter, if you would recall, because of severe heat as well as the elections, there was a dip in business in the first quarter, or there was some softness. So we did not achieve the double digit in the first quarter, but the quarter 2 and quarter 3 have come very strong. Quarter 4 has started very strongly. And we do believe that as long as demand continues to outpace supply, we do believe as we keep growing our not like-for-like business, especially growth driven through new businesses with solidity in our core brand Taj, we are in for not just next year, but in the short term, we are in for a very good run.
Just wondering, is quarter 4 looking like the momentum will continue so far with concerts? You have the Kumbh Mela. I mean, both of these events or all of these kinds of events have a lot of excitement about it. But if I drill it down to impact for IHCL, what would you say?
I'm very positive. I think what the concerts has done on the weekend, what the Kumbh Mela is going to do till almost end of February, what the Aero Show, which is coming with all the delegations. We just had the Singapore head of state visit. We are going to have Indonesian head of state visit. I mean, there's so many heads of states that are expected to come, with the government delegations coming in and the foreign tourist arrivals. The foreign tourist arrivals are expected to grow. There's been some softness. We're still below pre-COVID level. I'm quite sure that within the next 12 months, we will exceed that level. The question is how much more will come, because we are at a very low level. We have a potential to do much more. So hoping that all will augment the performance of the sector and will give the necessary support, because at the moment it's all been running very strongly on the domestic room nights. But if we look back a year ago, Tamanna, everybody said, including with your colleague, Mr. Shah, when we spoke, he said, oh, this year we have G20 and we have Cricket World Cup. What will happen next year? So we're still ahead of next year, and that too by double digit. So I think the same trend will continue, and you will not have one concert in 6 months or in 3 months. I think very soon, over the next 3-5 years, we will have one major concert in every metro of India. And that's just something which is going to happen. And it happens in all top economies of the world. There is no reason why it should not happen in India. And it doesn't have to be always international stars. We have enough of stars in India, whether it's a Shankar Mahadevan or a A.R. Rahman or many others who I cannot name in this short interview, but there is a lot of potential, and Diljit Dosanjh is all the concerts are sold out. So I think a lot more is going to keep happening on this front.
Yeah, no, the concert economy is a whole different ballgame, no doubt about it. I think extended wedding season should also possibly help. Just one last point, and we speak about this every quarter, but I think it's important to come back to it, is the recovery in foreign tourist arrivals. Is that something now that will be the icing on the cake, but we're no longer waiting with bated breath considering the size of domestic tourism. Is that a fair assessment?
Absolutely, and it should happen. It helps you to earn foreign exchange. It helps you in the creation of jobs. It, more importantly, more than the economic value, it helps the positioning of India on the global map. And so I think a lot can be done there. A lot will be done there. And I'm quite sure you'll hear a lot of positivity around foreign tourist arrivals over the next 12 to 15 months, especially now that we have the infrastructure. We have the Yashobhumi in Delhi, we have the Bharat Mandapam, we have all these big conference venues, and we know what Jio has done to Mumbai. So with all these infrastructural developments, the likelihood of getting not just tourists who come to visit a Buddhist destination or to do the typical Delhi, Agra, Jaipur kind of circuit, but to get international MICE business, meetings, incentives, conferences. Today, we have the ability to do so, and with so many new airports coming in, with so many new airplanes which have been ordered, there is no reason that I see that some of this new demand that is getting induced will become the part and parcel of our business going forward.
Absolutely. Thank you so much, Mr. Chhatwal, for speaking with us. I mean, this is one space that is looking increasingly interesting, even as we keep talking about discretionary consumption, taking a beat in the tourism space, and especially premier tourism space. That doesn't seem to be happening. So thank you. Thank you so much.
Thank you for having me. Always a pleasure.
Always a pleasure as well. The stock seeing a bit of a correction. Those numbers completely in line. The stock is seeing a bit of a correction at this point. The rest of the market are looking pretty decent, Rucha.
Yeah, for sure. Tamanna, if we can quickly have a look at the markets. Nifty 50 doing well in trade, almost up by about 1%. Let's also look at the constituents of the Nifty 50 index. Well, down in the red, we have SBI Life. The results came in on Friday, but I don't think the market is really taking that up well. But up in the green, we have the likes of Kotak Mahindra Bank after a stellar result, up 9%. Also likes of IT names. Wipro up about 6.5% after a beat on margins. Bajaj Finance, NTPC doing well in trade too. But also let's quickly look at the heat map. As we can see, Nifty PSU Bank is the top sectoral gainer, and the loser is Nifty Autos. And this week is filled of Nifty Auto earnings. So we'll see how Nifty Auto performs. But largely the top IT names are done with their results. IT largely doing flat in trade amidst a green heavy, or amidst a pretty day at the market. IT doing flat is the kind of stuff that we have over here. Advanced decline ratio, if we can have a look, 1.7:1 is what we can see. Definitely more advances than decline, but at the start of the trade it was a mixed kind of session over here. And lastly, let's have a quick look at the banking index as well. Well, this one is also doing well in trade, up about almost 1.5% over here. But with that, let's move on to our next story. Hindenburg founder Nate Anderson faces allegations of hedge fund collusion after the short sellers research institute shut the shop last week. Well, the founder is now under scrutiny, and Alex has more details on this. Alex, please take it over.
Well, you know about Hindenburg Research and its founder, Nate Anderson. I don't need to tell you who this is. They were in focus just last week when Nate Anderson announced that Hindenburg Research was shutting shop. Now, it turns out that he might actually be running for cover, because the latest update is that he is under scrutiny for potential securities fraud. This is something that is taking place in Canada. Let me give you some sense of what exactly has emerged. Court documents from Canada have emerged where they're talking about the hedge fund Anson, which has shared certain research with Hindenburg ahead of hit jobs that were conducted or short selling that was undertaken by Hindenburg. Apparently, Hindenburg has colluded with Anson to write negative reports on companies. That was what was the allegation that was made. And the founder of Anson, Moiz Kassam, has admitted to sharing research with others in Canada courts. Apparently, Anson also paid Hindenburg and other activist short sellers for putting out negative reports. There's actually an email trail with the two of them, between Hindenburg, Nate Anderson and Anson, prior to certain short selling that was conducted by Hindenburg. Now, why is this an issue? It's an issue because when there is non-disclosure of participation before such a hit is conducted or a short selling is conducted, then it comes under the purview of securities fraud. It has to be disclosed where certain information is coming through, and seemingly the data or the information or the research was sent from Anson to Hindenburg before they went short on one particular company. Now, you know the context of who Nate Anderson is and what they've done in several situations, including in the case of the Adani Group. They are being investigated for that here in India as well. But to reinforce the point on why this is illegal and why this is problematic for Nate Anderson, under Canadian law, what he has done amounts to market manipulation and fraud. In fact, it could even open up Hindenburg to criminal proceedings of fraud in the United States as well. And finally, Anson was he was fined in a similar situation by the SEC in June of 2024 for a similar behavior or similar activities. In the Andrew Left case, he settled that with the SEC for over $2 million last year. So that's the latest in this case. Of course, this is a developing story and we'll get more over the course of the coming weeks.
Okay, thank you so much for that. We'll definitely get more on that one as and when it comes up. But on to an NDTV Profit exclusive. Tata Motors unveils 14 new commercial at the Bharat Mobility Expo 2025. My colleague Tushar Singh caught up with Executive Director Girish Wagh, listening to the slice of the conversation.
Before I come to the vehicles, let me set the context. So, Bharat Mobility Global Expo 2025 is a very important milestone for us. I think Tata Motors commercial vehicles has been part of the Tata Group's endeavor of nation building for decades, and therefore as a brand it is iconic, revered, storied kind of a brand. But at the same time, the two things are happening. One is young aspirational India, the requirements and expectations of changing not only the customers but our other stakeholders. And there are three mega trends which are impacting the industry: sustainability, digital and artificial intelligence, and safety. So these two requirements are pushing us therefore now to revisit our core value proposition, which is what we are resharpening as Better Always, with an intent to help customers succeed. And while doing so, I think we will have growth mindset, right? And also look forward to agility, technology and partnership to drive this customer success. Now, the manifestation of this Better Always is the 14 commercial vehicles being unveiled here with new technologies ranging from 1-ton vehicle to a 55-ton vehicle, and 3 buses which are here behind me, and powertrain technologies from CNG, LNG, biodiesel, flex fuel, battery electric and hydrogen ice. So you'll see that out of these 14, 7 vehicles are actually zero emission vehicles, 6 being battery electric and 1 being hydrogen ice. So that also shows our commitment towards this decarbonization transition, which is the need of the hour.
Well, on to Profit Deep Dive today, we put the spotlight on Dollar Industries. Well, the company does underperform its peers and trades at near 52-week low. Around last 5 days, this one is up about 3.5%. But on an overall 6 months basis, this is given a negative 15% returns. Well, Hirul joins us with details on what's hurting the company. Hirul, please take it over.
Thank you. Clearly, you have a Dollar Industries which is absolutely trading near its 52-week low. Now, what's happening? If you have to compare it with peers, Page Industries as well as the Lux from a performance perspective, on a 1-month and a 6-month perspective, the stock has clearly underperformed a Page and a Lux, whereas if you see on a YTD basis, it's Lux which has underperformed, and on a 1-year basis, it's again dollar industries. So that's a pretty mixed performance that we're picking up in terms of returns to shareholders go. Now, let's understand who are the shareholders and who own the stock. Promoters, 72.2% in dollar. Similar is in terms of Lux. Page is only at 42.9%. Majority FI and DI holding is only with Page Industries, and that is the one which is the most expensive of the lot as well. Now, what's happening over here is that the public is the one who is stuck right now with this kind of underperformance. It's a tightly held company by the promoters, so you're not seeing any FIs or DIIs who are betting on a dollar industries. So it's mainly retail investors who are stuck over here. Moving from there on, that actually tells you some story here. Now, why is it lagging peers in what aspects? The return ratios are lower versus peers. That's point number one. Moving from there on, if you see in terms of the sales and the profit growth, that is also lower as compared to peers like Page as well as Lux. And on number three, if you see in terms of the inventory, that has been higher, and the cash conversion cycle has been on the higher side as well. So these are the three major factors that we have been alluding to. Moving on, let's just look at what's not working. The sales growth, the return on capital employed and the ROE has been absolutely inconsistent. FY22 was absolutely very strong. It's gone down to single digits on all the three parameters in FY23, bounced back to double digits, that's lower double digits at 12.8% in FY24, 14% is the ROCE in FY24 and a 12% ROE, which is not the best so far if you compare that to peers as well, but absolutely inconsistent in terms of the numbers. Moving from there on, let's look at the sales growth. If you have to look at the sales growth, in the current quarter, 8.3%, which is one of the lower as compared to Page, but better than Lux. Similarly, if you see in terms of the first quarter of FY25, it's been the lowest as compared to peers. Though FY24 was slightly stronger as compared to peers. So it's this year which dollar has taken a backseat. If you see in terms of the profit growth as well, let's look at that aspect from here on. Profit 6.2% versus a double digit for the peers in the last quarter. Previous quarter also has been a similar trend, right? And again, FY24 was better for a dollar. So it's FY25 that has been worsening for this company. Moving from the profit number, let's look at the inventory aspect. Now, from the fourth quarter of FY23, the inventory from 352 crores has actually gone up to 533 crores. And with this, if you see the cash conversion cycle, that's moved up from 15.9 crores to a 16.3 crores, which is telling you that the amount of money that they're putting in terms of buying raw materials, making that into ready stock, the stock is lying with them, and the receivables that they are supposed to get from their vendors, that is stuck, and that has been increasing as well. So there is a mismatch coming in there, which can lead to higher debt, where they are on a debt reducing spree. Probably the debt could be impacted from here on. Very lastly, if you see in terms of the key concerns taking all these points, they have themselves indicated that the consumer demand is slightly subdued. Usually it's the second half of the year when they see consumers actually pointing out to a strong growth. So let's see if they're able to make up for that aspect of it. Secondly, they are seeing higher and aggressive competition as well. Thirdly, capturing the retail space is a major concern for the company and a priority which could be challenging. And for the company to achieve that 11 to 12% growth in FY25, they will have to do a 15% growth in the second half of this year. So if they are not able to do that 15% growth in the second half, they will not be able to achieve their FY25 guidance. And Project Lakshya and higher contribution from e-commerce, that is what is needed. Now, these are two new projects that they are looking at. If these two projects fail to give them the required returns that they are aiming for, then that 15% growth is not going to happen, and they are going to miss their FY25 guidance, and that inconsistency will remain. So clear concerns for a dollar industries, and along with the dollar industries, the industry as a whole is facing some challenge on the consumption side.
Okay, well, thank you so much for that, Hiral. But that's all the time that we have on the show for now. From myself and the team members who put this show together, thank you so much for watching. Stay tuned to NDTV Profit. Lots more action on the other side.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the Finance Minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers with me, Hiral Dadia, and my colleague, Anushi Vagaria. Anushi, good afternoon. Clearly a good day of trade for the markets. We're nearly trading near the day's highs in today's session. Good support coming in from the banking majors as well. Let's just quickly pull up Nifty 50 on the screens and see what's happening on that aspect. There you go, near the day's highs with gains of 0.6%. Coming in there, we're above the 23,300 mark. Let's pull up Bank Nifty as well to see what's the kind of gains that you're picking up over there, because clearly it's the financials which are in action today. 1.7% up move, 800 points up move in terms of Bank Nifty. Let's pull up the sectoral heat map to understand what the sectoral picture looks like, because The advanced decline in terms of Nifty 50 is almost 27.23. So near a 50-50, not close to that. But in terms of the sectors, let's just see IT as the one which is on the losing end. Apart from that, you have FMCG, which is down in trade, as well as auto, which is seeing cuts of almost around 0.5%. Private banks, 2.3%. It's Kotak, which is stealing the limelight today. PSU Bank Index is seeing gains of 2%. Apart from that, real estate has seen a bounce back. Metals are seeing a good bounce back in trade, as well as if you talk about energy and media, which are trading in the positive. Let's look at individual stocks. Kotak Mahindra Bank, 9% up move coming in there. Wipro again reacting to numbers. Bajaj Finance is up around 3.7%. And FinServ is seeing some smart moves. NTPC also in the positive. What's losing? SBI Life, again reacting to numbers. Shriram Finance is an interesting play, and that's on the downtick, taking into consideration the kind of fall we are seeing in terms of CV portfolio of these companies go. Trent is again under pressure, HDFC Life under pressure, and a TCS, which is seeing cuts of nearly 1% in trade. So that's with regards to the large cap space, Anushi. How are you looking at the broader markets? Are they mirroring what's happening in terms of the benchmarks?
Yeah, you can say that, Hiral. Now, if you look at the small cap 250 and mid cap 150, we are looking at gains of around 0.5% in the small cap space and about 0.3% of gains in the mid cap space. A lot of stock related action and focus today. If you take the mid cap index in general and look at the top gainers over here, we have the likes of something like a Kalyan Jewellers, which is there in focus. Other than that, we have the stock names like Vodafone. Vodafone 10% up in trade. This is on the back of the AGR dues reduction media reports which have been circulating. A big boost for not just Vodafone, but there are other stocks like Indus Towers and Bharti Airtel also in focus. Even the defense pack is doing particularly well today in trade. We have the likes of Masgao Dock seeing about 6% of gains in trade today. Apollo Microsystems seeing about 11% in gains today. While as far as where the losers are concerned, we have something like Voltas, Uno Minda and Indian Hotels looking at cuts of about 3 to 4%. Indian Hotels had reported in line numbers majorly with PAT beating expectations, but still we are looking at a correction in the stock price today. Coming to the small cap space, if we are seeing some of the key constituents, let's pull out the top gainers in this space. We have the likes of BLS International, Tata Telecommunication, Credit Access and Tejas Networks in focus, which are seeing about 8 to 11% of gains, while BLS International is looking at cuts of around 8%. Sterling Wilson down about 6% and Swan Energy seeing about 5% in cuts in trade today. So this is as far as where the broader markets are concerned, almost mirroring some of the moves which is happening in the benchmark indices.
Absolutely, clearly, a lot of stock specific action, but you have the BFSI space that is hogging the limelight today. You have RBL Bank and Kotak Mahindra Bank that are in focus. Paytm has also reported numbers, so that's going to be a segment that we will be talking about as our first theme. RBL Bank, Kotak and Paytm.
The second theme, we have the IT stocks back in action. Tech Mahindra reported a mixed Q3 set of numbers, while Wipro's Q3 revenue, margins and profit did beat estimates.
And you have IHCL, NetWeb, Tech and Rallis India that are buzzing on Q3 numbers.
On the fourth theme, we have Zomato in focus after it reports its Q3 numbers later in day today. So we have the preview remaining the company currently trading higher ahead of its Q3 results. Street expects a double-digit growth in revenue.
Moving on, we have telecom stocks that are gaining, and this is on the reports of a potential relief in AGR dues.
Other stocks in focus also include CV financials such as Shriram Finance and Cholamandalam under pressure. We tell you why on the show, and a deep dive on dollar industries coming up, which is something we should be watching out for.
We will be looking at construction work under Adani Group-led Dharavi redevelopment project that will be commencing with the development of railway land parcel. More on the same.
Renewable stocks trade at higher valuation. This is the question that we'll be addressing today. Rally is on the back of order wins, robust execution or overall euphoria. That is something we'll find out today.
And how will Trump 2.0 impact Indian economy and which sectors that will be in focus? A detailed report by Mika on the same. But let's first look at the BFSI sector. Third quarter numbers that have come in. Let's just pull up RBL Bank, Kotak Mahindra Bank, as well as a Paytm. All of these three counters are in focus. If you see in terms of where RBL Bank goes, the stock is seeing cuts of around 1%. Paytm now is absolutely flat after reporting a loss, and a Kotak Mahindra Bank is an outlier with gains of around 9.5% coming in there. For more on this, my colleagues Vishy as well as Harsh are joining us. Firstly, let me head across to Vishy with regards to where RBL Bank goes. Vishy, what has happened with an RBL Bank? And you spoke to the management as well. What have been the key highlights?
So what we understand from the results is that there's been a loss before tax at RBL Bank, which is surprising, but also not so surprising because over the last couple of quarters, RBL Bank has seen performance dip. This quarter specifically, the microfinance portfolio is eating into the bank's profitability. They've made standard provisions of about 414 crore against these microfinance exposures. They're expecting some kind of normalcy to come in by the first quarter of the next financial year. That is by June 30, and that's when we'll finally see these asset quality numbers stabilize a little bit for RBL Bank. Over and above that, there are issues with unsecured loans, credit cards, as well as personal loans. So those two will likely see some improvement in the quarters coming ahead. But as things stand, that microfinance portfolio is really hurting RBL Bank, and that's what you're seeing on the stocks.
Right, so that's with regards to RBL Bank. Thank you, Vishy, for getting us the details. In fact, that's an interesting counter where they're saying that the pain could be over from here on. Before we head across to Kotak Mahindra Bank, let me welcome in Sharmila Joshi of sharmilajoshi.com. Sharmila, good afternoon and welcome to the show. How are you looking at an RBL Bank? Because it's clearly the microfinance pain that has continued, which they are anticipating will be over in the fourth quarter. What would you advise investors to do?
Well, from the stock reaction itself, you can make out that investors have sort of had an inkling that this is the kind of number that you're going to get. And microfinance as a space, especially the stocks which are directly into microfinance, you've seen the kind of cuts these stocks have had. So this has been a sector which I like, but which has been under sort of pressure over the last, I would now say, close to a year. And we are still to see any sort of significant recovery in that sense. And so which is why I think that while RBL seems to have sort of factored in all this negative news, and to my mind should not slip too much from current levels unless something further terribly goes wrong with the stock. But it's definitely not something that you should be looking at to acquire. So if you don't have the stock, definitely don't look to buy the stock. But having said that, if you have it, perhaps this could be the wrong price to sell, because I think by now most of the negatives are built into the price.
Absolutely. So that's with regards to RBL. Let's just pull up a IOB. They've just reported numbers as we speak. The NI is up around 16% at 2,789 crores. The stock is seeing a spike in trade as we speak. 874 crore is coming in terms of where the profit number goes. Let's just talk about even the NPAs. The gross NPAs have improved. So 2.55 versus a 2.72. So asset quality improvement is what we are seeing in terms of where Indian Overseas Bank goes. I think that is one of the positives. That's the reason why we're seeing that spike coming in. NI, a 16% growth, and in terms of the profit number as well, a 21% growth is what we are picking up so far in terms of where Indian Overseas Bank goes. So we'll take a question with Sharmila on that one as well. But before that, let me head across to Harsh with regards to Kotak Mahindra. The stock is up almost 9.5% in trade. Harsh, we've seen all the numbers, but what is the fine print telling you from here on for Kotak Mahindra?
Right, so for Kotak Bank, 5 things that's really worked. One is the growth has come in stronger than expected. Mind you, this is an era where Kotak has faced an embargo from the RBI, and despite that, they've grown at almost 1.5x of industry. So that's what's really standing out. That's what's impressive. Second, margins have risen sequentially. It's a tough time for margins across the industry, but despite that, Kotak has been able to show an uptick with regard to margins. Cost of funds well under control, and that's what's really standing out as well. Third one is slippage is lower sequentially. Have we peaked in terms of the cycle with regard to asset quality is the big question, and Kotak definitely seems to have turned a corner where it comes to slippages. They continue to provision aggressively, no doubt about that, but that slippage number turning a corner, especially on on personal loans is obviously a big positive. Robust ROA delivery continues. 2.1% ROA in this kind of a macro, in this kind of an environment certainly looks solid. And of course on a higher base, but nonetheless at 2.1% the ROA hasn't contracted as much as one would expect. And OPEX is also moderated, so there is a fair degree of operational efficiency yet to kick in. All of those make for a solid set of numbers. Two brokerages I will focus on. DAM Capital upgraded to a buy from a neutral, target price 2020. MOSL again buy from neutral, target price 2100 from 1900. These are solid upgrades coming through, both suggesting that operational performance was strong. Higher provisions was of course due to aggressive policy of provisioning, and valuations now looking decent. In fact, MOSL have increased even their earnings estimates to factor in an ROA of 2.2% and ROE of 13.5% for FY26.
Thanks, Ash, for getting us the details. Sharmila, coming to you with a Kotak Mahindra Bank as well as a IOB, which has just reported numbers. Clearly, Kotak growth has been strong. Slippages are rollover. The ROA delivery has been absolutely robust. And you have upgrades coming in. So, good time to enter a Kotak. And secondly, with regards to IOB, good numbers in terms of the NI and the asset quality, which has improved. What would you advise investors to do with both these counters?
So let's talk of Kotak first. I think that, if you, in a challenging environment, you deliver the kind of numbers that they have, it's definitely a sign that you're doing something very right. And the kind of reaction the market has given the stock is speaks for itself. So I think there's a sort of a re-rating in the stock. This is a stock that hasn't done much. When you had the entire banking pack move, this stock was not really going anywhere because of their issues were really to do with other things other than the numbers that they were delivering. But they seem to have now overcome that, and in a challenging environment, they've given a very good result. So I think I definitely agree with the kind of upgrades the stock has gotten. In fact, I think the kind of targets that I would envisage for Kotak would be even higher than the numbers I heard. I think my targets would be closer to 2200. So, of course, I think, the entire sector needs to see a recovery, but I definitely think that at this price point this stock looks very good to me. Coming to IOB, again, I think a good set of numbers. If you see asset quality improve, it's a good sign. The stock is, the entire PSU space hasn't done much, again, over the last maybe a year or so. So, in that context, if you see it, the stock price looks good. But, if you had to compare between, like we were speaking of Kotak and we are speaking of IOB, which would be the stock that I would think of buying first, I think it would be Kotak, because I think in the entire PSU space, you need to see sort of a more widespread recovery of assets before you sort of take the call, and there are better quality PSU banks out there. So I think it's a good number. There is upside in the stock price, but as I said, I would prefer a Kotak bank.
Okay, so Kotak, clearly the preference for Sharmila over here, but let's shift our focus to another set of earnings which came during the market hours today, which is Paytm. It also came out with its numbers in which revenue was majorly in line, but the loss was sharply lower than the expectations. Harsh, thank you so much for staying with us. What can you talk us about Paytm? What is happening in this counter?
Right, let's talk about Paytm, because numbers at the outset look quite solid. 10% sequential growth was expected, so no surprise there, 1800 crore on the top line. But what stood out here is that in a tough environment, they've been able to grow loans well, 6% sequential. Monthly transacting users have improved when you're looking at it in the month of December 2024. And GMV has recovered to December 23 levels despite certain products being absent. And therefore, the larger focus is on continued cost control. I'll talk about the numbers again. Your EBITDA, therefore, has come in at a loss of around 222 crore. This is calculated EBITDA straight from the P&L. And this number was going to be significantly north of 300 crore. And therefore, the kind of reduction that we've seen on that particular metric really is what stands out. Last quarter, this number was at 400 crore negative. There was also an exceptional item in the last quarter, which was the sale of their platform business, events business to Zomato. and that kind of aided the numbers in the last quarter. But when you're looking at it this quarter, you're looking at a far better set of numbers. Looking at 222 crore being the net loss, which was expected north of 330 crore. In fact, you had some brokerages like a Motilal Oswal estimating that number to be as high as 360 crore plus. So therefore, this number comes as a bit of a surprise, and it's overall a very good quarter in terms of how they've moderated on OPEX. Bernstein continues to have an outperform. They are very constructive with regard to the loan disbursals number which has come through and the GMV which has come back on track according to them. They are also suggesting positivity on the Paytm business given the gloomy environment as a whole. And they believe Paytm therefore has done very, very well for itself in this quarter.
Right, thanks Ash for the details. So that's with regards to where Paytm goes. Let's just pull up the stock on the screens and see what the counter is doing in trade. There you go, just no major moves, 0.4% higher. But moving on to the news that's flashing on your screens. 24 companies that have been selected under the PLI scheme for white goods, which is ACs as well as LED lights. And this will be with a committed investment of almost 3,516 crore rupees. And this is the third round. 18 new companies have been committed for investment of 2,299 crores. And 6 existing PLI beneficiaries have been committed additional investment of almost 1,217 odd crores, from which 15 are AC companies. They will be investing 3,260 odd crores, and 9 LED companies will be investing almost 256 odd crores. It's a total of 84 companies under the PLI scheme for white goods are set to bring an investment of almost 10,500 odd crores that will actually result in production of 1.72 lakh crores during the scheme period. Now, which are the companies that get impacted over here from the listed space? You have Voltas Components Private Limited. That could be a company because their compressors, including oil-free and high capacity, is the eligible product that you're talking about on this one. Secondly, if you talk about the LED part of it, you have Lumax Industries, that's the LED driver makers. They will be seeing some input. Uno Minda is another one that will see an impact as well. So that's the third one that we're looking at from the listed space. Hindalco Industries with regards to the AC components is another one which will see an impact as well. Blue Star is another one. Voltas we already spoke about. So these are 4 or 5 companies that will be in focus on the back of this PLI scheme. Let me just head across to Sharmila. Sharmila, very quickly in terms of the PLI scheme, the details that is coming from the Ministry of Commerce, how are you looking at it and what is your view?
Well, I've just been listening to the inputs as you've given them. So this will be that way a very off-the-cuff sort of a reaction. And I think markets always sort of tend to greet this kind of news favorably. And we have seen that in the past, these companies have benefited from their sort of, the PLI news flow that was there for them. So I think within the list that I heard, maybe, you could expand it a little. You've already spoken of Voltas, Blue Star. Maybe you could also additionally look at other white good companies like an Adani Enterprises or even an IFB, companies like that. So obviously Whirlpool. So these are all the companies we need to see what the scheme is and who all stand to benefit. But yes, I think within the list, I would like Voltas and Blue Star.
Okay, so that's where this major AC goods companies, white good company are in focus. But let's shift to the IT pack. IT majors Q3 earnings are in focus. Wipro and Tech Mahindra reported their earnings, in which Tech Mahindra is trading fairly lower in trade after it delivered a mixed third quarter. Rucha joins in with more details on this, along with what all the brokerages making of this.
Okay, definitely, Anushi. Thanks for that. So I'll start with brokerages on Wipro. Well, Jefferies on Wipro is what we have. The company has upgraded to a hold from an underperform rating. Also hiked the target price to rupees 300 from 260 rupees, implying an upside of about 6.5% from the last close. Now, the results were definitely ahead of the company's, of the brokerage house expectations, but the growth was largely skewed. And growth pickup is expected to be gradual and not a V-shaped recovery. already remember, this is what even Tech Mahindra spoke about in its earnings conference call. Margins are expected to be supported by lower depreciation costs, and revised capital allocation policy also should support current valuation, and therefore this should limit downside. If we talk about the kind of share price movement in Wipro over the last 6 months, Wipro is up about 18%, and over the last 1 year, the stock is up about 27%. So decent returns as well over here. Citi on Tech Mahindra is another stock on my radar. The brokerage house has maintained a sell rating on this one, cut its target price to 1440 rupees from 1475 rupees, implying a downside of about 13%. Well, the third quarter EBIT, that is the margin, came in about 4% below expectations, and this was despite some help from the reversal of provision. So therefore, a sell rating is what Citi has maintained over here. Although management sees an improved CY25 over CY24, again, as I said, they mentioned a gradual recovery and not a V-shaped one. Therefore, Citi, the brokerage house, has lowered its FY25 to 27 EPS estimates by 3 to 4%, that is earnings estimates. They've also factored in Q3 trends and the comments as well, and believe that the management team has been executing well. However, expectations are very high amid a tough sector backdrop, and if we can have a look at how the Tech Mahindra share price is doing well, over the last 6 months, the company has given around 10% return, and over the last 1 year, 21% return. So decent sort of returns as well over here, but until the communications sector revive, Tech Mahindra is largely very skeptical amongst the brokerages on the street.
Okay, thanks for that, Richa. Sharmila, coming to you, two IT stocks and focus, that is Tech Mahindra and Wipro that Richa was talking about. Wipro seeing some smart moves in trade today, while Tech M relatively a mixed set of brokerages that we are looking at. Seeing the kind of the net profit fall that it had, and also on the management commentary, however, it's a mixed picture. What are you making of these two results?
Well, Wipro, I've never really been a fan, because a couple of years earlier, the sort of earnings used to be very lumpy. Now I think over the last 2 or 3 years, that sort of issue's gotten sorted out. But overall, if you have lumpy earnings, your ownership is the way it is, then you generally get less interest from institutions and larger sort of retail players. So I think that this stock, to my mind, has never really been in my list of favorites, even among the top tier IT companies. Tech Mahindra numbers are better, but here again, I think that given the valuations the stock is at, also I think, a little while earlier you were talking of what the sort of swearing in of Mr. Trump taking in charge today could imply, and I think one of the sectors that we need to look at implications for will be IT. So I would really just stay away from IT companies even for now till we hear how things are going to progress in the US going ahead and what policies change, etc. And I think the numbers and valuations don't really justify. It's not looking very exciting at this price.
Right. So that's with regards to where IT companies are concerned. But very quickly, let's just pull up MRPL on the screens before we slip into a short break. The company has reported a profit of 309 crores versus a loss of 697 crores. And that's the reason why we're seeing a small spike. Has cooled off, 2.5% up move. Revenues have though seen a downtick of almost 11% on a sequential basis. So that's with regards to where MRPL goes. But let's quickly slip into a short break. We will be discussing a lot more themes and what a Trump 2.0 would mean for India Inc. Please stay tuned to NDTV Profit.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. and the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
I present the budget for a historic
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming Union Budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs.
Welcome back. You're watching Profit Buzzers. Indian Hotels, that's the stock to focus on, and this is on the back of earnings. The stock has been trading under pressure, cuts of 3.5% coming in there. But if you see in terms of the numbers, it's an interesting play because your revenues and margins have been in line. The profits have beat expectations as well. The margins are up, and this is despite consolidation of lower margins at TajSAT's business. It's interesting to see why the stock has been tanking. In fact, we did speak to the management as well. Let's quickly hear out what he has to say first.
the foreign tourist arrivals. The foreign tourist arrivals are expected to grow. There's been some softness. We're still below pre-COVID level. I'm quite sure that within the next 12 months, we will exceed that level. The question is how much more will come because we are at a very low level. We have a potential to do much more. So hoping that all will augment the performance of the sector and will give the necessary support, because at the moment it's all been running very strongly on the domestic room nights. But if you look back a year ago, Tamanna, everybody said, including with your colleague, Mr. Shah, when we spoke, he said, oh, this year we have G20 and we have Cricket World Cup. What will happen next year? So we're still ahead of next year, and that too by double digit. So I think the same trend will continue, and you'll not have one concert in 6 months or in 3 months. I think very soon, over the next 3-5 years, we will have one major concert in every metro of India. And that's just something which is going to happen.
Right, so that's the management of Indian hotels. Concerts are in as well. We did have Coldplay, which is ongoing. So that's also become a source of revenue for these hoteliers. Also, let me welcome in Amit Bhuptani along with Sharmila Joshi. Amit, good afternoon and welcome to the show. How are you looking at the Indian hotels? From a fundamental perspective, the numbers were okay. The stock still is seeing some bit of pressure in today's session. Amit, what are charts indicating?
Hi, good afternoon, Neeraj. So overall, if you look at the chart pattern of the Indian hotel, counter has been continuously trading in the uptrend from 2020. And as per current scenario, from last 4 to 5 days of trading session, we have witnessed some sort of selling pressure from upside levels. But the stock is currently having a supportive base between 770 to 730 levels. So if the counter is coming between the range of 770 to 730, it will be a buying opportunity in the counter, because once the counter again goes above 820 levels, then the buying will be witnessed. So pullback can be witnessed once counter come near 770.
770 is something that we should be looking forward to Indian hotels. But some other key stocks and focus on the back of their earnings as Rallis India, SBI Life and NetWeb Technologies. Now, all three of them are down in trade today. Rallis India saw about a 12.7% of a downtick in terms of where the revenue is. Margins also contracted 8.4% versus 10.2%. Coming to NetWeb, the revenue was up around 33%, but net profit saw about 18% of a growth. Despite that, the stock seeing about 5% of cuts. SBI Life net profit up around 71.2%, with their VNB margins up around 11%, and VNB margin standing at 27% versus 26.9%. Sharmila, coming to you on these three counters, which one are you going to address? SBI Life, Rallis and all. What do you make out of the earnings from these three counters?
Well, honestly, I've never tracked NetWeb, so I don't really want to comment on that. But within these three stocks, SBI Life I definitely like. I like the business as well. I think life insurance has a way to go in the Indian context. And within the listed life insurance players, I think the kind of numbers that... See, my strategy has always been to buy a basket of life insurance stocks, because I like HDFC Life, ICICI Pru and SBI Life for different reasons. But what I've really observed over the last 3 or 4 years is actually, in terms of numbers, SBI Life has really delivered. So that, to my mind, is the strongest, emerges as one of the strongest players in the life insurance space. So that is definitely a stock that you need to look at. Rallis, again, I think it's in one of those solid sort of mid-cap companies. It is fertilizers. I think the results seem a little off. Valuations also seem okay. But overall, it's a good company. So I think out of these three companies, SBI Life is probably what I would focus on.
Okay, SBI Life, Sharmila is constructive on. But Amit, coming to you, what is your view on something like NetWeb? That was not addressed as it's not under her coverage. How do you see it on charts?
If you look at the chart pattern, the counter has created a double bottom on the weekly pattern. So right now, if new level breaks down below 2100 level, then only we will see next leg of selling in this counter. So 2100 will act as an important supportive zone for this counter. The upside level for the breakout, where we will see the fresh buying will be witnessed, will be about 2300 levels. So for currently, I am witnessing that the counter may remain between the range of 2100 to 2300 level for coming days of trading session. Once a breakdown of these levels come, then only new long or short position need to be created. At this point of time, it is a no trade zone.
Right, so that's with regards to where Netweb Technologies goes in terms of where charts are concerned. Let's pull up the telecom stocks in today's session. Interesting players. You have Vodafone Idea, which is buzzing. Bharti Airtel, that's another one that is in focus. In fact, MTNL is also buzzing in trade today. Now, it's AGR dues, that is what is on the cards and in line for a reduction. In fact, my colleague Somit Sarkar joins in to tell us more. Somit, the stocks are gaining, on the back of reports indicating a potential relief with regards to where AGR dues are concerned. What are you picking up?
Well, if you say it is one of the biggest relief that could come in for the telecom sector, and the companies that would benefit the most out of this is Vodafone Idea, followed by Indus Tower and then Bharti Airtel. Now, why is this news important? Because recently Supreme Court had dismissed the curative petition that was filed by Vodafone Idea and Bharti Airtel to reduce the AGR dues, but that was dismissed by Supreme Court. Hence, they would have to make the payment starting October 2025. And given the fact that the AGR dues are large, the payment or cash outflows for Vodafone Idea and Bharti Airtel would be higher. But given the fact that now government is considering the reduction of interest and penalty amount, the cash outflow for both the companies could reduce going forward. Now, for Vodafone Idea, they would have to pay around 43,000 crore rupees annually every year from FY27 to FY31, as against the 21,000 crore of cash flow from operation that the company had generated in FY24. This was a very big task for Vodafone Idea going forward, given the fact that their cash flows were lower. But now, given the fact that government is considering this, the debt of Vodafone Idea would come down anywhere between 48 to 52,000 crore rupees, and this could reduce the annual cash outflow of Vodafone Idea by around 12 to 13,000 crore rupees. Moreover, this move by the government would help Vodafone Idea to secure a bank debt for its capital expenditure, and this debt reduction would boost the equity value for Vodafone Idea by around 6 to 7.5 rupees, as against the current market price of 9 rupees.
Thank you, Somit, for getting us the details. Sharmila, coming to you in terms of the telecom pack. In terms of beneficiaries in pecking order, as Somit was saying, it is Vodafone Idea first, followed by Indus Tower, and then a Bharti Airtel. How are you looking at these three names?
My order would be the exact reverse. It would be Bharti, Indus, and then Vodafone. And the reason for that is simple. Yes, I think they definitely benefit from this news, as is highlighted. But the fact remains that, this is a sector. I'm very positive on telecom as a sector. But the fact is that it is a sector that requires huge amount of investment, and you need a strong balance sheet because, we have moved from 3AG, 4AG, 5AG. So you need sort of funds to do that capex. And yes, I think Vodafone will have that also available. So probably from a stock price perspective, it could look very attractive at this point in time, and that reflects in the kind of reaction market has given it. But very honestly, for me, I think I would still prefer to have Bharti Airtel as my top pick.
Bharti Airtel from the list is what Sharmila bets on. Amit, what is your pick from the three? What are charts indicating? Which is more attractive?
Definitely, if you look on the safer bet, the safer bet will be definitely Bharti Airtel, because the counter is continuously trading on the upside zone, and from last 4 to 5 weeks of trading session, we are seeing it is being consolidating between the range of 1550 to 1650 levels. But if you look at the idea side, we are seeing that the risk reward is on the same side. 8.5 is the supportive zone and 12.5 is the reward zone on the upside to 1.52 rupees is profitable or risk side on both the ends. But that due also we are seeing that on a new specific front there is a movement being witnessed on the idea. But if you look at the stable point, Bharti Airtel would be more preferable to buy.
Okay, Bharti Airtel, the clear pick in the counters in the telecom sector. But the next theme is Zomato preview. The stock is gaining ahead of its Q3 earnings. Mahima joins us with more details. Hi Mahima, we are looking at a double-digit growth scenario for the third quarter for the business. What more can you tell us about Zomato that we should be watching out for?
Right. So, I'll start with what Bloomberg estimates suggest. In terms of the revenue might see a rise of 12% QOQ. The EBITDA may see a rise of around 18% QOQ, and margins may be at 4.9% versus that of 4.7% last quarter, which will be very positive if that comes in. The net profit may rise around 31% for the counter. Now, in terms of what to watch out for, a couple of things. Zomato has come out with a lot of things this quarter itself, and revenue, of course, you can expect a double-digit growth growth, but sustained momentum from Hyperpure and Blinkit is something to watch out for. Operational metrics of District app will be something to watch out for because there were a couple of shows and plays and events that were exclusive with District Zomato. So how that have panned out will be something to watch out for in terms of numbers. Margin expansion, of course, yes, something will be on the cards both for food delivery as well as Blinkit. And delivery charges expansion in food delivery business will also be something to watch out for, how much that is aiding the top line. Lastly, net dark store expansion is something to watch out for because we will have to know as to whether they are on track with their total overall guidance with respect to net dark store addition, that is 2,000 stores. Now, what can you expect? Favorable market structure, still in favor of Zomato, strong execution and improving visibility of profitability, but competition from Swiggy will also be something to watch out for, and especially in the quick commerce space, competition from unlisted players like Zepto will also be something to be washed out for in terms of market share gains. Lastly, in terms of brokerages, JM Financial came out with its forecast for sequential gross order value growth of 3.9% in food delivery. Take rates are anticipated to expand to 21.3% for food delivery again, and EBITDA margins likely to be around 3.7% for food delivery. And for Blinkit, the gross order value is expected to grow around 22%, and contribution in margins are likely to contract by 2.5%. This is because of the kind of discounts that they have started giving on their quick commerce platform. So, this is the overall view as to how and what you can expect from Zomato's Q3 numbers.
Okay, thanks for that, Mahima. Amit, I'll come to you on this one. In the last month or so, we have seen some decent amount of correction in terms of where Zomato is concerned. How is this looking like forward as we go in terms of where the charts are concerned?
Liquidation was witnessed from 300 levels to 225 zone. 225 will act as an important supportive zone because it is a quarterly support for this counter, and also if look at the Fibonacci retracement level, 225 is acting as an important supportive zone. So till the time now 225 level is not getting broken out, till that point of time we might not witness any sharp selling in this counter. Already it is being discounted. So on the upside, we are seeing that 270 is marking as an important resistance zone where 50 DM is also acting there. So once the counter gets a clearance of 270 level, then again we will see the fresh buying opportunity in this counter. At this point of time, risk reward is in the favorable zone. New long position can be created with the support of 235, and the target upside will be 270.
Okay, so that's where the technicals are concerned. But Sharmila, coming to you on the fundamentals of the business, now the long-term trajectory of the quick commerce remains as a very strong something that we should be watching out for the long-term picture, but competition from Swiggy is something that we should be watching out for. What is your view on Zomato?
It's positive, but I think that, and also I wouldn't worry too much about competition from Swiggy, etc., because I think that there's a fairly large market out there which needs to be addressed, and it's good if you have more than one or two good players in the market which are addressing whatever the addressable. Whether it's restaurants, whether it is the kind of quick service, etc. That said, I think the stock has seen a reasonable run-up because what we did see when it got listed was like an over-exuberance, then a correction, and now I think the stock is also delivering decent numbers. So I'm positive on the stock, positive on the space, but perhaps at this level I would be a little wary of entering the stock because I think it has had quite a large run-up.
Right, so that's with regards to where Zomato goes. But let's shift focus in terms of sugar companies as we speak. If you can just pull up all the sugar names on the screens, because it's an interesting move that we are seeing, all trading in the positive, from a Balrampur Chini to a Sri Renuka to a Bajaj Hindustan, seeing gains to the tune of almost 2 to 5% as we speak. Apart from this, even the other names which are Sri Renuka, Triveni Engineering, Dalmia Sugar, as well as Adhampur Sugar, seeing some smart moves. And this is on the back of the news that we're picking up from the Informist, where India actually, as we knew, had banned sugar exports in 2022. And now they are saying that there is a possibility that India will be allowing 1 million ton sugar exports in the season ending September 2025. So the ban in terms of the exports could be lifted. But what is going to be interesting is how the Brazil crop pans out, because if the Brazil crop is bad, and if the global prices are under pressure, the exports are not really going to do any good for these companies. So this is going to be an interesting conversation that we will have once we get more information on the same. Very quickly, Sharmila, your view on the sugar companies and any topics taking into consideration that the ban could be lifted.
Well, honestly, I feel that where these soft commodities are concerned, especially something like a sugar, which is so sensitive in terms of the amount of sugar we consume and what is required at festivals, etc. This is, to my mind, it's going to always be a sector which is going to have. So suppose you do allow exports, and in the meantime prices run up, then you are going to have some curve again. So, companies are never really allowed that sort of runaway profit, or I think even in that sense, losses are also limited. So, these are not stocks that I look at. They run up on some ethanol news or, something like that. And they're very cyclical in nature. So, by and large, very honestly, I've learned over a period of time to avoid sugar as a sector.
Go with Sharmila from here on. But moving from there on, another stock that we are focusing on is a Shriram Finance. From its peak, the stock is down almost 17%, and it's an interesting one today as well. It's trading under pressure. And on the back of the Kotak commentary by retail, CV has seen a slight increase with regards to where delinquencies go. The goods segment has been showing a weak trend. Overall, the delinquencies are coming in terms of where the truck operators are concerned. They've tightened collections and underwriting in the CV segment. And if you talk about Shriram Finance, almost 46% of their loan book or the finance book is around CVs. And this is as per the second quarter of FY25. And that saw a sequential growth of around 2.2%. So 50% nearly is the exposure that they have to the CV segment in terms of CVs. Very quickly, Sharmila, your view in terms of Shriram Finance?
So I think, yes, you highlighted the concern that their book is largely CVs, and we are in an environment where we are seeing stress on that. That said, I think this is a company that has been through these cycles earlier, because CV cycles do tend to be very sticky in nature. So even when you're seeing a sort of a down cycle, that's likely to last a little longer. So to my mind, this is not a space which is going to recover in a hurry. So, but it's a good company. So I wouldn't be negative on it, but sort of a neutral stance as of now.
A neutral stance on Shriram Finance. Amit, how are you looking at it? Because from the recent peaks, the stock is down nearly around 17%. What would you advise? Are the charts indicating further strength from here on or further selling pressure?
From 700 level, stock has already come towards the 500 level. 490 will act as an important supportive zone for this counter. Below 490, then only we will see next leg of selling in this counter. So whomsoever is holding this position should hold with the support of 490. Once counter goes above 528 level, which is the gap resistance, above 528, fresh buying will be witnessed towards 560.
Okay, so that's where the Shriram Finance is concerned. But now we have some other stocks in focus as well on the back of some key developments happening there. You have Hitachi Energy in focus after board has approved a 4,200 crore of a fundraise. Now this would be via the public's right issue or the QIP road. That is something that we should be watching out for. Man Industries similarly in focus on the back of the fundraise issue, wherein they are planned to raise about 300 crore through the fundraise, which would be again through a preferential issue or a QIP, which is something we should be watching out for. So two stocks in focus on the back of fundraise, but there is an interesting development happening in Ashapura Mindchem also. The stock was 7% up in trade today. Now it's seen some correction. It's about 2% up in trade today. This is after the company has signed a long-term MOU with China Railway to jointly develop its Paco bauxite deposit in Genoa. This is also in this China Railway would be responsible for the production of bauxite and providing logistic solutions, while Ashapura Mindchem will look over the sales and marketing and provide technical support. Sharmila, I want to come to you on this one. From any of the stocks that you're covering from the list that I've just talked about, that is Man Industries, Hitachi Energy and Ashapura Mindchem?
So I've sort of studied all three at some point or the other, and I think valuations for all three, to my mind, look very expensive at this point in time. So while the news flow seems to be good for Hitachi Energy as well as Man Industries, I think it's sort of priced in.
Okay, so that is where the fundamental check is. But Amit, coming to you on some of these counters, we have Hitachi Energy, Man Industries and Ashapura Mindchem. Any of these that you would like to talk about in terms of how the chart is concerned, how it is looking technically?
As per technical setup, a counter from this which is looking positive and strong is Ashapura mine, because from last 7 to 8 quarters we have witnessed that Ashapura mine has given a flag pattern formation breakout on the daily chart. It has given a cup and handle breakout with the volumes. So volumes are continuously increasing and the patterns has been created in the all time frame, due to which we expect more strength will be witnessed in this counter. Once counter goes above 550 level, then the possible target for this will be 620 to 650 levels on the higher end.
Right, so that's with regards to where Ashapura Mine Chem is concerned. The stock is seeing gains of around 2.5% in trade. Another space that has been in focus, which is a topic of deep dive at NDTV Profit, is Adani Industries versus Page Industries and Lux Industries. Let's pull up all the three counters in trade and see what the stock is doing today. Adani Industries is up almost 1.2%, but in the last 1 month, it's lost almost 18%. Page Industries has lost nearly 6%, and Lux Industries, which has lost nearly 15 to 16% in the last 1 month. It's mainly the FIs and DIIs which are not really supporting Adani Industries at all. All their bets have been on a Page Industries. That's what we've picked up so far from the data. Now, what is lagging? Couple of aspects. The return ratios versus peers have been low for Adani Industries. Secondly, their sales and profit growth also has been lower versus peers. And thirdly, their inventory has been increasing on a sequential basis, and their cash conversion cycle also has been worsening. Let's look at the inconsistent sales growth. 29 to 30% was the kind of sales growth that we saw in FY22. It went down to around 4% in FY23, and then again it's bounced back to around 12 to 13%. Similar is the situation with the return on capital employed as well as the return on equity. If you see in terms of the sales growth trend, it was negative in the first quarter of FY24. It actually was absolutely strong after that in the remainder of FY24. And it's gone down to around 2% in FY25 and 8.3%. Whereas it's been better in terms of Page as well as Lux. If you talk about the profit growth as well, in terms of FY25, it has been worse than the peers. So that's the data that we've picked up so far. Now, if you talk about the inventory levels, from a 352 crore in the fourth quarter of FY23, the inventory levels have actually gone up to 533 crores in the second quarter of FY25. And with this, if you see their cash conversion cycle as well, that has been increasing, which is an indicator that there is a possibility that the debt could be soaring. What are the key concerns? The consumer demand has been slightly subdued, so spending has been low, and that has been impacting not only Adani but the industry as a whole. The competition is absolutely aggressive in terms of peers. So how Adani is able to match up to them is what we need to wait and watch and see. And capturing the retail space is a priority for Adani Industries if it needs to actually get there. But it's becoming absolutely challenging, for which they've actually launched Project Lakshya, and they're looking at the e-commerce space to help them achieve that. And very lastly, they have a guidance of around 12 to 13% for FY25. Now, to achieve that guidance of 12 to 13%, they will need to see a growth of around 15% in the second half of FY25. So if they're able to achieve that 15% and above kind of growth, that's the only way they'll be able to achieve their guidance. So that is going to be interesting and tricky. And this quarter will probably tell us what will be their picture. Very quickly, Sharmila, coming to you with regards to Adani Industries versus a Page and Lux, what would you say? Because in terms of the price to earnings, it is not expensive. You have Page Industries, which is on the higher side, but how are you looking at it?
I think the graphics that you showed, they were really great, and they sort of explain why Page is getting a higher valuation than Adani or a Lux. It's very clear, and market always rewards a company where they perceive it to have a better brand value as well as better return on ratios consistently. I think we did see a scenario where Page also corrected when they ran into issues, and they recovered from that, and the stock price is where it is now. So a lot of ifs and buts, as you pointed out. I think if they are able to deliver, if Adani is able to deliver, you will definitely see an up move, but we really need to wait and see that happen.
Right, so that's going to be an interesting watch out for in terms of the space that we're talking about as well. But we're completely out of time. Thank you, Amit. Thank you, Sharmila, for joining us on the show and sharing your views. A wrap on this edition of Profit Buzzers from Anushi and myself and the entire team that has put this show together. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
I present the budget for a historic...
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the Finance Minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hello and welcome back to NDTV Profit. You're watching Top Trades and I'm your host Mihika Barve. Up first, let's just take a quick look at how markets are faring right now. Well, it's a good day for the Nifty 50. You're up, seeing a gain of 0.6% right now. You have around 26 advances on the Nifty versus 24 declines, and two counters do remain unchanged for the benchmark. Even if you look at the total markets, you have 1,514 advances versus 693 declines. When you look at the top gainers for the Nifty 50 of Kotak Mahindra Bank, the stock has surged, is up 9% after posting a good set of numbers for Q3. You also have strength in something like a Wipro, it's up 6%. Bajaj Finance, Bajaj Finserv, seeing gains of over 3%. Something that's not doing well on the Nifty, well, you have SBI Life under pressure, down about almost 3% in trade right now. You have some weakness in something like a Trent as well as the Shriram Finance. When you look at the broader markets, they are, in line or somewhat outperforming the Nifty. Of the Nifty mid cap, it's up 0.6% like the benchmark. The Nifty small cap 250 is what I want to highlight. It's up 0.8%. Something that's standing out on this broader index. When you look at the top gainers, you have something like a Tata Teleservices. It's up 11%, followed by Credit Access, which is also seeing gains of 11%. We have strength in Ather and Saregama, seeing gains of 5 to 8% on the small cap 250. Something that's not doing so well is in BLS International. It's under pressure, down about 8%, followed by a Sterling and Wilson Renewable Technologies. That's also seeing cuts of 6.5%. When you look at the sectoral picture, if you could just get the sectoral heat map on your screens right now, there you go. Very few under pressure. You have the Nifty Auto seeing cuts of 0.4%, followed by an FMCG and IT. Then you have the Nifty PSU Bank, which is the one that's buzzing. It's up 2%, 2.5% actually in trade. You have we have strength in something like an IOB, up 4%, followed by a Canara Bank and a UCO Bank, all seeing strengths of 3 to 4%. But with that, I want to just welcome our guest for today, and that's Gaurang Shah, who is the head investment strategist at Geojit Financial Services. Welcome to the show, Gaurang. Before I come to you, I want to address the alcohol stocks. The stock market is raising a glass to these alcohol companies today. Globus Spirits, United Breweries, all buzzing in trade. We have Mahima joining us with the key details.
Right, so there are two different reasons as to why Globus Spirits and United Breweries is buzzing. I'll start with Globus Spirits. Now, the Consumers Affairs Ministry has notified a reduction in price for rice for supply of ethanol distilleries. The price for rice has been reduced to 22.5 per kg from that of 28 kg earlier to ethanol distilleries. Now, a lot of sugar companies will also benefit from this, who use rice as their raw material for production of ethanol, but Globus Spirits will benefit the most because it uses a lot of rice to produce ethanol. Now, this will eventually lead to lower raw material costs, and it will boost their margins and the bottom line as well. Moving on to United Breweries. So just for viewers' context, United Breweries had decided to ban supply of alcohol to the Telangana Beverages Company, and this was due to the prices not being raised since 2019 and the payments being overdue from the company. Telangana Beverages Company basically is a wholesale buyer of alcohol for the Telangana state government. Now, United Breweries has come out with a filing saying that they are resuming beer supply to Telangana Beverages Company with immediate effect, and there have been constructive decisions with the company going forward, and the Telangana Beverages has assured to address company's issues in pricing as well as the outstanding payment. So two different reasons as to why these alcohol companies are buzzing, and of course they're both up in a buoyant trade.
Thank you, Mahima, for giving us those key details. Gaurang, I'll come to you. Your outlook on the whole alco beverage theme, and if you had to compare a United Breweries to a Global Spirits, what would be your pick?
Well, I think the high spirits industry in India is raising a toast to the inauguration of Donald Trump, set to take oath as the 47th President of the United States of America later this evening, our time. The industry has been doing quite well domestically, and I think you have a lot of IMFL as well as Indian originated, single malt whiskeys and other products doing quite well in the market. I would also go to the extent to term this industry as an FMCG sector also, because it is actually a fast moving consumer goods sector, the way numbers are picking up. So in this sector, well, we positive on the sector, which is the company that we have a positive coverage on. The company in question and in discussion, United Beverages Limited, UBL. We have coverage over here. 2150 plus is the target on UBL from a long-term point of view. Numbers will possibly tell us a detailed story and maybe an excitement to revise the target upwards. Issues like alcohol ban in some states does create a sticky wicket, but whether it is a good market, bad market, celebrations are there all around, especially at a domestic level, and the kind of brands that are coming into India from the overseas market.
Thank you, Gaurang, for giving us that view. Up next, you have Kotak Mahindra Bank, the top Nifty 50 gainer. It's a stock to look at. It's soaring after the lender posted its strong third quarter numbers. The net profit as well as net interest income both rose 10%, while asset quality improved on net basis. We have Harsh joining us to give us the fine print and tell us what worked for the bank.
Right, so for Kotak Bank, 5 things that's really worked. One is the growth has come in stronger than expected. Mind you, this is an era where Kotak has faced an embargo from the RBI, and despite that, they've grown at almost 1.5x of industry. So that's what's really standing out. That's what's impressive. Second, margins have risen sequentially. It's a tough time for margins across the industry, but despite that, Kotak has been able to show an uptick with regard to margins. Cost of funds well under control, and that's what's really standing out as well. Third one is slippage is lower sequentially. Have we peaked in terms of the cycle with regard to asset quality is the big question, and Kotak definitely seems to have turned a corner where it comes to slippages. They continue to provision aggressively, no doubt about that, but that slippage number turning a corner, especially on personal loans, is obviously a big positive. Robust ROA delivery continues. 2.1% ROA in this kind of a macro, in this kind of an environment, certainly looks solid. And of course on a higher base, but nonetheless at 2.1%, the ROA hasn't contracted as much as one would expect. And OPEX is also moderated, so there is a fair degree of operational efficiency yet to kick in. All of those make for a solid set of numbers. Two brokerages I will focus on. DAM Capital upgraded to a buy from a neutral, target price 2020. MOSL again buy from neutral, target price 2100 from 1900. These are solid upgrades coming through, both suggesting that operational performance was strong. Higher provisions was of course due to aggressive policy of provisioning, and valuations now looking decent. In fact, MOSL have increased even their earnings estimates to factor in an ROA of 2.2% and ROE of 13.5% for FY26.
Thank you, Harsh, for giving us those key details. Gaurang, I'll come to you. An outlook on, Kotak asset quality holding up, a good set of numbers. What's your view? What should, an investor doing next?
Well, I like to answer this in a different way. You remember, I'm sure you would have remembered and your colleague would have remembered, the second quarter, not only Kotak Bank, but IndusInd Bank also was a victim of poor numbers getting reported, and there were obituaries written all over. And a lot of people, on various platforms started advising to stay away from both these banks. Primarily, of course, there was a concern with respect to the MFI segment also. But both the management during the second quarter, if my memory serves me right, had mentioned that yes, they were in a difficult time in the second quarter, but from third quarter improvement, fourth quarter improvement, run rate going up, and next financial year, a total turnaround on the positive side. was the commentary. 3 months down the line, witnessing the third quarter numbers, the stock is up 9%, Kotak, and IndusInd Bank is recovering from the lows that it had made earlier. The point I'm trying to drive home is that, look, any sector, any company can face difficult times in a particular environment given the backdrop of events happened. But does that mean that you have to change your philosophy of long-term investment based on just one quarter numbers? I think you would have proven flat on your face if you would have sold off Kotak Bank looking at second quarter numbers and see the turnaround. We have a positive coverage on both Kotak as well as IndusInd Bank.
Thank you, Gaurang, for that. Next up, I want to pull up the telecom counters, something like a Vodafone idea that has been gaining in trade today. And, it's up 9%. And we have news about the government working to consider relief on Asia dues for the telecom industry. And they might waive off 50% interest costs and 100% penalties. My colleague Varun joining us with more details.
That's right. So the government is mooting a proposal to reduce the quantum of adjusted gross revenue dues that are owed to the exchequer, and this comes right before the budget, and practically this move follows on the heels of another relief package that was rendered to the telcos that came out last year, wherein the bank guarantee waiver was announced, wherein the bank guarantees that they needed to submit to get for past spectrum purchases was waived off. Now this comes as a huge relief to both Vodafone Idea and Bharti Airtel, as it is expected, if the proposal finally goes forward, it is expected that that Vodafone Idea's AGR dues would come down by around rupees 52,000 crores and Bharti Airtel's by rupees 38,000 crores, which is a huge figure by any reasonable estimate. So it comes as a relief for both the biggest telcos of our nation, and more to be seen on this.
Thank you, Varun, for giving us those key details. Gaurang, your outlook on a Vodafone versus a Bharti Airtel, some relief potentially on the cards. So what's your outlook?
Well, I don't think we can compare both, right? To be very honest, Vodafone Idea and Bharti, even Reliance for Jio, the performance. So let me say this, we have coverage on Vodafone Idea, but it's a high risk, high reward kind of a stock. Look, at fundamentals really don't work on market assumptions. Fundamentals work on actually delivery of numbers and what happens and what the management is capable of doing. So this is in the news. Stock is up almost close to 10%. Vodafone Idea as we speak. Honestly, I would wait for the delivery to come through in the budget speech in case if it is expected during that time. We'll love to look into the commentary and read the fine prints and read in between lines as to what actual meaning it has in terms of relief and how much impact does it have, will it have on the respective balance sheet, whether it is Vodafone Idea or Bharti Airtel. Jumping onto the bandwagon and you jump the gun kind of a situation. It's a difficult situation to comment, but I will give a disclosure. We have a coverage on Vodafone Idea, and we'll wait for this announcement to come through and take a call post that.
Got it. A wait and watch on the telecom counters. But there's another key earnings that has seen some kind of reaction. That's Rallis India. It's under pressure quite heavily, down about 7%. We have Varsha joining us. Varsha, what didn't work for Rallis India this quarter?
Yes, Megha. So the stock is down. This is on the back of weak earnings. So if you see in Q3 FY25, we already know that agrochemicals is going under pressure. So their crop care revenue was down 13%, while their seeds revenue was down 7%. There was a volume drop in pricing pressure in exports, which actually impacted margins, though there was positive volume growth when it comes to domestic business. Now, the PAT was down due to lower EBITDA. So overall, if you see, because of the weak export business, we are seeing this numbers. If I were to talk about the con call details, so they retain positive outlook on domestic market, placing focus on herbicides, biologicals and specialty solutions. They are planning new product launches and trending herbicide portfolio. emphasis have been given on improving the capacity utilization, market share and margins. And if I were to talk about concerns, what will not work out for the company, so ongoing pricing pressure in both domestic and international markets is one of the concerns that the company is facing, and we saw that exports did have an impact which actually impacted margins for the company and overall numbers. Elevated inventory levels at customer level are actually damping demand. And there's been weakness which is observed in herbicide portfolio. And lastly, reliance on a mature product portfolio are some of the key concerns that the company has. So overall, weak set of numbers is what, this is the reason why the stock is down.
Thank you, Aisha, for giving us those details. I also want to, just mark something like a Sharda Cropcom, which is also, under pressure. Cropchem, sorry. Gaurang, I'll come to you. Weak set of numbers for Rallis. Sharda Cropcom also heavily under pressure. Your view on the agrochemical space, could we expect, the kind of weakness to continue?
We expect the sector to do well, both agrochemical as well as specialty chemicals. But it'll take time. There was a lot of positivity with respect to post-COVID scenario, China +1, Europe +1. Things did not really materialize as expected by the markets. And there's been a sideways performance. Rallies, if you actually go to see not 1 year, you look at the 5-year chart or 5-year performance of Rallies India, 200, 220 on the lower side and 360 or 350 on the higher side. I'm talking about 1 year, 5 year. You look at it. So it's not been a real performer if you actually go to see. Maybe the limitations are as what your colleague was just highlighting in terms of scaling up of business and trying to maximize the operational efficiency. That's something we don't have coverage on Rallis India, so I won't give a specific buy, sell and hold. In specialty agrochemicals, I think you have names like Vinity Organics, PI Industries, you have Pidilite, which look very, very promising from a longer time horizon.
Thank you, Gaurang, for that view. The next thing we're going to talk about is the Trump impact, especially on India. Donald Trump is all set to return to the White House and become the 47th president of the United States. Today, 10:30 p.m. is when he'll be taking part in his official ceremony. And the new U.S. presidency can impact India. I'm going to talk about a little more sector specifically. First, I want to talk about the policy proposals that have been highlighted by Donald Trump during his election period. First of all, policies are relatively expansionary in nature. Something like lowering tax rates for corporates is also on the cards. Something that stands out is the tariff hike. He's proposed 60% or higher tariffs on China imports and maybe 10 to 20% tariffs on the rest of the world. Mass deportation of illegal immigrants as well as increased influence over the feds is what we've picked up from commentary. Now, in terms of the impact on Indian economy, well, as per Nomura, the economic impact on India could be limited. The GDP growth may be only impacted by 0.1 percentage points from a lower perspective. We could gain from the ongoing supply chain shifts from China, and Nomura also states that India bonds may benefit from lower risk premium, and we are well prepared to handle the kind of volatility from the US policies. In terms from a sectoral impact, I just want to know there are a lot of moving parts in anything we're talking about. The official, moves have yet to be made, but for the IT sector, it could be limited. The IT service players are much more insulated from anti-immigration policies and have localized their workforce since the first term of Trump. But the key risk is the Fed rate cut pathway, which is what US discretionary spends are on. When you talk about IT stocks in focus, you have something like a TCS, Infosys, and HCL Tech, which have anywhere between 50 to 65% of their Q3 US revenues coming from the region. You have Wipro, 63% of their Q3 revenues were from the US. LTI Mindtree, high exposure with the US. If you could just get the stocks there, a 74.7% of your US revenues, and a Tech Mahindra 23%. Next up, you have the pharmaceutical companies. Uncertain impact because there are two parts of the card. You have increased competition in the generic business, which could have a negative impact on companies, and expansion of the Medicare program beneficiaries could be a positive. So some of the pharma stocks in focus, you have a DRL, a Lupin, a Sun Pharma. All of these companies have over 30% exposure to US revenues as a total of their FY24 sales, as well as a Cipla and Torrent Pharma, which are notable mentions. In terms of oil and gas, there are certain Trump policies that are they're pro-oil and gas policies that could lead to bearish sentiment in global prices. Trump has promised to kind of put an end to the Russia-Ukraine war as well as the tensions in the Middle East, which could lower the geopolitical risk premium that crude prices are currently factoring in. In terms of beneficiaries, it's positive for your IOCL, BPCL and HPCL because it could increase their marketing margins. It's negative for, something like an ONGC and Oil India, which because it has lower crude oil prices, and it's also could be positive from your gas stocks like Indraprastha Gas or MGL because lower LNG prices will help margins. Up next, you have the auto ancillary companies, an uncertain impact because increased tariff on China could benefit the Indian players in terms of rising export, rising share in terms of US, but any stricter tariff restrictions for India could also have a negative implication. Companies can counter some of the risk by kind of localizing their assembly plants in the US, but any full-scale operations in the US could also have an impact on return ratios. Some of the auto ang stocks that have a significant exposure to the US, you have Sona BLW, 40% of their revenues in FY25 came from the North American region. Bharat Forge, 25% of their revenues came from the USA in FY24, as well as the Balkrishna Industries, where 18% of their revenues came from the United States, from the North America region, in FY24. Then lastly, you have the textile companies. Imposition of trade barriers to China could benefit Indian companies. Better economy in the US could help in terms of the retail sentiment for textile. India currently has an 8.3% market share. Stocks in focus, well, you have something like an Arvind, a Gokul Das, as well as a Welspun Corp that could see some kind of impact. And lastly, of the solar module makers, uncertain impact because higher tariffs on China will benefit Indian players. However, if there are any tariffs on India, that could have an impact on their profitability. You have something like Warrior Energies, which is in focus. Over 50% of their FY24 revenues was from the US markets, and Premier Energies, large solar cell exporter to the US. But Gaurang, I'll come to you. If you had to pick a theme in terms of the Trump trade or some sector that you feel could, benefit or be negatively hit with the new US presidency, what would it be?
There are a lot of pieces of puzzle which are in the air, and they need to settle down at ground. And they will only settle down once we have clarity in terms of what Mr. Donald Trump does as and when he assumes the Oval Office, starting tomorrow onwards. So, there are concerns, but 2-3 points that I would be very, very keenly watching out for. One is to put an end to the geopolitical situation, Ukraine-Russia. And what kind of assistance or help or contribution does Mr. Trump provide to the situation in the Middle East? China-related policies and tariffs, if that has to be put at work, then I think it could turn out to be benefit India and the rest of the APEC regions and countries. And of course, tax cuts that he has spoken about in US. I think if he does that and he puts the tariffs that he has spoken about, the pre-election in US presidential election of tax cuts in US and tariff hike in certain percentage, then this equation will put Mr. Powell in a very difficult situation because that will lead to inflationary pressure. And that will lead to the entire framework that Mr. Powell has decided in terms of rate cuts and the time frame. That will go out of the window. So what I'm trying to say is political leaders across the world say a lot of things before the election happens. Post-election, if they happen to win, I think they mellow down. So let us wait for him to, assume the Oval Office and see what kind of policies they make. I think then we'll take a call. But I will still, as a brokerage house, will still be positive on two themes that you mentioned, IT as well as pharma.
Okay, so IT and pharma to watch out for in terms of the Trump trade. But with that, it's a wrap on this edition of Top Trades. But do stay tuned to NDTV Profit. And Gaurang, I want to thank you for joining us as well and giving our viewers the outlook for whatever you're talking about. But with that, it's the end on this show. Thank you from me and everyone who put this show together. Stay tuned to NDTV Profit. Lots more lined up on the other side.
Everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming Union Budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably, the July budget increased the standard deduction to 75,000 and revised both tax slabs and rates. Under the new structure, income up to 3 lakh is tax-free with progressive rates ranging from 5% to 30% for higher income tax brackets. As Budget 2025 nears, there are growing expectations for reforms aimed at easing tax compliance, particularly for NRIs, that is non-resident Indians. Here are the key suggestions highlighted by Deloitte. Firstly, simplifying the tedious process for property transactions involving NRIs. Currently, buyers must withhold tax at a higher rate, obtain a TAN, and file ETDS returns. Introducing a challan-cum-statement system similar to residential transactions could streamline the process and reduce the burden on buyers. Second, enabling tax payments from overseas bank accounts. Presently, tax payments must be made through Indian banks, making it cumbersome for NRIs. Allowing payments from foreign accounts would enhance convenience. Third, improving e-verification by extending OTP options to foreign mobile numbers. This change would simplify tax filing for NRIs, reducing paperwork and eliminating the dependency on Indian mobile numbers. Lastly, facilitating tax refunds to overseas bank accounts. Refunds are currently credited to only pre-validated Indian accounts, which can be problematic for NRIs who no longer maintain accounts in India. Allowing refunds to foreign accounts would ensure timely processing and avoid issues with dormant accounts. These measures would not only simplify tax compliance but also make the system more accessible and efficient for NRIs. So here's where we stand. The last Union Budget didn't shake up the old tax regime, but did make the new one slightly more attractive. But will Budget 2025 bring bigger changes? Will we finally see reduced tax rates or higher exemptions? Only time will tell. Until February 1st, the speculation continues. But what do you think? Drop your thoughts in the comments below and do not forget to like, share and subscribe for more Budget 2025 updates. See you next time.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is my Varsha Jani. And good day for markets, I would say. Let's look at the Nifty 50 intraday as well. 0.6% higher as we speak. Around 23,350 odd is the level that we're currently looking at. Even the Sensex 500 plus points higher. The Nifty Bank is where a major part of that move is, and we'll take that on as well. But intraday Nifty 50, when you're looking at the chart, off the lows surely, and we're very, very close to the day's high at this point. So just about 50 points from the day's high. So it's a good day. Let's look at the heat map. Try and zoom in to names which are doing well. And you'll see a lot of lenders in that top 5-6 odd stocks that you'll see. Outside of a Wipro and an NTPC, seeing Kotak, Bajaj Twins, SBI doing very well in trade. The heavyweights, even ICICI, HDFC chipping in and contributing. So it's a good day where lenders are concerned. What's not doing well, and SBI Life, after it posted its numbers on Friday, which was a decent set, brokerages have come out, given their guidance, but the stock is down 3% as we speak. You have a Shriram Finance as well, which is languishing in trade, and HDFC Life. So it's a day where financials are playing two different games at this point. So one in major decline and one at the high point at this point. So that's how it's playing out. Let's look at also some names which have declared numbers. You have a Tech Mahindra which has declared numbers. You have a Wipro. Flattish kind of move on Tech Mahindra. Axis Bank post the Friday move is also largely flat, slight positive bias if at all. Let's look at the contributors and you'll see some of the heavyweights also doing fairly well. Kotak contributing 50 plus points to the Nifty. HDFC also, ICICI, SBI. So it's all the banks on the green side. And on the red, you'll see TCS, ITC, Trent and M&M. So shaping up into that kind of a day. Let's look at the advanced decline before I move on to the Bank Nifty, cover that as well. The advanced decline, the breadth looking solid, 2:1 in favor of the advances. It was a jittery start. But as the day has progressed, there's more and more confidence getting built in. That's the key positive that I would look out for on a day like this, 20th of January, where a new president is going to be sworn in the US. Let's look at the Bank Nifty as well, and let's look at it intraday. There you go, where it's gone from strength to strength as the day has progressed. Let's look at all the contributors on the Nifty Bank. All of them sitting in the green except maybe an Axis which is trading absolutely flat. But otherwise, all of them sitting in the green. So it's a clear day where lenders are outperforming by a bit, except those with any amount of asset quality issue. Axis and IndusInd largely flat. But Mahima, broader markets.
Right, let's pull up the broader markets and see how they're faring out in trade today. Well, in comparison to the benchmarks, we're seeing, a decent amount of gains with respect to the mid-cap 150. It's up around 0.6%. Let's pull up the small-cap 250 as well. And in fact, they've recovered from its day's lows, both the mid-cap 150 and the small-cap 250. Small-cap 250 is almost 0.8% up as we speak. Let's pull up some counters, though, which are in focus. Indian hotels, Q2 numbers, very decent. In line with the estimates. Profit also did beat the estimates, but the street doesn't seem to be very excited about that. Let's pull up an Indian hotels and see that what it's doing. It's down around 3%. ICICI Lombard, on the other hand, has done pretty well. Net profit up 67%, net premium income up 17%. We're seeing, the gains cool off for the day, but it's down around 0.9%. Kotak Mahindra, as Harsh mentioned, a good set of numbers for the company, and we've seen that in the stock performance as well, up around 9% right now. The net profit was up 10% for the company. The net interest income margin was up around 10% for the company as well. What's worked, core business growth holding strong, NIM rose sequentially, and slippage is lower than expected. RBL Bank is another counter which saw a lot of pressure in the early trade, but right now it's cooled off a bit and it's turned into green. It's up around 0.12%. It's also called Rallis India on the back of its earnings. Crop care revenue was down 13%. Overall, the set of numbers, revenue down 13%, EBITDA down 28%. Margins have taken a significant hit, and net profit down around 54%. Lastly, Netweb Technologies, revenue was up 23% and net profit was up 18%, which is why, but again, the street doesn't seem to like it. Either it's the market sentiment or overall, we're seeing a downtick of around 6% in Netweb Technologies. But with that, let's welcome in our guest for the day, Avinash Gorakshakar, Director Research at Profit Mart Securities, and Brijesh Singh, Senior Technical Analyst at Opulent Investment Advisors, joins us now. Welcome to both of you, gentlemen. A very good afternoon to you. Brijesh, how are you reading the markets right now?
Good afternoon, Mahima. See, overall sentiment of the market right now, it's on the pullback rally. Nifty from a level, as soon as it broke under 23,500 on the closing basis, we have seen a sell-off, and that sell-off lead to a low of 23,044 around. The previous low has been broken. Now still 23,000 psychological support was been holding, and if that thing breaks, then another 200 to 300 points of downside can be seen. But anyhow, the overall structure of the chart right now looks for the pullback, and that pullback can go up to the level of 23,500. That is another the level from where the trend got changed, and if that thing crosses, then another 200 points of upside can be seen. That is somewhere around 23,700 or 750 marks is a level of a resistance. Where the support is being considered, immediate support for the Nifty lies at 23,200 followed by 23,000 marks. I feel that this week we might be in the range of 23,000 on a downside to the 23,750 on the higher side. If I narrow that range can be 23,200 to 23,500 or 550 on the higher side. So the trend look little bit towards the buyer side or the pullback side. Regarding the bank Nifty has been considered another 1,000 point of flare or 900 points of pullback has been seen, and that 49,400 around has been trading. So immediate resistance is at 50 to 100 points, 49,500, 550 around. But the tough, if you ask me, then I'll say that 49,850 to 50,100 is a range where the resistance lies, and from there we might see again a downside for the bank Nifty. So till now it's on the pullback side. Support wise, again psychological mark 49,000 would be as a support. If that thing breaks, then 49,800 would be coming the play. So the broader range for the bank Nifty has been considered 48,800 on the downside, followed by 49,850 to 50,000 on the higher side. Trend again for both the indices is right now on the pullback side.
More on the pullback side is the trend. Avinash, what do you make of markets at this point? And what do you believe could be immediate areas which could interest or enthuse the market, given that you'll have a Trump swearing in today?
Yeah, I think good afternoon, Harsh.
Good afternoon.
See, my sense is that I think today's swearing in is important, but after that, what are the kind of policies which come from the new US president are very important. Clearly, the kind of tariff, walls, the kind of tariff indications which markets are getting, I think markets would obviously be happy if there are some more restrictions on China, because indirectly, whenever China is hurt, India gains. So I think clearly in the very near term, I think one will have to look at what kind of policy regulations come out and what are the new kind of regime rules which Mr. Trump announces. And there are indications that very soon, these announcements could be made. So I think markets are closely going to watch the commentary from Mr. Trump. And I think whatever is said against China or typically on Canada and or many other countries where basically US wants to take a very strong stance are something which are going to be immediately heard by the markets. And of course how India's IT sector or the pharma sector gets a rub off, because there have been indications that the pharma sector is also closely watching how developments happen in the US market. For India, pharma companies, US is a very large market. So I think you're going to see a lot of news-based commentary coming in the next few weeks. So I think these would be the things which would be immediately looked upon from the market point of view. But broadly, I think we should be in a sweet spot. I think India definitely is unlikely to be impacted very significantly in a negative way. But I think broadly, since the earnings season is going on, you mentioned about bank quarterly numbers. I would believe that large corporate numbers are yet to come out, and Harsh, I think this is going to set the tone for the markets. I think up till now the numbers have been more or less on a mixed side. No great surprises, but there have been big disappointments on the banking side. Specifically, if you look at numbers from RBL Bank, a big loss, and obviously something which the market had not expected. So I think overall it's going to be the numbers which are going to do the talking initially, and thereafter I think it's going to be the regulation and the macro policy, how global events stack up.
Earnings in focus is the view coming in from Avinash. Brijesh, I'll come to you for top picks of the day.
Okay, so I have two picks right now. As I said, the trend is for the pullback. So the pullback, and that too, we have seen some buying in the hotel stocks. So in that, Lemon Tree comes in the mind right now after the swing low of 134, where the 200 moving average live. From there we have seen a pullback rally. 146 around it's been trading. Anything below 145, one can take a long position in it with a stop loss of 138. Play for the target of 158 to 160. Time frame to hold the counter would be at least for 3 to 4 trading session. And another counter on the buying list is Saregama. We have seen Saregama, higher lows formation, and as soon as it, whenever it goes towards the level of 470 and below, we've seen a buying in it and sharp pullback towards the upside. So right now it's been trading somewhere around 549 around. So anything below 548 around, one can take a long position in it with a stop loss of 525. Play for the target of 600. Time frame to hold the counter would be at least 3 to 4 trading session.
Okay. All right. But let's quickly switch focus to the stock of the day. And by an inch or by a mile, it's Kotak Mahindra Bank because of the kind of numbers it's posted. And, I'll try to pencil down 5 key positives, at least from the result. First off, extremely strong growth, right? You were expecting a slightly muted sort of growth given the RBI embargo. But Kotak has been able to do nearly 1.5x of industry growth in this quarter. And that stood out when it comes to how investors are viewing the stock as well as the story. Margins, well, they've risen sequentially, and it's a tough environment in terms of margins. And despite that, they've done well. And it's an environment where they've done 16% on deposits as well, YOY. And when you're comparing that and then saying that margins have gone up, it's obviously a key positive. Asset quality in a quarter where Axis declared numbers got punished for it. Slippages lower than expected. In fact, slippages have come off even sequentially. Have we hit peak of the cycle where Kotak's book is concerned is obviously still a very big question. But it seems likely so. Robust ROA delivery, 2.1% ROA. Now Kotak has done better in the past. But could this be the bottom even in terms of ROA delivery? And if by chance that the RBI embargo were to unwind, you could well see a huge uptick on pretty much all of these metrics except slippages. And therefore, ROAs may trend higher from here, maybe very likely. OPEX has moderated. That's the final point. And that's the lever which you would want to wait for where a bank is concerned. Operationally, you want to start tweaking your operational levers to ensure that there's a better number reflecting on your profit after tax during tough times. That's exactly what Kotak has been able to do. Now, these are your target prices across houses. A lot of them either upgrading the stock or either increasing the target price or both. You also had a Nomura slightly more cautious in that sense, but you're still seeing a very solid 10% rally today, but you're still seeing nearly a 10% odd return from here as well, 5 to 10%. And therefore, you know, for a stock like Kotak, a 15 to 18 to 20% upside versus Friday's close is what most of these brokerages were penciling in. But let me bring on board Jignesh Shial of Incred Capital to give us context on exactly this. Jignesh, do you believe that the cycle is turning? It's been a cycle, or it's been at least 4 to 5 quarters where good asset quality hasn't been respected in terms of how investors are viewing stocks. Is it a time when bad asset quality will get punished and stocks will get re-rated? Anyone having good asset quality will warrant a re-rating. Is that time here, according to you?
Yeah, hi. Yeah, absolutely. What you're saying is absolutely, we believe in the same way. What we have been highlighting since a while, that because there had been a rapid surge of unsecured in last previous 2 years, and RBI had been highlighting the concern over this complete growth and all, and then tightening the RWAs, everything. It was pretty much visible that the banks which had seen a rapid growth and without seasoning of that particular book happening, obviously there will be a surge in NPAs, and which is visible right now for few names. But then there are a few exceptional leaders, probably we'll say technically the large private sector banks, which might include Kotak, HDFC, and ICICI, where we do see some spurt likely, but relatively they will be better off compared to the rest of the guys, and that basically will be rewarded well by most of the investors. That is the view we are having it right now.
What are those large re-rating candidates, Jignesh? The ones which would be where the risk reward just looks very, very interesting at this point.
I think, look, basically at this point of time, staying cautious and looking at the cycle, the way the things are slowing down and asset quality is deteriorating, it's better rather than just sticking towards valuation. It's better to stick to a good quality banks altogether. That will be a better call to take it up. Obviously, Kotak had seen a kind of a hammering earlier. Now the bounce is pretty much heavier. But I think as far as other large private sector banks like HDFC and ICICI is concerned, I think they are better off. HDFC is still our topic right now compared to ICICI as well. But I think their risk reward looks to be far more favorable. Though there is a slowdown in overall numbers and all, but at least as far as numbers on asset quality and the earnings are concerned, I think there is a positive potential of relatively upsides are still left out here. So I think HDFC and ICICI are the two names. Among that, I think HDFC is somewhere where we are potentially more bullish at this point of time.
Okay, and with regard to Kotak and Bajaj Finance, what are the views coming in there from your side?
Look, I think Bajaj had been one of our topics since a while, because I think even this time also business update, what they'd given, the numbers have been pretty good. Today's announcement of tying up with Bharti Airtel is another strong move that they are taking up as far as customer addition is concerned. So Bajaj is basically growing at a pretty decent pace. Customer addition is something which is a very strong, robust numbers. We're consistently seeing it up. Obviously, being highly exposed to unsecured piece, unsecured loans and all, there are some hiccups which the company has seen, but the management has already been highlighting about the concerns which are happening on the over-leveraging side and all earlier, before the rest of the guys have started talking about it. But we believe that more or less Bajaj will fall into place and will be within the expected line what management is guiding for. And accordingly, I think Bajaj is another candidate for a re-rating possible out here.
Okay, so Bajaj could well be that candidate as per Jignesh. Jignesh, what do you make of RBL's numbers, and what do you make of Axis's numbers? Again, those were two big disappointments, right? RBL stock not taking a big knock today. But what's the sense like? They're talking about another quarter of pain. They're talking about how FY26 things will improve. They're also talking about the fact that they want to upfront a lot of the pain into FY25. Do you expect this cycle to, do you see downside risk to that guidance, net?
No, there is, we do see downside risk to this guidance is possible because the extent of, the problem is over leveraging, and that is more visible in case of MFI. So how that book is going to shape up, not only for RBL, for the sector as a whole, for almost all lenders across, that the possibility of negative surprises are still likely. And along with it, RBL also has a significant or a sizable portion of unsecured as well. So definitely they are trying their best to bring up the whatever potential losses are possible. Upfronting it up is something that most of the management, not only RBL, most of the management will try to do it up. But the negative surprise, specifically on the microfinance side, is likely to happen. So there is a potential downside risk to or negative surprise risk to this. We will still build it up until the time we don't see some light at the end of the tunnel, at least specifically on the microfinance segment side.
And what do you make of Axis's numbers? They are quite uninspiring.
Yeah, I mean, there I think microfinance is not much of a problem, but what we believe is there also for Axis, the bigger concern that we have been highlighting earlier as well had been that the secured retail asset growth and secured or basically retail deposit growth had been a sluggish. We have been seeing a kind of sluggishness in that particular trend for a while. Unsecured had been doing pretty aggressive. They have built up the unsecured book quite well in last 2 or 3 years. But secured retail assets and retail liabilities are where they were lagging compared to most of the large banking peers. So Axis is something which is top 3, top 4 private sector banks in India, and compared to ICICI and HDFC, they were basically lagging into building up that retail franchise altogether on the asset side as well as on the liability side. So I think the seasoning of the unsecured book definitely will take its own sweet time. So probably there could be 1 or 2 quarters of pain might be there. They are better off compared to the other smaller mid-size private sector banks, but at least at this point of time, we'll wait for to see or understand the kind of pain that the bank carries, and then probably we'll have a fresh look at it. Till then, probably we'll prefer to stay cautious in this name.
Okay, staying cautious there with regard to where Axis as well as RBL is concerned. Thanks for that, Jignesh. Good having your views. Thanks for coming in and speaking with us. But let's actually do a thing. Let's slip into a very, very short break. Stay tuned. On the other side, we'll take views of Avinash as well as Brijesh. And we'll also talk to you about a new segment which we are going to start today. So stay tuned.
Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
I present the budget for a historic.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your...
Welcome back. You're watching India Market Close. Let's pull up the benchmark indices and see how the markets are faring at present and how they've fared since the past half an hour. Let's pull up the Nifty 50 and Sensex. Nifty 50 is pretty much trading, in green and almost at its days highs, nearing its days highs. Let's say 0.6% higher. The Sensex is also hovering about those levels. It's up around 0.7%. The broader markets are seeing a good amount of gains. The mid cap 150 is up 0.7%. The small cap 250 is hovering around the same levels of 0.8%, but at its days highs as we speak. Let's pull up some stocks and see how they are faring out in trade today. There's United Breweries, Kalyan Jewellers. All of these stocks in green and trading positively. Kalyan Jewellers up 7% after Motilal Oswal clarifies, and we'll bring you more details about it on the show going forward as well. UBL, that is United Breweries, has started again beer supply in Telangana, which is why it's up 5%. There's Global Spirits, which is also doing well in trade today because the government, the Consumer Ministry has said that they've lowered the per kg price for rice, which is used for ethanol production for them. and the stock is up 17% on the back of that news. Couple of other stocks that are trading is Kotak Mahindra on the back of earnings, Rallis India on the back of earnings again. All of these counters in green and up and above in trade. Let's also pull up the sectoral heat map and see how that's faring out in trade. And after that, let's pull up the Nifty contributors. There you go. It's a good day to see, all greens on those blocks and all the sectors, in green and it's a beautiful sea of green rather than sea of red. Let's now move on to our new segment that is Heard on the Street. Now, we all know there's always a lot of chatter in the dealing rooms about what's buzzing and why. From today, NDTV Profit brings you all that and more with my colleague Soumit Saka. Soumit, what did you find out today?
Well, a host of stocks that have been buzzing in trade, Mahima, but few that have caught our attention. Firstly, it's Dixon and Zomato. Both the counters are seeing strong buying action coming in from the HNI desk ahead of the Q3 numbers. Now, a few days back, both these counters had taken a beaten down because of their specific stock-specific reasons. But now traders are believing that the negatives are quite priced in, and a strong buying action that we are seeing from the HNI counter. Couple of other names that are seeing strong FII flows. In fact, both are PSU names, that is Bharat Electronics and SBI. Both these counters are seeing strong FII flows in trade. Other than that, there is Tata Steel and JSPL that also remains in focus. Buy flows seen in both these steel counters. Now, domestic funds have been active buyers, and dealers are indicating that in the next 1 week there could be a positive announcement that could come in form of some duties when it comes to steel as a commodity, and that's the reason why there has been buying interest in both these steel names. And lastly, if you look at there's Shriram Finance that is in focus now in this month or in 2024 so far. If you look at this stock, it's down around 17% odd. Post this fall, dealers or traders are indicating that there are buying interest that we are seeing from DIIs and HNIs at this lower levels. Both the desks have been actively accumulating these counters. Now, earlier channel checks indicated that there could be some delinquencies when it comes to commercial vehicle segment, and there's also concerns of slower growth. But now channel checks are indicating that these delinquencies are most likely when it comes to the light commercial vehicles. But Shriram Finance usually deals in heavy and medium commercial vehicles and passenger vehicle segments. So not much of an impact that could come in for Shriram Finance, and hence some buying interest on lower levels that we are seeing when it comes to Shriram Finance as well.
All right, thank you so much for breaking that down for us, Soumit. Moving on to the technical aspect of things, but before I go on to that, Avinash, quickly your take on everything that Sumita said. Anything that you found interesting?
No, I think as far as Shriram Finance is concerned, I also concur with the view that maybe the Jan to March quarter is going to be a good, strong pickup quarter. I think December sales have been pretty moderate to positive. So I think, normally the January to March quarter is supposed to be a good kind of, period for almost all classes of automobile, sales. So I think if typically the OEM sales are good, I think Shriram Finance actually gets a kind of a rub-off effect, from the OEM sales number. So clearly Shriram sales at 1.5 times is definitely not a bad investment proposition. It's got a very solid asset portfolio, a very good asset quality track record, and a very good, geographically, kind of good penetration ratio. So I think, if one were to look at the next 12 to 15 months, hopefully once the economy picks up, we have better GDP numbers, more infra spending. I think Shriram Finance can definitely be looked upon as a good value pick, at the current odd level. So I think, of course, some news has to come in, and I think we need to get more stronger numbers. But at these levels, I think most of the risk seems to have been factored into the price. So I think Shriram Finance looks interesting. I think we need to get more data points, possibly, which could possibly lead to a little more re-rating in the stock.
Okay, so some data points required. But Brijesh, if I can come to you on any of these, Soumit pulled out a largish list. Any of those on your radar, and anything that's looking interesting?
So as if I was just looking the chart of the Shriram Finance, concluding that thing only. If we see the chart, hourly front, daily front, and the weekly front, no doubt the lower tops and lower bottom formation has been seen in it, and it has been trading below the 200 moving average. Now in today's session, we have seen stock making, it's in the process of making a hammered candlestick. Generally hammered candlesticks or doji, they are used for the reversal purpose. That is one part, followed by the volume. So usually the volume, average volume which has been there, the volume breakout has been seen. So not at the present rate of 515 around is a buying price. Let it go and again retest the level of 490 to 500 in that odd level. Then one can take a buy call in it with a strict stop loss of 470 and then play for the target of 570. But that would be taking time, because that 570 is where the 200 moving average lies. So whenever such thing happens, whenever the base formation happens, whenever such type of candlestick formation has been there, we see that after that volume breakout happens and it try to touch that 200 moving average on the daily time frame of the chart. So probability below 500, again one can look out for the buy side with a strict stop loss of 470.
Okay, so that's the view coming in. Thanks so much, Brijesh, for joining us this afternoon. We'll let you go on that note. But you know, I also want to ask, you know, if you can, if Avinash, you can tell us that what's the sense like when it comes to the financials pack? What do you make of the Kotak numbers? What do you make of the RBL as well as the Axis numbers in contrast? And banks are flying today, while on Friday there was immense drag on the Nifty bank. So you believe we are turning a corner in that sense?
So I think, Harsh, it's too early to give it a thumbs up on the banks. My sense is that if you look at the Axis numbers, if you look at RBL Bank numbers, I think RBL Bank was a big disappointment and a horrible number, because I think for the first time they recorded a loss. As far as Axis is concerned, a 3 to 4% growth in the profit was something which the market was not happy. And I think clearly the next quarter is also going to be equally challenging. The management commentary was also clear that when the economy is under a strain, I think it's very unlikely that banks would do well. So I think maybe till the time the GDP growth numbers don't go up, and I think till the time we don't get clarity on the kind of credit growth and the deposit growth rates numbers, I think clearly the larger banks are going to face a little problem in disbursing and actually recording a stronger set of growth. I would say that some of the banks like PSU banks have done pretty well. I think banks like Bank of Maharashtra reported almost 40% growth in the profit, a 1400 crore bottom line compared to 1000 crores in Q3. Their CASA is almost 50%. So I think there have been some exceptions, but I think overall my sense is that banks are going to find it equally challenging, because clearly I think when the economy slows down, you cannot expect banks to run up significantly. So you'll have to face a little bit of consolidation. I think the NBFCs will have an increasing amount of pressure, specifically those which are into the MFI kind of business, and where I think the first set of numbers, pure MFIs, could possibly throw up a lot of negative surprises. So I think you'll have to be careful there. But I think it's better to wait for the entire set of Q3 numbers and then take a proper review. But as of now, I think it's a mixed set of numbers, nothing great. Which can actually re-rate these companies.
That's an interesting take, from the banking space. But with that, let's welcome in Hemen Kapadia from DR Choksey FinServ. Hemen, a very good afternoon to you. How are you reading Nifty and the Bank Nifty?
Very good afternoon to you. Thank you for having me on the show. Always a pleasure. Well, last week we've not done much. We spent 5 trading sessions. We broke down from 23,100 once, but we recovered, and since then it's been 23,100 and 23,400. So frankly speaking, nothing has changed. The oversold situation remains. In the near term, we need to close about 23,400. That happens, we see semblance of a recovery coming in. The VIX at 16.38 does not portend well. The Bank Nifty, which has been a bugbear of sorts and has been continuously been responsible for the continuous pressure on the Nifty, is recovering a bit, but it needs to close about 49,800. So frankly speaking, I would be cautiously optimistic. Oversold situation, a small base formation seems to be forming. I'm saying forming, but it hasn't yet formed. So I suggest a stock-specific approach, because, okay, we are a bit far away, but we have the monthly expiry, then we have the budget, then we have the Delhi elections, and then we have the credit policy. I know that's 2 weeks away, but I guess because of that, we are seeing the VIX at an elevated level. So levels need to be overcome. On the flip side, 23,100 needs to hold for the Nifty and 48,200 for the Bank Nifty. So yes, so it's sort of going nowhere. Mild stability scheme. Let's hope the levels hold.
And your picks at this point, Hemant?
Okay, Harsh. Couple of stocks which are buy calls. Firstly, a buy call on Dabur. FMCG is oversold. Dabur has been consolidating for the past 2 months almost. Rounding bottom in place. Oscillators on the weekly chart are giving crossover buys. Positive divergences. Though we need a breakout, but that's on the anvil. So buy on Dabur at 520, stop loss 505, target 550. Second one is Reliance. It's come off a 6-month 400-point fall. I believe a double bottom formation is in place. I'm saying it's in place because we need to cross a valley high to confirm this. But yeah, a double bottom formation is in place. A close about 1330 should trigger off a decent, if not a good upside. A recovery is what we are playing for. So a buy on Reliance at 1300, stop loss 1270, target of 1370.
Okay. I want to also try and take a view, Avinash, with regard to Bajaj Finance and Finserv. They're running away in trade today. What's the sense like? Do you expect some part of the re-rating to start to play out, or you believe that still overvalued? What's the sense like?
No, I think in terms of their business outlook, my sense is Bajaj Finance should come out with a decent set of numbers. I think the markets would obviously, like to know the management commentary and the kind of outlook which they would share, for the fourth quarter and the current financial year, that is FY26. But I think overall, numbers are going to be much better than what the street expects. And I think they are luckily in the right segment. They have the right pricing. And most importantly, unlike the MFI business or maybe the banks which are into long-term lending, this is a segment which is growing quite rapidly. In fact, in the October to December quarter, which is normally a festive quarter, I think you could see a lot of disbursals happening, on typically on products and services which they normally finance in a big way. So my sense is that, going forward, what kind of growth number and what kind of, asset disbursement which they are targeting, because clearly competition has increased, with new players coming in the market, obviously competition has increased. I mean, how they are looking at competition and how they are going to be able to carve out their presence in the market by better pricing is going to be now a crucial game. And clearly they have been, looking at digitization. So what is the kind of progress on their digital strategy? That is also something which the market would like to know. So I think net numbers are going to be good, but how the management, strategizes its efforts in the going 12 to 15 months is also equally important. That would be interesting to watch out.
All right, Avinash, I believe we have to let you go now, but thank you so much for taking your time and speaking with us at NDTV Profit. Always pleasure having you.
Thank you.
Right now, let's shift focus to the IPO that got listed today. That is Laxmi Dental. It got listed with a premium of around 26%. Let's pull up the gains till now and see how it's faring out in trade today. There you go. It's 27% up, and so it's upholding its premium, at which it got listed. Now we got a chance to speak to Rajesh Khakkar and Sameer Merchant of Laxmi Dental after the company's strong D Street debut. Listen in to a conversation where they spoke about margin trajectory.
It's all, as we mentioned, that automation and the digitalizations and the last 2-3 years we have introduced new products. So it gives us a good edge to increase the margin and to do the good business. Otherwise, Sameer can add here.
And sure, to add here, if you see historically for us, like you said, the margins have grown. It's a hybrid mix of couple of things. It is automation that we have put in post-COVID, where we are trying to automate as much as we can to be ready for the next level of scale. We are digitizing a lot, which means the dental impressions, which is typically physically taken by the dentist. We have added a lot of digital scanners, and we are taking that route to automate as well. Then third is a profile mix of our pediatric, our aligners, and our crowns and bridges and dentures. That is also changing as we speak, and coupled with that, our international expansion as well. So it's a mix of a lot of hybrid process that we have done through a lot of hard work pre-COVID and during the COVID, which is bearing a lot of fruits right now.
Okay, so that's of course Laxmi Dental listed at a 27% gain for investors who got the IPO. Siddharth Khemka also joining us, Head of Research and Wealth Management at Motilal Oswal Financial Services. Welcome, Siddharth. Siddharth, quick question with regard to IPOs. There's been, of course, a flurry of IPOs at the latter half of 2024. Been slightly more muted to start 2025 off, given the way markets have gone, not a surprise. But what's the sense like on this one in particular, if you have coverage, and if not, what's your sense on IPOs in general? Is a little bit of the manner in which IPOs have come about also one of the reasons why liquidity has gone more towards IPOs, and therefore markets have, in that sense, not been able to benefit from flows?
Yeah, hi, good afternoon, Harsh. I think if you look at the overall IPO market, it's the reverse, I would say. When there are flows, the IPOs will come. And with the liquidity drying up towards the market, I think that is why the IPOs have also to some extent dried up because the valuations have come off from the highs. We have seen that both for the market, Nifty itself, for the mid cap, small caps. And at this valuation, I think some of the promoters might want to wait and watch and see the market stabilizing before getting into the IPO mode. Nonetheless, we have seen very good subscriptions from some of these IPOs that have hit the market. The one that you were discussing, Laxmi Dental, we were one of the merchant bankers to the IPO, hence cannot give a view. But as you see, the subscription numbers clearly come out strongly for stories or for businesses which do offer a value proposition for the investors. So our view is that once the market stabilizes, we'll see the return of IPOs. Some of the large IPOs are still slated. Every year we are seeing some of the large IPOs now hitting the market. So that would continue in the calendar year 2025 as well, because the liquidity continues to come in. We have seen again from a domestic mutual funds inflows wise, the SIP inflows of 26,000 crores on a monthly basis. You have a lot of other inflows also getting into the market. So those inflows need to find supply of new papers. Otherwise, then the valuations in the existing markets will start going up. So I think it's a very good mix of, you can say, primary issues. There are a lot of secondary issues in the market as well, with promoters cashing in on this liquidity flows and taking a exit route from either in form of QIP or in form of FPOs or in terms of block deals that we have seen. So again, as I said, this quarter results would give some indication of the market stabilizing. We will have the budget coming on the 1st of Feb. That should also give some assurance to the overall economic growth perspective. And once the market stabilizes, things should look better.
Right. Now, it's time for top 3 stocks of the day. All 3 stocks that are buzzing today are, from the consumption space. One is a part of a jewelry retailer and the other 2 are alcohol beverage stocks. I start with Kalyan Jewellers. The stock is buzzing on the back of a clarification given by Motilal Oswal. They've dismissed rumors suggesting that its money managers were bribed to invest in Kalyan Jewellers. They've labeled these allegations as baseless, malicious and defamatory. Overall, mutual funds, have an exposure of 9,291 crore in Kalyan Jewellers, out of which Motilal Oswal mutual fund has an exposure of around 5,025, which amounts to around 5.9% of their total AUM. So nearly 54% of total mutual fund exposure. Now, just to give context to viewers, social media speculations were taking place over fund managers at Motilal Oswal AMC being involved in such misconduct, but they've come out and clarified that this is not happening, which is why finally some relief in Kalyan Jewellers stock. The stock tanked over 30% in the past few days, but today we're seeing gains of about 7 to 8% on the stock. The next one from the alcohol space is Global Spirits. Now, Consumer Affairs has notified reduction in price for rice, and this is rice that is used to supply to ethanol distilleries. The price has been reduced to 22.5 per kg from 28 per kg. This basically means that Global Spirits and the likes will be able to have a lower raw material cost, which will overall boost their margins as well as boost the bottom line as well. Now, the next counter that is in focus is United Breweries. The company had previously banned supply of beer to Telangana Beverage Company, which is a wholesale supplier of alcohol in Telangana, and this was because of pricing issue. The pricing had not been revised since 2019 and the payments being overdue. Now the company has come out with a filing saying that they have now resumed the beer supply to Telangana Beverages Company with immediate effect, and they have said that they've been in a constructive discussion with Telangana Beverages Company, and they've the company is assured to address United Breweries' concerns and issues over pricing as well as the outstanding payment. Siddharth, I'll come to you again for this one. How are you reading, as to everything that has happened with United Breweries especially?
Yeah, I think if you look at, as you rightly said, the company had initially stopped supply in Telangana because of the lack of price revision, and thankfully so some of the southern states in India are large consuming states, so it becomes a big impact if you are not present there. Thankfully, again, they are coming back, and I would say that it's a positive step for United Breweries. Between the two, United Breweries and United Spirits, we have a more positive view on United Spirits, given their increasing exposure in the high margin premier and premium brands, where they are gaining market share. They have recalibrated their products as well as presence, and with the new leadership, I think that business should continue to do well.
All right, and Hemant, with respect to Global Spirit, I mean, it's gone up to 17% today. What next on the charts?
Well, frankly speaking, if you look at the charts for the last couple of years, notwithstanding this sharp move today with a gap up, but it's not made much of headway, because if you look at the price range from May 2022, okay, it's a pretty large range. It's around 680 on the downside and probably 1350, 1400 on the upside. But we've been here for what, 22, 23, 24, 25. So we are heading towards May for almost 3 years and counting, and we're here. Okay, big range, but here. So we could be giving an upward bar reversal on the monthly chart, but that doesn't mean much. We need to overcome 1000. But yes, till we don't break out of the range, okay, the downside doesn't seem to be in the cards. But if and when we take out the 1350 level is when we make significant headway. I know that is 50% away from here. So right now, not much to lose, but it would be more of a trading thing rather than a longer term view at this point in time.
All right. Siddharth, what about Kalyan Jewellers? We saw a 30% tanking in the stock. Once, it was one of the most favorite stock for the momentum traders, but then we saw a significant amount of selling over there. But today the stock has seen some recovery. Still, there's a lot of recovery pending with respect to how it's fallen. But how are you, reading this clarification given by Motilal Oswal?
So I think the press release and the clarification speaks for itself. In terms of business, I can say that the management definitely came back last week, both on the media as well as in a con call, and refuted most of the claims. It is very difficult for a management at the size of the company to hide things like this. So I would right now would say that we need to definitely wait and watch. If investors are looking at fresh investments, maybe one or two more weeks of clarity to emerge, that things are pretty clean in that sense, because there is no dent in the business per se. If you see the Q3 business update has been pretty strong, and they continue to deliver strong results, both in terms of same store sales growth as well as in terms of addition of new stores. Plus their business in the Middle East has been doing very well. We have the large wedding season in Q3 as well, which is supporting the earnings. So I would say we would wait for the earnings to come out and then maybe take a fresh call on the stock.
Wait for earnings to come out and take a fresh call on this one, but let's take a quick break. On the other side, we get you top BTST ideas, and we'll do a quick bull versus bear. We've not covered IT in a big way today, Mahima, and on the other side, we'll do just that. Stay tuned.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with.
Welcome back. You're watching India Market Close. Before we move on to our bull versus bear segment for today, a quick update and a much awaited verdict on the RG Kar rape and murder case. Convict Sanjay Roy from Kolkata has been now sentenced to life imprisonment and has also been charged with a fine of 50,000. And this is on the first and second charge, and on the third charge was the one with the life imprisonment. So much awaited verdict, like we said, finally some justice to the the rape victim who suffered so much. But now with that, let's shift focus to our bull versus bear segment today. We put the spotlight on Tech Mahindra. Rucha joins us with more details.
I'll start with Tech Mahindra. This is our focus today for the bull versus bear case. Number one, I'll start with the Q3 updates. What went wrong and what went right with the company in the third quarter? Well, on the bullish side, we have revenue and profits which were actually below estimates, but margins were above. So numbers were largely good in terms of quarter three. However, new deal wins TCV was at 745 million, up about just 24% quarter on quarter. But let's move on and talk about the kind of growth in BFSI, that is verticals angle. Very good growth in the banking space is what we could see over here, up about 8%. Now remember that this was called out by the other IT guys as well. But communications has remained weak, which is one of the largest verticals for Tech Mahindra in terms of revenue composition over here, down about 5.6% year over year basis. So this one is bad over here. But on the demand front, well, the company mentions that CY25 will be better than calendar year 2024. However, all this will happen at a very slower pace, because though they are seeing uptick in discretionary spends over here, but not a V-shaped recovery, but a gradual recovery is what Tech Mahindra has called out for. And lastly, let's look at what kind of analyst recommendations are there over here. Definitely a kind of, mixed sort of stance with 24 buy calls, 8 hold calls and sell calls at about 14. Return potential just 3.5%. So most of the analysts here are waiting for communications to revive, which none of the other IT companies as well have called out for. So largely this is the case with Tech Mahindra. Mixed set of numbers over here, but we'll wait and watch what CY24 has for it.
Okay, so that's, you're looking at Tech Mahindra on a bull versus bear basis. But Rucha, give us some context. What stood out for Wipro? Because, the kind of move on the stock really stands out in that sense. Of course, the earnings were also a beat, but the move on the stock, 6.5% higher when the Nifty IT is flat.
Yeah, you're right, Harsh. So very good moment for Wipro. Number one, as you rightly mentioned, our numbers were largely above estimates and they were really good. Margins were at 12-quarter high. This was really not expected because wage hikes were due for Wipro, right? So analysts had accounted for that. But even after wage hike, even after furloughs, they actually gave a beat on margins. So that is number one, really surprising over here. And next part is deal wins. Deal wins were also really strong. Well, it came about 961 million in terms of large deal bookings, up about 6% YOY in constant currency. So this is really good for Wipro. Say for example for Infosys, right? This was not really doing well, and that is why the stock tanked even after Infosys raised guidance. So good deal wins over here for Wipro gives a better view that CY24 definitely will be better supported by a good and healthy pipeline over here. And lastly, Americas and banking space, right, up about 3.5%. Constant currency terms and year-over-year basis, which accounts for 35% of the company's revenue. So that is also really doing well for the company. And the company also mentioned that Americas were led by the BFSI space. Strong growth in the healthcare segment, up about 4.5%. The largest vertical to grow in terms of constant currency YOY growth for Wipro, wherein the other IT guys were not really calling out for healthcare revival. So again, this one is a surprise. So largely good, broad-based growth followed by a beat in margin is what stood out for Wipro, and that is why it's up about 6%, I guess.
Okay, so thanks for that context and perspective, Rucha. Siddharth, if I can come to you with regard to these two IT counters, big ones, and came out with slight bits of surprise. Talk us through your sense with regard to these two. Could well re-rate because these two trade at a substantial discount to the three larger IT players, or rather the three other of the five largest IT players. So what's the sense on this one? Do you believe turnaround on the cards? Could you well start to see a re-rating of sorts in that sense? Of course, Tech Mahindra's numbers are slightly, the PE is slightly different because margins have come off. But when you look at it on a normalized margin basis, largely at a discount.
Yeah, Harsh, I think that's a debate that is going on internally. Again, both of the stocks, Wipro and Tech Mahindra, so currently we have a neutral rating on both. But the bulls versus bear argument is at its peak for both. Wipro delivered a very strong and steady performance in Q3, driven by the strategic focus on its key clients, plus growth in its healthcare verticals. However, we believe that there are certain challenges, for example, in certain verticals as well as in geographies. So the Q4 guidance again is muted at about -1% to 1% in terms of constant currency Q-on-Q growth. We believe that particularly Europe and AP, MEA, so these two regions could see a softness, while in terms of verticals, we see manufacturing and ENU verticals could face client-specific headwinds with no immediate signs of recovery expected. Having said that, yes, a lot of positives from the results. We are expecting the company to deliver IT services revenue CAGR of 3% and overall margins at about 17%. So we have also raised our estimate, but we believe that current valuations factor the current outlook, and the near-term headwind could keep the stock the upside in check for now. So again, 1 or 2 more quarters of outperformance could turn our view positive there. Similarly, Tech Mahindra execution continues to be on track. The new management has kind of started delivering, and the market's confidence in them is only going to increase. However, given that we would like to see more clarity in terms of recovery in the communication and auto segment, which are the two biggest vertical for Tech Mahindra. And that is where, again, we continue to maintain a neutral rating, given that while the results as well as the new leadership are working in the right direction, we expect the steps to be more gradual and the recovery to be more gradual. Hence, we remain on the sidelines as of now.
All right. That's the view with respect to, Tech Mahindra and Wipro in the IT space. Heyman, Zomato, let's pull up the chart of Zomato and see where it is trading at right now. Soumit mentioned that HNIs, dealer checks suggest that HNIs have started now again buying Zomato. The stock has not done very much in the past few months. Let's pull up the charts of Zomato if we can, and there we go. We also have the earnings flashing on your screen. Revenues up 12.6%, so in line with the estimates as it was expected. Net profit, however, is down 66. I'm not sure if this number is correct or not, but we'll have to check if there's a one-off in this particular number. But we'll get in more details on Zomato as well. But Heyman, on the charts, how does it look right now?
Well, frankly speaking, Mahima, we walked into a corrective phase of a greater degree. The stock has moved from 44 to 300 to 95. It's natural that it goes into hibernation for maybe 6 months, maybe even more. Having said that, it's oversold on the short-term charts. Bounce is probably underway, but for the bounce to fructify, we need a close about 261. Just one important point, 240 is a level which has been tested almost half a dozen times. Weekly level, not daily level. It has been breached intra-week, but hasn't closed below it, Mahima. So 240 is important, was and is. So till we are hanging on to the 240 level, it's now hanging on by the skin of its teeth, so to speak. So if we are hanging on to 240 in terms of weekly closing, things are okay. But if we don't and we slip below 240, then we could lose 7 to 8% from there. So things are not looking that great, at least from a medium term point of view, because we've had a phenomenal run and a correction was around the corner, and that is what we are seeing. And it could just get deeper below 240.
Okay, the other one in focus today is Indian hotels, and while we are at it, Zomato's lines flashing at the bottom of your screen. So quickly, if you can look at it, we'll also get you that perspective. Mahima will get you that perspective. But quickly on to another one, Indian hotels. Tanking in trade, company reported a decent set of numbers. First off, revenue largely in line with estimates, profits, in fact, beating street expectations. But we spoke with Puneet Chatwal because stock's not doing too well. And growth prospects is what he spoke about. The company, as well as the hospitality sector at large, he spoke about the growth prospects there. Listen in.
The foreign tourist arrivals, the foreign tourist arrivals are expected to grow. There's been some softness. We're still below pre-COVID level. I'm quite sure that within the next 12 months, we will exceed that level. The question is how much more will come because we are at a very low level. We have a potential to do much more. So hoping that all will augment the performance of the sector and will give the necessary support, because at the moment it's all been running very strongly on the domestic room nights. But if you look back a year ago, Tamanna, everybody said, including with your colleague, Mr. Shah, when we spoke, he said, oh, this year we have G20 and we have Cricket World Cup. What will happen next year? So we're still ahead of next year, and that too by double digit. So I think the same trend will continue, and you'll not have one concert in 6 months or in 3 months. I think very soon, over the next 3-5 years, we will have one major concert in every metro of India. And that's just something which is going to happen.
Okay, Siddharth, contextualize this for us. IHCL's numbers are beat, but the stock down 2.5%.
Yeah, I think a lot of the numbers have been already baked in, and hence the kind of reaction you're seeing that. I believe overall operating performance was in line with our expectation. The overall strong consolidated revenue growth of 30%, revenue per growth of 15%, and the company continues to maintain the double-digit revenue growth guidance. So I think broadly we are maintaining our estimates and continue to be positive on the stock. It's more to do with what the positioning in the market had been before the results, because again we believe that in the medium term the company is likely to see increase in ARR due to healthy demand, the asset management strategy with a lot of upgrades in the hotel category, as well as the corporate travel, which is kind of improving. There is a strong room addition pipeline until FY28, both in the owned as well as in the leased category, plus a lot of management contract hotels. So about 14,000 keys would be added there, which should help in improving the return ratios as well. So I think net results has been in far, guidance has been pretty strong. I would factor the market fall to more to the pre-result positioning of traders, and hence some kind of unwinding that has happened in the stock.
The big news post-market today is going to be Trump getting or swearing in, and what's the impact going to be like, especially on Indian markets? Mika's here to break it down.
So Donald Trump will become the United States 47th president. The official ceremony will be held at 10:30 p.m. today, Indian Standard Time. And we're going to see how the new US presidency could potentially impact India. Up first, we're just going to talk about the major policy proposals that we've seen coming in. Policies are relatively expansionary in nature. One is lowering tax rate for corporates. The second one is 60% or higher tariffs on Chinese imports and 10 to 20% potential tariffs on the rest of the world. There's also talks about mass deportation of illegal immigrants as well as increased influence over the Federal Reserve. In terms of the impact on Indian economy, well, the impact will be limited as per Nomura. They do expect GDP growth to be impacted 0.1 percentage points lower, but we could gain from the ongoing supply chain shifts from China. The Indian bonds may also benefit from lower risk premium, and the potential lower commodity prices will be a macro tailwind for the company. And Nomura states that India is well prepared to handle any volatility from US policies. Now, talking on the sectors, there is a lot of uncertainty because we don't know how the tariff play will come into play. Up first with the IT sector, well, IT players are more insulated from the anti-immigration policies because they've localized their workforce since Trump 1.0 in 2016. The key risk is because of the fact that US discretionary spends are dependent on how the Fed rate cut pathway comes into play. In terms of the IT stocks in focus, well, as of Q3 US revenue percentage, we do have stocks like TCS, Infosys, HCL Tech, Wipro, LTI Mindray and Tech Mahindra, which have strong exposure to the US.
Right. Thank you so much for breaking that down for us. Zomato in focus. Let's pull up the charts. It's down around 2%. Now, this is because we're seeing that there's significant increase in terms of expenses overall quarter on quarter. The purchase in stock is, up by 10% in just one quarter. Finance costs. This is an interesting one to watch out for. The fine print, we'll have to check as to why these costs have gone up, because they've gone up by 43%, which is why we're seeing a significant dip in the overall profits. Advertisement and promotion has gone up by 100 crores just QOQ. This means that competition is heating up, and we're seeing an uptick in terms of the total other expenses with related to advertisement and promotion. Delivery and related charges have also gone up, which is also impacting the overall profitability. There is also other expenses which we'll have to see in the fine print as to why these have gone up significantly. So all of these contributing towards why the profit is going down so much. In terms of the segmental performance, we are seeing that revenue for food and ordering business has remained flat QOQ. The hyperpower business has gone up by around 200 odd crores quarter on quarter. Quick commerce has again seen an uptick of around 200 crores quarter on quarter. But what's interesting to watch out for this time is going out business is something that has grown by over 100 crores. This is something which was kind of being anticipated since quite some time now, and we are now seeing maybe quarter on quarter, and even if we see YOY basis also, this has gone significantly up, of course on the back of lower base, but overall the numbers in terms of revenue are a meet, but it's a huge miss on profits because of expenses going up for Zomato, Harsh.
Also Blinkit, 216 stores added,
yeah,
and you have the 2000 store guidance upfronted to December 2025 from December 2026. That's a big one. You will not only see OPEX go up as a result, but you will also start to see a ramp up of these stores at a far quicker pace than what the earlier estimates were essentially indicating. In fact, Blinkit GOV growth is more than 100%. That's the estimate for FY25 as well as 26. You likely see that. And therefore, those are some of the positives, but the stock currently taking a knock in trade. Siddharth, we know that maybe the numbers have just come out, but your initial thoughts, views with regard to Zomato's numbers?
Yeah, Harsh, I think revenue has been in line with our expectations, but in terms of net profitability, even we were expecting much higher numbers, and there has been a clear miss. What we see is that the top 3 quick commerce companies having raised funds, there is a race in terms of increasing capacity, increasing the networks, and hence you see the upfronting of the number of stores for Blinkit. Even Zomato has done the fundraise, and we could see subdued, increasing competition and subdued numbers in the near term, not only in terms of financing costs, but I would see what Zepto has started doing is offering a lot more discounts, offering delivery at much lesser GOV, and that is kind of increasing the competition. I think, again, going back, you need to understand the numbers, but the race and higher competition in the quick commerce could lead to some kind of bloodbath in the near term quarters.
Would that, Siddharth, be an opportunity to buy? That's point number one. Point number two, what does this Blinkit upfronting of dark stores mean? From 2000 in December 2026, they've upfronted that target guidance to 2025. What, in your view, and I completely take your point that this can be ballpark, you don't have to be absolutely accurate about it, your report can later on tell us in more detail what it will mean, but just tell us what, in your view, does this mean right off the bat?
Yeah, sure. Right. Good question, Harsh. I think, yes, definitely. I would believe for a long-term investor, it would mean a good entry opportunity. People would have missed buying Zomato at earlier levels. The stock has come down from about 300 levels, and it was available at 240, 230 sometime back. I think those would be good levels to add for a long-term investor. In terms of upfronting the stores, definitely there would be a big impact on the OPEX because some of the stores initially, as we know, based on the location, they take anywhere between 3 to 6 months for break even. Some stores in tier 2, tier 3 may take even larger than that, and hence a drag on the margins. Financing costs would also go up, so would be the other below EBITDA numbers. So I think next 2 to 3 quarters, if there is a aggressive ramp up in the number of stores, we could see these kind of subdued earnings for the next few quarters.
Right. So that's the view coming in on Zomato, and the stock is still seeing that tanking. It's on its, almost, in fact, it's at its day's lows now, down about 3.2%. But moving on, to Nazara Technology, we're joined by Nitish Matherson, who's the joint MD and CEO of Nazara Technologies, who joins us now. Good afternoon, Nitish. You've planned to raise around 495 crore from Aksana Estates. Help us understand as to how these funds will be used.
So for us, the primary use of funds is to make strategic investments as well as acquisitions of gaming companies. That's a playbook Nazara has been following and executing pretty well. And we see many such good opportunities in front of us for 2025. So I would say the primary use of that will be to execute some of these transactions.
And Nitish, if I can, Harsh also joining in, one quick context. What does this mean? Will this therefore lead to an open offer getting triggered?
Yes, the open offer is already triggered and already intimated.
Okay, and therefore, Nitish, so the 500 crores coming in, you're going to continue to make strategic acquisitions. How large would that ticket size be? Is there a specific geography you're looking at? Is there already conversation on with someone at a late stage that you are already having?
Our core focus is to purchase gaming studios which have well-established gaming IP, and we are at this point of time largely looking at Western markets and studios in India, but also outside of India. We have a very strong pipeline of such opportunities, and we are not in a hurry, we will carefully and patiently choose the opportunities that we really believe are accretive to the company and its shareholders, and be as diligent as we can be.
Right. Nitish, I want to understand that you're also, in the process of buying intellectual property rights for 2 mobile gaming titles, that is Crash Arena as well as King of Thieves. In FY24, it did an approximate revenue of $6.1 million, if I'm not wrong. What is the kind of revenue that you're expecting from these 2 acquisitions going forward, let's say FY26 down the line?
So we purchased these two gaming IPs, and these are well-established IPs that have been around for many years. Once we purchase these IPs, we will, look at upgrading the games, and that may take us a few quarters to execute. Thereafter, I think we would be able to drive very good revenue. So I would say in the coming year, we should still expect in the similar range of $6 to $8 million of revenue. But going forward with new versions of these games being launched, I think we could do very well.
All right.
Okay, Nitish, thanks for joining us this afternoon and giving us all of those details. Pleasure having you and taking that perspective. But let's stick to the possibilities of what unwinds tomorrow. Siddharth, on the back of the Trump trade likely to play out, what are your expectations? 2-3 key sectors in your mind which could start or which could be a potential opportunity in the next 2 to 3 days?
Yeah, Harsh, I think definitely one of the bigger facts would be the cut in the corporate tax in US. That should be beneficial. That should be beneficial for the IT companies to start with, because corporate spending on the digital, on the discretionary tech spending, that should go up and that should help Indian IT companies. The second sector would be among the pharma, specialty chemicals, where again tariffs from US towards some of the other countries like the likes of China, that could be in favor of Indian companies, while India would also may attract some of the tariffs, but it would be maybe smaller in terms of quantum. And I think the third sector, which will be a key beneficiary, will be the textile sector. India is a large manufacturer, and with the Bangladesh having its own issues, the rupee at an all-time low, and some of the tariffs going towards China, that is another sector and space that one could look out for over the next few days.
Okay, so those are some pocket spaces that you may want to watch out for. Himen, want to take your quick views with regard to a Zomato at this point. Stock is under pressure.
Well, it's breaking 240, Harsh.
Yeah.
Like I was just telling Mahima, but this is Monday. There are 4 trading sessions left. Same rate on Friday would be in trouble. It's a distribution. It's a rounding top. 6 attempts at breaking 240. Now we are finally breaking through. Turbulent times ahead. Clear pain will be seen if we don't close above 240 on Friday. So below 240, it's trouble, and at least it looks like doing that. But once again, caveat is 4 days away.
Okay, some things to watch out for tomorrow. Of course, you have the US inauguration day, but you also have the WEF annual meeting, and we'll have Neeraj obviously give us more context. In terms of earnings, we'll have ICICI Pru, India Cements, KEI Industries, PNB Housing and Tata Tech, which will report earnings. And you will also have the record date for the 11 rupee interim dividend that Angel One will be disbursing. So all of those will be on our radar but that's for tomorrow. I want to also try and zoom in on FMCG. It's one pocket which hasn't done too well, Siddharth. Would that at all be on your radar? 30 seconds, what do you expect from the numbers in this quarter? What would give you some amount of comfort that things are getting better?
Yeah, I think Harsh, the view on the consumer, especially the FMCG space, is to stay sideways or neutral. In terms of valuation, definitely attractive. Be it ITC, be it Voltage Consumer, Tata Consumer, we like some of them. But in terms of volume growth, that would be the key factor to watch out for. Until that improves, I don't think there would be a meaningful upside potential in the near term.
Just before I come to you, Siddharth, again, I'm just reading through the shareholders' letter that Zomato has come out with. And the question was, do you expect losses to continue in near term? And the management has said, yes, we do. As we continue to bring forward store expansion, our networks may have to carry a greater load of underutilized stores, which will impact near-term profits in the next 1 to 2 quarters. So that again, coming back to Zomato, because we're seeing now significant tanking. It's down about 7% almost. Positive things, dark store guidance has been revised to FY25 as compared to FY26, but losses to continue in the few quarters. How are you reading this?
Yeah, so I think one of the biggest positive of or the change that we saw in some of these new gen e-commerce, quick commerce companies was the profitability. And now going back to the days of losses, I think market may not take that in a positive way, given that the competition is increasing, and we already saw listing of Swiggy, Zepto is next in line. So there is too much of competition, both in terms of the market as well as in terms of the potential to invest in this fast-paced sector. So I think that would be a key factor, as we have already always seen in some of these new age tech companies. The part to profitability is the key factor, and that if gets missed is a big negative.
Okay, thank you so much, Siddharth. Thank you, Hemant, for joining us this afternoon, giving us all of that perspective. I know we've not been able to cover this, just so much happening. But let's look at the Nifty intraday. We are closing in the green, and that's the big positive, at least today. 0.5% odd higher on the Nifty. We're off the day's highs for sure. Let's look at the contributors on the Nifty 50, and it's largely a day of lenders. Look at those banks and NBFCs. Which have really contributed to gains. If I just add all of those up, roughly 100 plus points among the four just over there, 100 positive points. That's largely the gain of the Nifty today. So it's entirely Fin-Nifty led, at least at this point. Some losers as well in an otherwise tepid kind of market outside of the lending universe. Let's look at the Nifty Bank intraday, because that's been the big mover in trade today. Well, solid move. We've closed for the day. Solid move, 800 points higher. At one point, we were 1,000 points plus higher, but we've cooled off from the day's highs. And in terms of the contributors on the Nifty Bank, pretty much all contributors in the green. We had Axis and IndusInd, there you go, sitting in the red, but marginally, just a negative bias coming in. Outside of that, you have pretty much all the lenders doing very, very well for themselves. At the bottom end of the rung, when you're looking at the heat map on the Nifty 50, you'll see life insurers sitting at the bottom. You'll see some amount of, so Shriram Finance is one of those, one of the big losers over the last maybe month or so as well. Trent is among them, and IT stocks as well as auto stocks taking a bit of a beating, if I can say so, on a day like this. But broader markets, Mahima.
Well, broader markets have also, ended in green. Let's pull up the mid-cap 150. There you go, 0.7% higher. The small-cap 250 also closed around 0.8% higher. Let's pull up, the breadth of the market for one last time and see how the advanced decline ratio looks like. And there you go. Finally, something positive here. There's 1400 odd advances versus 750 declines, so almost 2:1 is the ratio. And let's also put up the BSE 500 and see what counters have really stood out today. Zomato topping the charts. So it's the last 15 minutes of trade that's kind of turned things for Zomato today. 7% down, SW Solar 7% down, Swan Energy something that's also Rallis on the back of results down, Supreme Industries also on the back of results down about 4.5%. But Credit Access, Kotak Mahindra, of course, stands out and part of the BSE 500. Vodafone Idea up, of course, up 9%, and Equinox around 8%, and VST Industries also up around 7%. So these are some of the counters, that have done well and some which have not done well from the BSE 500. But with that, we're completely out of time on this edition of India Market Close. Stay tuned to NDTV Profit for more news and updates.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. and the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
I present the budget for a historic.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming Union Budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably,
you're watching Market Express, a bit-sized wrap of all the news and market action today, and I am Aditya Rao. Let's get straight into the show with some market updates. Benchmarks kickstart the week with gains ahead of US President Donald Trump's swearing in. The Nifty ends above 23,300 mark, whereas the Sensex ends above 77,000 mark. Broader markets outperform the benchmarks. All sectoral indices barring auto and FMCG and higher financials gained the most, and private banks index jump over 2% as Kotak Bank's results outperformed the expectations. PSU Bank's gain follow the private banks. Auto and FMCG were major laggards, while auto heavyweights Maruti and M&M dragged the index lower. FMCG ends flat with alcohol stocks UBL and Radico Khaitan lending support. US President-elect Donald Trump takes office tonight, marking a fresh term of his government. The 4-year term will usher in a fresh round of tariffs, policy changes, and bilateral decisions. Trump's inauguration completes a triumphant comeback for a politician who survives 2 impeachment trials and a conviction and 2 assassination attempts. Addressing thousands of supporters who braved long waits in the freezing temperatures, rain and snow to attend a victory rally in US Capitol on Sunday, President Donald Trump promises to swiftly fulfill the central promise of his presidential campaign and impose severe limits on immigration on his first day in office. Hindenburg founder Nate Anderson faces allegations of hedge fund collusion after the short-selling research institute shut shop last week. The founder is now under scrutiny as per the Market Frauds portal. Court documents allegedly reveal that Hindenburg colluded with Anson while preparing the report. The preparation of breach reports without disclosure of participation can be charged as securities fraud by the US Securities and Exchange Commission. Adani Group Chairman Gautam Adani, while addressing the Adani International School, says that school set up during the pandemic is a part of the bigger holistic dream. Says students of the school are India's global ambassadors in the making. While concluding, he encourages students to carry the spirit of India wherever the life takes them. Staying with Adani Group updates, brokerage firm Jefferies maintains a buy on Adani Enterprises, says the asset monetization will improve the cash flows. Jefferies highlights the $2 billion raise after the exit of the food and FMCG businesses. Jefferies also says that commencement of Navi Mumbai Airport will augur well for the company. Says that the new energy business will soon kickstart next round of capex, taking it to new highs. Construction work on the first phase of Adani-led Dharavi redevelopment project is set to begin in a month's time. The construction work will begin with a development of a railway's land parcel over 27 acres under the project. Railway quarters will be constructed on the 2 acres of land parcel, and the bid to redevelop was often been touted as one of the world's biggest slums was won by Adani Group for 5,069 crore rupees. Global spirits pops over 15%. This after the Consumers Affairs Ministry notifies reduction in price for rice to ethanol distilleries. Price for rice has been cut to rupees 22.5 per kg from 28 rupees per kg for supply to ethanol distilleries. Kotak Bank surges nearly 10% on the back of Q3 numbers. The bank reports a strong Q3, and this was aided by expanding net interest margins and a robust return on assets delivery. Additionally, the operating cost moderating boosted the profits of the bank, and brokerages give a thumbs up to the stock. DAM Capital upgrades the bank to buy from neutral, citing the robust business growth, and Motilal Oswal says the steady performance amid the challenging macro is the reason for the upgrade. Paytm earnings surprised the street. The revenue growth was in line with estimates with a growth of 10% QOQ. The company's loss came in sharply lower than expectations, and the loss narrows as EBITDA beat led to the better than expected profitability. Bernstein maintains outperform stance on the company, citing a solid quarter in gloomy operating environment. And Bernstein says that the company's focus on the cost control leads to profitability. Another stock reacting to strong earnings is Wipro. Jefferies upgrades the company to hold from underperform and hikes the target price. Wipro's result beat estimates, and the company's growth has been skewed. Jefferies expects the growth to pick up gradually. Lower depreciation and amortization costs support the margins. Rallies India plunges over 6% on the back of Q3 numbers. The company's crop care revenue was lower 13%, whereas the seeds revenue declined 7% year-on-year. Volumes drop and pricing pressure in exports hit the company margins, and the profit was hit due to lower EBITDA. Tech Mahindra stock traded flat on the street post Q3 numbers. Citi maintains a sell stance on the company, says EBIT growth was lower than expectations. FY25-27 earnings per share estimates declined by 3 to 4%, factoring in Q3 trends. Citi says that the management is executing the growth and well considering a tough backdrop, and Nomura on the other hand says that it has maintained a buy stance on the company. Nomura says that the company is making steady progress towards medium-term goals and hails the strong deal pipeline and business repair process. As US President-elect Donald Trump takes office tonight, there are a couple of top items on the agenda. Donald Trump's policies are relatively expansionary in nature. Trump aims to lower the rates for the corporates on the tariff front. Trump proposes 60% or higher tariffs on China imports, whereas a 10 to 20% hike on the rest of the world. Trump is hell-bent on mass deportation of illegal immigrants and increased influence over the Fed. Speaking of economic impact, Trump's takeover may only hit the GDP growth by 1 percentage point. India's economy is likely to gain from the ongoing supply chain shifts from China. India bonds may benefit from lower risk premium. Additionally, lower commodity prices will also be a macro tailwind. Bitcoin raises 1.8% at record levels on the eve of Trump's inauguration. The world's largest cryptocurrency has surged 2.78% in the past 24 hours and 14.96% in the past week. Brokerages give a thumbs up to SBI Life numbers. Citi maintains a buy on the company, citing strong numbers and positive agency scale up. Nomura maintains a buy stance as well, says the company is well entrenched for growth in FY25. Government is likely to propose a new income tax bill in the upcoming budget, scheduled to be presented on Feb 1. The draft bill is expected to seek stakeholders' comments and will be implemented later this year. The proposed bill has been envisaged to replace the age-old IT Act. The government's internal committee will submit the draft report by this week. Delhi High Court refers on-for-off and NPCI to mediation in the case. Remember, on-for-off had sought to bar NPCI from using UPI for credit card payments. The government is actively considering demands from the telecom sector. This is to waive off the penalty and interest components of adjusted gross revenue dues. Supreme Court has rejected repeated relief asks. Remember, this is an important development since annual payment is supposed to begin from October 2025. If this is implemented, it will reduce the annual cash outflow significantly for Vodafone Idea and Bharti Airtel. 2025 World Economic Forum kicks off with over 350 government leaders attending. 60 heads of state, business executives, civil society leaders and global experts from more than 130 countries will gather at Davos. The forum is intended to drive dialogue and create solutions to the world's shared problems. Go First has been ordered to liquidate by NCLT. In May 2023, Go First had initiated a voluntary insolvency resolution process after failing to find a suitable buyer within the prescribed time. Go First moved for liquidation. Vive Mobility launches EVA first solar electric car. The car's lowest variant is priced at 3.25 lakh rupees, whereas highest variant comes with a solar rooftop. The car comes with multiple battery pack options with a claimed range of up to 250 kilometers. The car can accommodate 2 adults and 1 kid. The car is set to go into production in 2026. Puneet Chatwal of Indian Hotels is positive on the foreign tourist footfalls. While speaking to NDTV Profit, he even hails the concert economy. He says that more than the concerts, the company growth is looking higher. Vara Renewables Tech rises on securing letter of intent from wind energy company. We spoke to the company earlier today on the growth strategy of the EPC segment, and the management says that company is planning foray into EPC for data center industry. Additionally, the company is evaluating opportunities in international and domestic markets. Veritas Finance, a retail-focused non-bank finance company, NBFC, has filed its draft red herring prospectus with the markets regulator Securities and Exchange Board of India for its initial public offering. Veritas Finance, which is a non-deposit taking NBFC registered with RBI as a middle layer NBFC, the company provides small business loans to micro and small and medium enterprises and self-employed individuals. It has also diversified its portfolio towards home loans and used commercial vehicles loans over the last years. An RBI circular has come out with new rules for asset construction companies. It tightens rules for settlement proposals cleared by Independent Advisory Committee. The IAC requirement is for dues above 1 crore rupees. Additionally, ARCs must undertake settlement of dues with willful defaulter or frauds accounts without prejudice and criminal proceedings. Supreme Court stays proceedings before the trial court against the Lok Sabha LOP and Congress leader Rahul Gandhi in a defamation case filed against him over alleged derogatory remarks against BJP leader and Union Minister Amit Shah during the 2019 Lok Sabha campaign. The Mumbai police have found 19 fingerprints of accused Shehzad at the Saif Ali Khan's attack scene, including on the stairs, windows and apartments. Forensics experts are helping collect further evidence. And in a shocking rape and murder of a 31-year-old doctor in the RG Kar Medical Hospital, Sanjoy Roy, a former civic volunteer who was found guilty in the case, has been sentenced to life imprisonment. On the contrary, Roy claims that he has been framed for the crime which he hasn't committed. Court premises are wrapped in security to prevent any untoward incident. TikTok begins restoring its services on Sunday after the President-elect Donald Trump said that he would revive the app's access in the US and as he returns to power on Monday. Let US own 50% TikTok. Trump after app restores service on Sunday. US President-elect Donald Trump announced on Truth social media that he plans to issue an executive order on Monday to delay enforcement of the TikTok ban for 90 days. Israeli prison service has released 90 Palestinian prisoners from its Ofer jail in West Bank region. The development comes as 3 Israeli women hostages return to their home country after Hamas handed them over to an international committee of the Red Cross, making it the first step in the Gaza ceasefire. UK's richest 10% extracted half of the wealth from India during colonialism, says Oxfam, on money extracted from India by the UK during over 100 years of colonialism between 1765 and 1900. Oxfam said that beyond the richest, the main beneficiaries of the colonialism were the newly emergent middle class. Indian men's and women's Kho-Kho teams create history by winning their respective finals at the Kho-Kho World Cup 2025. The women's team first clinched the title with a dominant 78-40 win over Nepal, and the men's team followed the suit with a comprehensive win against the same country. And Mumbai welcomes Coldplay band. Music lovers from across India attend the grand concert. People from all walks of life attended the event. And that's a wrap on Market Express today. There is a lot more left on NDTV Profit. Stay tuned and stay updated.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company?
Donald Trump set to take the oath as the 47th President of the United States on Monday, promises to push the limits of executive power, deport millions of immigrants, and transform the role of America on the world stage. Nifty Sensex end higher ahead of Trump inauguration. More sectors close positive with stellar rally in financials. As the 2025 World Economic Forum kicks off in Davos today, NDTV Profit brings you discussions with top voices from across the spectrum. The theme for this year's World Economic Forum is collaboration for the intelligent age. Key auto majors announced launches at the Bharat Mobility Expo. Tata Motors launches 14 commercial vehicles. Ashok Leyland launches Sathi line of 1-ton LCVs to enter the segment, among others. Government likely to propose a new income tax bill in the upcoming budget, scheduled to be presented on Feb 1st. The draft bill is expected to be implemented later in the year. This is an NDTV Profit exclusive. The Selda Sessions Court has sentenced RG accused Sanjay Roy to life imprisonment. He states the state has also been directed to pay the victim's family 17 lakh rupees as compensation. Israel-Gaza ceasefire begins with Hamas sharing hostage list. First 3 Israeli hostages return home. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. Viewers, President-elect Donald Trump is moving back into the White House today and is set to begin his second term, becoming the 47th President of the United States. His swearing-in ceremony is expected to begin around 10:30 p.m. tonight. Vice President-elect J.D. Vance is anticipated to take the oath of office before Trump. Several foreign leaders have been invited to the ceremony, including Chinese President Xi Jinping, Indian External Affairs Minister S. J. Shankar, Italian Prime Minister Giorgia Meloni, and Argentina's President Javier Milei. Prominent tech leaders such as Elon Musk, Sundar Pichai, Tim Cook, Jeff Bezos, and Mark Zuckerberg are also expected to attend. The formal swearing-in ceremony will be followed by musical performances at the United States Capitol Rotunda. With Trump back in office, he has announced several plans to implement, including the creation of a department for an external revenue service to collect foreign tariffs. Additionally, he plans to sign approximately 100 executive orders and restore TikTok. Take a look at the announcements.
Within hours of taking office, I will sign dozens of executive orders, close to 100 to be exact, many of which I will be describing in my address tomorrow. We will not waste a single moment in delivering on our promises to the people. We need to save TikTok because we're talking about a tremendous... Who in this audience goes with TikTok? Many? Yeah, very popular. And frankly, we have no choice. We have to save it. A lot of jobs. We don't want to give our business to China. We don't want to give our business to other people.
Viewers, over the next 2 to 3 months, markets will closely watch Trump's announcements to gauge the direction of his policy making. Volatility is anticipated in the upcoming quarter. This is what Harish Krishnan had to say on Trump's return and its impact on the markets. Listen in from that conversation.
I think the first 2-3 months is going to be that of what President Trump tweets and how he's reacting, because he's given many contradictory statements in his rhetoric to the elections, to make America great again. Then, of course, there are sanctions on Russia. There is also a talk or a thought process of imposing tariffs. They want lower interest rates. They want a lower currency. So, therefore, there are these contradictory, actions that have won the election. I think in the next 2-3 months, we'll get to see the axis in which his policy making will take a direction towards. And so our view is that, in the first term of Mr. Trump from 2016, markets took about 2 years to kind of figure out his various policies. In this tenure, we think that the market will kind of figure out in about 6 months or so. And therefore, we think that, this phase of volatility that is getting accompanied by what's happening on the global macro front is something that we should be looking towards and increasing our allocations and increasing our allocations to various sectors and to equities amidst this volatility that is likely to be there for the course of this quarter at least.
US, the benchmarks kickstart the week with gains ahead of US President Donald Trump taking office. The Sensex rises over 450 points and the Nifty closing around 23,350. Most sectors end higher with only auto and FMCG in red. Harsh joins us with further details.
It was a day of financials on both sides, positive as well as negative. The Nifty 50 closed 0.5% higher. So let's get that out of the way. But look at the Nifty Bank, 1.7% higher. So some good traction seen in the Nifty Bank. Some new levels getting tested, 800 points higher on the Nifty Bank. Let's look at the Nifty 50 intraday first off. We started off and we rebounded from the day's lows, in fact, to the day's high, and we've closed just about off the day's high where the Nifty 50 index is concerned. And that's your intraday chart right there. The Nifty Bank as well, very, very similar kind of pattern, but we've done much better on the Nifty Bank. So it was a day for the financials, and within the financials led by Kotak Bank. Let's pull up the heat map on the Nifty 50, and Kotak Bank was the standout on this one, both on the Nifty in terms of absolute returns as well as in terms of positive contributors on the Nifty. And this one has led Bajaj Finance, Finserv, SBI, and even the likes of an HDFC, some of the private sector banks and ICICI higher in trade today. So all of those sitting in the green. What's not done well is an SBI Life dragging HDFC Life along with it, maybe some FMCG counters and a Shriram Finance. So those are that's a texture of how it played out in the financial space, which was dominating in trade today. Let's look at the contributors on the Nifty 50, and this is exactly what we'll see as well. Some 100 odd points out of the 140 points on the Nifty gained net. 100 points was contributed by just these 4 stocks. Let's look at the broader markets, largely in line with the Nifty. So a good day. The breadth was also decent, 2:1 in favor of the advances. So the breadth also looked good. Let's look at the sectoral heat map to kind of cap it off.
try and see which pockets didn't do well, it was auto and FMCG, which were largely flat, maybe slight negative bias in FMCG, but auto was 0.5% lower. But look at that top rung. Private Bank, PSU Bank, Bank and Fin Nifty. Really good day for the financials. Broader markets, Nifty Realty also did fairly well. The BSE 500 top gainers, top losers last off, and that's to cap it off. Some of these on the back of numbers, but look at the likes of a Credit Access doing 10% today. Something like a JK Paper, VST also doing fairly well. On the back of numbers, Rallis as well as Zomato were tanking in trade. 3% lower on Zomato, 7 on Rallis.
Thanks, Harsha, for that market wrap. Now, the government is considering proposal to relax quantum of AGR dues owed to Exchequer. Earlier today, there were reports that the government is working to consider relief on AGR dues for the telecom to waive off 50% of interest cost and 100% penalties. My colleague Varun has more details. Varun, over to you.
That's right. Hi. So the government is considering a proposal to relax the quantum of adjusted gross revenue, or the AGR dues as it's called, which are due to the Exchequer by the telecom companies. Now this proposal, if implemented, will come as a huge relief to telecom companies and especially to the debt-laden Vodafone Idea. Sources told us that the move is being discussed at the highest level right now and will have to go through multiple rounds before a final decision is taken on this matter. Now, for Vodafone Idea, this could mean a potential relief of about rupees 52,000 crores, reducing 75% of its AGR liability and roughly 25% of its outstanding debt. Now, and for Bharti Airtel, the relief is expected to be around rupees 38,000 crore, and the entire relief is a significant number by any reasonable estimate. Now, this potential relief comes on the heels of the Union Cabinet's decision to eliminate the requirement for providing bank guarantees for spectrum purchases prior to 2021. Now, last year, the government had decided to eliminate this requirement of purchasing bank guarantees, and this waiver was extended for the years 2012, 2014, 15, 16, and 2021. Now, as of now, the proposal to reduce the quantum of AGR has not been concretized, but as the budget is just around the corner, we will soon know whether the telcos will get this relief or not.
Right, Varun. Thanks for taking us through those details there. Now, viewers, the World Economic Forum Summit 2025 at Davos kicks off today with over 350 government leaders attending. 60 heads of state, business executives, civil society leaders and global experts from more than 130 countries will gather at Davos. The forum is intended to drive dialogue and create solutions to the world's shared problems. NDTV Profit caught up with Borj Brend, the President and CEO of the World Economic Forum, Florence Verzelen, Executive VP of Dassault Systems, about how the India growth story looks like. Listen in.
India has a great potential, and it is still growing pretty well, maybe 5.5–6% this year. But there is no reason why India cannot pick up again and do 7–8%. Of course, provided that there are reforms when it comes to investments, reforms also in infrastructure, reforms in investing in education and R&D. We do expect that in a few years, India will be 20% of the overall global growth.
Yeah,
that is quite incredible. And what works also for India is the enormous strength in startups. There's more than 120,000 startups in India. I think is more now than 120 unicorns. So that ecosystem, I think, is the basis also for future growth.
Over the past few years, India has been the country where we have invested the more when it comes to people in R&D, of course for the Indian market, but more importantly for the rest of the world. When it comes to software for EV innovation, but also for marine and offshore, for consumer goods, now for life science. 2 years ago, we opened a life science lab in Pune in order to serve the world. We are making it in India because of the level of education of India. So that this is something very smart. And then the other very smart thing is also all the Indian schemes when it comes to cities digital twin of the cities, sustainability in cities, I think India is the country which is investing the most. And the third one, where I'm seeing a lot of impact, it's renewable energy. You know, on Q3, India was the country in the world where there was most investment in renewable energy. Before it was China, now it's India. And this is thanks to the Indian government putting scheme to attract companies, but also putting scheme in order to make sure that the R&D is happening in India with Indian people.
Viewers, it's day 4 at the Bharat Mobility Global Expo. The expo serves as a key platform for companies to launch new products and connect with potential customers. My colleague Tushar Singh spoke with the management of Tata Motors, Ashok Leyland and Switch Mobility about their recent launches and how these products meet current user needs.
The manifestation of this better always is the 14 commercial vehicles being unveiled here with new technologies ranging from 1-ton vehicle to a 55-ton vehicle and 3 buses which are here behind me, and powertrain technologies from CNG, LNG, biodiesel, flex fuel, battery electric and hydrogen ICE. So you'll see that out of these 14, 7 vehicles are actually zero emission vehicles, 6 being battery electric and 1 being hydrogen ICE. So that also shows our commitment towards this decarbonization transition, which is the need of the hour.
The spotlight is on this product here, which we are calling Sathi. For the last few years, we have been saying that we are considering entry into this entry-level light commercial vehicle segment, and this is our first offering. Now, when we looked at this market very carefully and talked to several customers, we realized 2 things. One is that we thought that most of the products that are in the market today have some kind of compromise built into them. And it is very natural because when you develop a product for an entry-level segment, price becomes very important, right? And therefore, in order to meet that target price, people tend to cut corners on the vehicle itself, right? So that was one insight that we got. The other insight was that all these vehicles, or most of them which are in the market today, were conceived about 2 decades ago. India 2 decades ago was very different than India of today, right? The customer is very different. The customer psyche is very different. So what we saw that these new customers who have come up in this segment now, they do not want any compromise in life, right? They actually want the best. They actually want better power, more torque, they want more comfort, they want more safety, they want more potential of earnings. They are willing to work hard, but they need a vehicle which can go along, along with their aspiration. So we thought, let us not copy the products that are in the market. Let us create a very different offering, and that is how Sathi was conceived.
We have now unveiled Switch IEV8, a product which we believe will play an important role in the mid-mile on the small intercity distance vehicles. It will be very ideal for sorting centers for e-commerce, bottling plants to deliver white goods to transport between your yard and showroom and customer and delivery and many other applications. So we believe this is also having a potential in export. So we are also coming up with a left-hand drive version of the vehicle, which we feel that this 4-ton payload category is a city vehicle in most of the European and also in other Southeast Asian countries. We believe we'll be able to address those markets not only in India but also abroad.
Okay, so are the other 2 LCVs also getting exported already, sir?
We have done for neighboring countries like Nepal, Sri Lanka and other places. The IEV4 has a left-hand drive version, so hence it has a potential. So between IEV4 and IEV8, we believe these 2 have a potential to export in left-hand drive markets as well.
Viewers, government is likely to propose a new income tax bill in the upcoming budget scheduled to be presented on Feb 1st. The draft bill is expected to seek stakeholders' comments and will be implemented later in the year. My colleague Shrimi sent in this report earlier.
Yeah, sources tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st as well. However, as far as implementation goes, it will take some time and could happen later in the year because the government has a view that being a very important and crucial bill which will have a direct impact on the corporate, individual, it requires a consultative approach, and that's why it's going to invite stakeholder comment on the bill. The internal committee, remember, we've been working on reviewing this entire direct tax laws, and we've been reporting about the deliberation and the suggestion being made and receiving over 6,000 plus comments on the exercise. Is expected to submit its report this week itself, and even the law committee is going to vet all the proposed changes in the bill. As far as the contour of the new income tax bill is concerned, the sources telling us that many provision which is being there before 2012-13 could be declared as redundant. In fact, many provision, especially in the areas of exemptions and deduction, could be eliminated. However, certain exemption could be made. For example, past assessment, the searches and the notices which is being served to corporates and individual will remain, and even in the new bill, tax redressal mechanism to reduce the dispute and the interpretation could see some sort of facelift in the new bill. However, the basic intent of this new bill to have a simplified language, to have a more lucid and concise structure of the direct tax so that even a layman could understand the provision. So with that basic intent, this new bill will be proposed, and we will see some sweeping change also, maybe once the tweaking could be done based on the recommendation and suggestion of the industry stakeholders in the final bill. It's very interesting also because this is the third attempt where the government is trying to sort of rewrite the decade-old income tax laws. First time it was happened in 2010 where the new bill was introduced in the parliament. Later, during the Modi government also, the expert committee have been formed. Recommendation have been made, direct tax code was proposed, but it was never taken on board, but this time around we will definitely see, changes in the direct tax regime, and some, changes will happen this year itself.
Thanks, Trimi, for those exclusive details there. Now, as Budget 2025 is around the corner, we at NDTV Profit are on a mission to ask common man and women about their expectations about the upcoming budget. My colleague Pallavi Nahata visited Sahapur and talked about the inflation problems faced by the people of Sahapur. Listen in.
We're days away from Modi 3.0's second budget, and while we're constantly debating over what the fiscal deficit is that the government will be targeting or what the gross borrowings figure this time around will be, we decided to take a 2-hour drive from Mumbai to come to Shahpur, where we're going to be interacting with the common man and woman to understand what their expectations and needs from the government are from the upcoming budget. Let's listen in.
हेलो, मेरा नाम राजश्री रमेश तेलवणे है। मैं हाउसवाइफ हूँ। मैं ये बोलना चाहती हूँ कि जो सरकार ने जीएसटी लगाया वो बहुत हो गया है, और जो बाहर का जो अमेज़ॉन है वो कंपनी का लोड ज़्यादा हो गया है। जो औरतें हैं, सब लेडीज़ हैं, वो सब ऑनलाइन खरीदी पे ज़्यादा ही कर रहे हैं। तो हम लोग यहाँ इधर रूरल एरिया में रहते हैं ना, तो यहाँ इतना ज़्यादा ऑनलाइन का बहुत बढ़ गया है, तो इतना ये नहीं चाहिए।
मैं ये सुझाव देना चाहता हूँ सरकार को कि जो प्राइमरी स्कूल जो है अपने, उसमें कुछ भी सुधार नहीं बढ़ रहा है, खाली फंड्स आ रहे हैं, यूज़ हो रहे हैं, उसमें कुछ बदलाव नहीं आ रहा है। कोई भी छात्र नहीं पढ़ता है, एकदम कम छात्रा है जो स्कूल में है, प्राइमरी स्कूल है, जैसे कि आंगनवाड़ी है, ये वगैरह। सरकार की बहुत सारी योजना है, यूज़ हो रही है, लेकिन जितना छात्र बढ़ना चाहिए उतना नहीं हो रहा है। अभी बाढ़ आती है ज़्यादा, तो अभी 2-3 साल पहले का भी पेंडिंग है जो हमारे एरिया में, वो नहीं बेनिफिट मिल रहा है। जो फार्मर का नुकसान हुआ है तो उनको अभी तक कुछ मिला भी नहीं है। जो खेती पूरा पानी में गया है, उनका यहाँ पे राइस उगाते सब लोग, तो यहाँ पे पूरा उसका कुछ बेनिफिट नहीं मिला है बहुत सारे फार्मर्स को।
Viewers, the budget for 2026 is expected to give a significant boost to the electronics and semiconductor sectors. Vinod Sharma, Managing Director of Deki Electronics, reveals that industry is anticipating from the 2025 budget in this exclusive interview.
Electronics sector, as you have noticed, for the last few years has received the government's attention, and we are very, very thankful to the government for having done that. What we have achieved so far is the assembly of a lot of electronics, starting with the mobile phones, now to IT hardware, air conditioning, LEDs, etc. The next logical step is to start the manufacturing of components. The PLI for assembly was actually based on two events. One was a PLI of 4 to 6%, and the second was a customs duty, an import duty on some of these products between 10 and 20%. So the next leg, when we want to do manufacturing of these products, it is natural that the components will be required. Government took a very bold step a few years ago with the semiconductor policy. So they've taken the harder and the bolder step, which is the more difficult step of bringing in semiconductors. We are now very hopeful that our ministry, MeitY, has proposed a 30,000 crore incentive plan for electronic components other than semiconductors. This includes PCBs, it includes passive components like the capacitors you see being made here, resistors, and then some electromechanical components, connectors, and very precision equipment. So all this put together, along with some modules, camera modules, battery modules, we feel that will make India a truly robust and integrate us with the global supply chain as far as electronics is concerned.
On to some national news now. Sanjay Roy has been sentenced to life imprisonment by Kolkata Selda Court. He has been convicted guilty of raping and murdering the 31-year-old trainee doctor and throttling her to death under sections 64, 66 and 103 of the Bharatiya Nyaya Sahita. Saurabh Gupta from NDTV joins in with further details.
Well, you know, the RG Kar rape and murder case convict Sanjay Roy has been sentenced, but he has been sentenced to life imprisonment with fine. And this is something that, of course, at least in the public sentiment, was unexpected. Legal arguments were made in court. Public sentiment believed that this was a case fit for death penalty. However, the court has opined that it is not in the rarest of rare categories. It has done so based on the evidence presented before the court, and it has said that obviously this is something that therefore, because it's not in the rarest of rare category, one can deduce from that it's not a case that would end in the death penalty, because the death penalty is awarded only when a case falls into the rarest of rare categories. There are several other theories that the the convict's lawyer also presented before the court, including the theory of residual doubt. You know, all of those arguments were taken into consideration as the court, arrived at an opinion, and the verdict and the sentencing quantum was announced at a little after 2:45. The court addressed Sanjay Roy, the convict, and said that you've been found guilty on these 3 charges, and accordingly you're being sentenced to life imprisonment with fine on 2 charges, and on the other charge, the 3rd charge, of course, he has been sentenced to life imprisonment. There are fines also that have been imposed on him, and of course this is something that is part of the legal process. But however, there is a lot of angst. There is a lot of an outpouring of anger, given the fact that many expected that this was a case fit for death penalty. However, that has not happened. The court has ruled life imprisonment for the convict Sanjay Roy.
Right. Now, on to some international news. Israeli prison service has released 90 Palestinian prisoners from its Offa jail in West Bank region. The development comes as 3 Israeli women hostages returned to their home country after Hamas handed them over to the International Committee of the Red Cross. Israeli Defense Forces posted on platform X that this marks the first step in the Gaza ceasefire. This is the first such exchange of hostages after a 15-month-long war. Israel has also reported more groups would be freed by the militant group in the coming 7 days. Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
I present the budget for a historic.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and
अगर मुझे इस महाकुंभ का वर्णन एक वाक्य में करना हो तो मैं कहूंगा ये एकता का ऐसा महायज्ञ होगा जिसकी चर्चा पूरी दुनिया में होगी।
संग संग चले हैं ढोल मंजीरे संग चंग गंग नगरी बम 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 लहरी।
अजर हो गया है अमर हो गया है शहर तंबुओं का शहर हो गया है महाकुंभ की आस्थाओं में घूम।
ये जनता के बड़े सौभाग्य की बात है।
ये एकता का प्रतीक है।
The largest gathering of pilgrims and devotees on earth has begun. Lakhs of seers and Naga sadhus from across the world have assembled in the historic city of Prayagraj to celebrate the biggest Mahakumbh in history. It is a global congregation of seers at Mahakumbh this time. Naga sadhu Anjana Giri is from Italy. She has come to Mahakumbh with thousands of seers of Atal Akhada, one of the most ancient akhadas.
What is the significance of Mahakumbh for you?
It's a big festival.
Big festival?
Yeah. Yeah.
You are from which country?
Italy.
इटली से आए हो आप?
जी.
अच्छा. पहला महाकुंभ है आपका?
हाँ, पहले महाकुंभ.
रिलीजियस सिग्निफिकेंस क्या है इसका आपके लिए? महाकुंभ आपके लिए?
ये तो तीन नदी का जॉइंट है. मतलब all together we can make a good things.
Around 40 crore pilgrims are expected to take part in history's biggest Mahakumbh in the historic city of Prayagraj. As millions of pilgrims congregate from more than 50 countries to take a holy dip at Sangam, they're also witnessing the most green and sustainable Mahakumbh ever organized. From Prayagraj city to Mahakumbh Mela ground, the walls are covered with colorful messages of sustainability and the importance of no plastic use.
वन टाइम यूज प्लास्टिक एवं पॉलीथीन का प्रयोग नहीं करेंगे।
A special campaign has been initiated to promote the idea of sustainability and sensitize common citizens and visiting pilgrims.
कितना शौचालय इस बार, कितना शौचालय का
1.5 लाख शौचालय बनाए गए हैं, जो पिछली बार की अपेक्षा लगभग 1.5 गुना है।
1.5 गुना ज्यादा है। और सभी घाटों पे भी आपने इंतजाम किया?
इंतजाम किया
50 घाट हैं।
जी हाँ जी।
Lakhs of trees have been planted in Prayagraj to make it a green city. In this AI-powered digital control room, officials are monitoring the implementation of UP government's mega cleanliness drive across Prayagraj city and the Mahakumbh Mela ground.
Absolutely. It will be very green. We're not only doing a seminar or a conference on that, but we are ensuring that plantations, no use of plastic, use of materials, which are very friendly that way, restricted use of electricity, and in the matters of, using for the street lights, the banned use of plastics of that micron size will absolutely not be permitted. And we've seized a large number of such materials already, but we are encouraging and making people aware on how to use these,
उत्तर प्रदेश लोगों को दिखेगा जो विरासत और विकास के साथ जुड़ते हुए पूरी दुनिया को अपनी ओर आकर्षित करेगा, और उस आकर्षण का केंद्र बिंदु देश के अंदर उत्तर प्रदेश, दुनिया के अंदर भारत, और भारत के अंदर उत्तर प्रदेश बनने जा रहा है। उसके लिए हम सबको अपने आप को तैयार करना है।
A sustainable tent city with specially constructed 200 recyclable green tents. This has been designated a no plastic zone.
200 टेंट्स की प्रॉपर्टी बनाई है और ये 6 एकड़ लैंड में है ऑन द बैंक्स ऑफ द रिवर गंगा, और इसमें करीब 400 लोग एक दिन में हम लोग केटर कर सकते हैं। वी वांट टू ब्रिंग ग्रीन। हमने प्लास्टिक कहीं भी यूज़ नहीं किया है। वी हैव ग्लास बॉटल्स, वी हैव ये हमारे जो डिस्पेंसर्स भी हैं वो हम नॉर्मल प्लास्टिक बॉटल्स नहीं कर रहे हैं, हम डिस्पेंसर सिस्टम रख रहे हैं।
तो एक नया एक्सपेरिमेंट है। दिस इज अ टेंट जो कि ग्रीन है और इसमें प्लास्टिक का इस्तेमाल नहीं किया आपने? हाँ,
एवरीथिंग इज आइदर वुडन।
हाँ, ओके। और ये किस कैटेगरी का रूम है?
सर ये प्रीमियम कैटेगरी है, दिस इज अ टॉप कैटेगरी रूम्स, एंड इसमें अगर आप देखोगे वी हैव अ स्मॉल बेड, सिटिंग एरिया, अ लगेज एरिया। जी, तो हम लोग इसमें ये 2 लोगों के लिए है। 2 लोगों के लिए है जी।
और ये लग्जरी सेगमेंट वाला टेंट?
जी सर।
तो इसका कितना फेयर रखा आपने?
अराउंड 35,000 रुपीज अ नाइट।
35,000।
सो दीज आर ऑल वाटरप्रूफ कैनवस।
अच्छा, वाटरप्रूफ कैनवस। जी, मतलब अगर बारिश भी होती है तो
कोई प्रॉब्लम नहीं आएगी। वी आर नॉट यूजिंग वो छोटी वाली प्लास्टिक बॉटल्स जो होटल में होती हैं। वी आर ऑल डूइंग डिस्पेंसर्स एंड ग्लास बॉटल्स एंड एवरीथिंग। तो
इसे कंप्लीटली ग्रीन।
यस।
Sustainability is a major theme of Mahakumbh 2025, with a focus also on promoting renewable energy sources. In a 400 crore ambitious mega electricity plan, the thrust is on promoting solar lighting systems. Thousands of hybrid solar bulbs have been installed in the 17-kilometer long and 14-kilometer wide Mahakumbh Mela ground.
हम लोग 2000 सोलर हाइब्रिड लाइट लगा रहे हैं। बेसिकली हाइब्रिड लाइट की परिकल्पना हम लोगों ने 1 साल पहले की थी और इसको माघ मेले में ट्रायल भी किया था। इसका फ़ायदा ये रहता है कि मेला चूंकि जब होता है तो उस समय फॉगी रहता है, तो सोलर की चार्जिंग नहीं हो पाती, इसलिए हम लोग हाइब्रिड पे गए। हाइब्रिड के कारण वो बिजली से भी चार्ज होता है और जब धूप रहती है तो सोलर से भी चार्ज होता है। ये लाइट स्वतः शाम होते ही अपने आप ऑन हो जाती है।
Guinness Book of World Record holder and international moustache dancer Rajendra Tiwari Dukanji is the brand ambassador of Swachhata during Mahakumbh. He's roaming around the Mahakumbh Mela ground wearing colorful placards with one message: use cotton bags in place of plastic bags.
मैं ज़्यादातर पूरे शहर में हर जगह प्रोग्राम रैली में घूम कर लोगों को जागरूक करता हूं। संतों महात्माओं कल्पवासियों से निवेदन कर रहे हैं कि इस बार का महाकुंभ पॉलीथीन मुक्त रहेगा, इसलिए आप सभी से निवेदन है कि आप मिट्टी के कुल्हड़ और ग्लास और कागज के कप ग्लास का प्रयोग करें।
To make Mahakumbh 2025 a plastic-free and sustainable event, lakhs of plates and bags from across the country are being distributed to the devotees under the Ek Thali Ek Bag campaign. 9 ghats have been reconstructed to make them more sustainable and environment-friendly. Mahakumbh brand ambassador Dukanji says pilgrims should not throw flowers and other puja material in the river.
माँ गंगा में माला फूल हवन सामग्री न डालें, लेकिन जब मैं ये शब्द कहता हूँ तो यहाँ की जितनी सम्मानित नागरिक हैं वो हमसे ये कहते हैं कि माँ गंगा में माला फूल डालने से गंदगी नहीं होती है। हमने कहा ये बात सही है। गेंदा का फूल और गुलाब का फूल इतने केमिकल के माध्यम से वो बड़े हो रहे हैं और जब वो फूल माला हम गंगा जी में डालते हैं, माँ गंगा चिल्ला के कह रही हैं, मेरे प्यारे भक्तों, अगर इसी तरह आप हमारे पर प्रदूषण करते रहेंगे तो मैं एक दिन इस धरती से और प्रयागराज की पावन धरती से चली जाऊंगी।
Clearly, Mahakumbh 2025 is all set to be the most eco-friendly, sustainable and green Mahakumbh ever. A truly sustainable experience for millions of pilgrims. With Himanshu Shekhar and Sachin Gupta in Prayagraj, Anasya Mathur for NDTV.
Everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming Union Budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably, the July budget increased the standard deduction to 75,000 and revised both tax slabs and rates. Under the new structure, income up to 3 lakh is tax-free, with progressive rates ranging from 5% to 30% for higher income tax brackets. As Budget 2025 nears, there are growing expectations for reforms aimed at
For Mahakumbh 2025, Prime Minister Narendra Modi highlighted that Mahakumbh would take the spiritual and cultural identity of the nation to new heights, arguing that the Mahayagya of unity would be discussed around the world.
हर रोज लाखों श्रद्धालुओं के स्वागत और सेवा की तैयारी लगातार 45 दिनों तक चलने वाला महायज्ञ एक नया नगर बसाने का महाअभियान प्रयागराज की इस धरती पर एक नया इतिहास रचा जा रहा है.
From a young skydiver in Prayagraj, Anamika Sharma, jumping from 13,000 feet in Bangkok with a Mahakumbh flag, to the Indian missions abroad popularizing the idea of a global Mahakumbh. It has become a manifestation of India's soft power on the global stage, a tool of cultural diplomacy to showcase India's ancient cultural and civilizational roots. The list of VVIP pilgrims in Mahakumbh includes billionaire American businesswoman Laurene Powell Jobs, the wife of late Apple co-founder Steve Jobs. A disciple of the Acharya Mahamandaleshwar of Niranjani Akhada, Swami Kailashanandagiri, Laurene Powell Jobs has flown from the US to take a holy dip in Sangam during the Mahakumbh. In this mega shivir of Juna Akhada head Acharya Avadeshanand on the banks of the Ganga, an international desk has been specially set up to welcome foreign pilgrims from across the world.
इसमें विदेशों से कितने मेहमान आएंगे और कितने देशों से आएंगे?
हमारे यहाँ यूरोप से, अमेरिका, न्यूजीलैंड से, ऑस्ट्रेलिया से और मिडिल ईस्ट से भी काफ़ी आ रहे हैं. हमारे प्राय प्रवासी भारतीय जिन्हें हम NRIs कह सकते हैं, उनकी भारी संख्या है. ऐसे अभी तक तो कोई 1,500 लोगों की रजिस्ट्रेशन हो चुका है.
सिर्फ विदेश से आएंगे?
लगभग 1,500 लोगों का रजिस्ट्रेशन हो जाए.
At the Mahakumbh Mela ground in Sangam, foreign pilgrims are arriving in large numbers to take part in the historical Mahakumbh to immerse themselves in a world of spiritualism and divinity.
हम लोग क्यों आए? क्योंकि यहाँ शक्ति है, एक अमृत. वे लोग बोलते हैं कुछ अमृत है. तो क्यों एक आदमी औरत जापान, कनाडा, अमेरिका यहाँ आएंगे?
Sanskrit mantras hold so much power. They are the divinity, the Shakti in sound form. And they're a way for us to activate that within us when we chant them. The Sanskrit holds the power.
A world-class infrastructure has been readied in Prayagraj to host an expected 40 crore pilgrims at this global event, with world-class facilities created all along the 17-kilometer long and 14-kilometer wide Maharaj to pilgrims.
This will be the first Mahakumbh in which artificial intelligence and related technologies will be used at a very large scale. I'm in the Command and Control Center of Prayagraj Nagar Nigam, and I have with me Principal Secretary Urban Development Amrit Abhijat, and I'm in fact in front of a very big digital screen.
Here you are looking at the use of AI in its best form in the operations of the municipal corporation. We are here seeing the location of stray animals through the use of AI, which is being located by cameras installed all over the city. And they are able to track the movement of these vehicles, which then creates an event on the computer center here. This event is then reported to a person who is managing the operations of whether it's a stray animal, whether it's collection of garbage, whether it's street light luminescence.
A mega 400 crore power supply infrastructure has been created to provide uninterrupted 24/7 electricity supply in the entire Mahakumbh Mela ground. An unprecedented 1,405-kilometer long low-tension line and 182-kilometer long high-tension line have been laid all across the Mahakumbh Mela ground. 67,000 LED lights and thousands of solar hybrid lights have been made functional, while 128 transformers have been made.
इसके अलावा हमारे पास 11 kV की XLP केबल का भी इस्तेमाल किया जाता है, जो कि 3x185 स्क्वायर mm की होती हैं। इन केबलों के माध्यम से हम मेले क्षेत्र में 30 पांटून पुल बनाए जाएंगे। लगभग 10 पांटून पुलों से हम इन केबलों को इंटरकनेक्ट करते हैं, ताकि मेले में जो हम
for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time, did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low-middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are the Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
I present the budget for a historic.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. I'm Alex Matthew and this is Your Money Matters. It's Monday and it is Money Monday. This is a special show on Your Money Matters where we bring in a viewer and we ask them what their financial goal is, their most important financial goal, and we also get a certified financial planner or financial expert into studio to help them achieve it. My guest today is Mr. J. Gopinath, who's joining us from Hyderabad. We'll get to his financial goal in just a bit, but to give him a solution for his financial goal, we're joined in studio by Pratibha Girish, who's the founder of FinWise Personal Finance Solutions. Pratibha, Gopinath, thanks so much for joining in. And Gopinath, I'll start with you. You're in Hyderabad and you say that you're a Splunk architect. Can you help me understand what this is?
So Splunk is a data analytics platform, which is developed by the Splunk organization. Now we are a part of Cisco. We recently merged into Cisco. And this platform is used for cybersecurity purpose, machine learning, deep learning, data analytics, and log analytics purpose.
Okay.
So I am a certified consultant and architect in this platform.
So it's part of IT, is that correct?
Yes.
Loosely? Okay. And
yes.
You've been an IT professional for how long?
It has been more than 10 years.
Okay. And you are how old now?
I'm 34.
34 years old. Okay. And you also had good news in that you have a newborn child, right? How old is your child?
He is just 55 days old.
55, wow. So congratulations from all of us as well. And clearly you're thinking about your child's education, but you're also thinking about how to manage your retirement goal. I see that you've been investing for some time. We'll get to that in a bit. You've disclosed certain information, so let me set the context for this conversation and then I'll hand it over to Pratibha. So you've said that your income is 2.25 per month. Your expenses are about 1.1 lakh a month, and you also get a variable pay of about 5 lakh per annum. Your investments per month are to the extent of 70,000, so quite a large amount of the surplus that you generate every month is in fact invested. So kudos to you, you're already on the right track, Gopinath. 55,000 of that you put into mutual funds and 15,000 of that into ULIPs. Your partner is currently at home, does not earn, but your corpus is broken up as 5 lakh into mutual funds and you're investing for the long term, which is the next 21 years for your newborn and also for your retirement. We'll get into the portfolio later, but I think I've more or less set the context. Pratibha, over to you.
Gopinath, first of all, congratulations. Very few people wake up early regarding their retirement. At the age of 34, if you're talking about retirement being your primary goal, it's a big surprise and a pleasant one. And also planning for a child who's 55 days old, this is the first time. That's also wonderful. So you have a big friend with you. Time is on your hands. Just wanted to understand, what are your thoughts on retirement? As in, when do you want to retire? Not retire, actually, when do you want to be financially free?
So I want to financially free of next 15 to 20 years. That was my primary goal. But retirement not in the sense that, I will completely sit back in home and enjoy my time. I want to have a free time so that I can do whatever I want, whatever I would like to do. Whether I may continue my job, but I may take less stress on it and do the freelance things and all. Or else I will go for a teaching job, which I like the most, or for a cooking, open my small restaurant or something like that.
Oh wow, that's amazing. So if you rank all of them, Gopinath, what according to you is the most, would bring you the most happiness right now?
So having your own restaurant,
okay,
that's I love a lot. And teaching also equally, I enjoy it.
Okay, have you started cook? Do you cook often?
Yeah, I regularly cook.
And what restaurant would this be, Gopinath?
It would be an Indian restaurant, which cuisines from my native place.
Okay.
Like Rayalaseema.
Rayalaseema, okay.
Yeah.
Okay,
wow,
let's get back on track.
You have my mouth watering. That's wonderful. You clearly described what financial freedom is, which is different from retirement. So you're looking at a 20-year horizon. That is, at the age of 55, you'd like to be financially free, right?
Yes.
And, it's too early, actually. When you're planning for a child who's 55 days old, you don't know where you're going to, educate the child. So if you're looking at education, let's assume that you are planning for graduation, post-graduation for your son. That's one of the goals you mentioned, right?
Yes.
Anything else related to the child would you like to plan for?
No, I just plan for his education only. Whether he may use that amount for his education, higher education, or he may want to do his own startup, that amount will be useful for him. So it is up to him after next 21 years or 22 years, once he done his graduation. That is the primary goal for him. So once he needs to do the graduation, after that only he will have a right to enjoy that amount for whatever he wants.
And what about your spouse? Is she not working at this point of time? Do you plan to get to the workforce or?
Presently, she is not working. Before marriage, she used to work, but now she is not working. And future also, we are not sure whether she will work or not. It depends on her interest.
Fantastic. So you have actually done a fair bit of planning, actually. Most people, start with one particular goal in mind, and you very clearly mentioned that you already have an emergency corpus. So you have something which is there. One of your questions was, I have 10 lakhs lying in my savings bank account, and I want to keep this as an emergency corpus. So that's wonderful. So the basic steps before you start, you start investing is setting aside a financial corpus for emergencies. It could be loss of pay, it could be medical emergency, or it could be to help your friends and family, which you've already put together. Do you have any senior citizens whom you're supporting in the family?
Yeah, I am supporting my parents. I am regularly sending 10,000 rupees per month for them. When they require, I will send some other amount for them.
And this is included in the per month cost that you've given, right?
Yes.
And in the per month cost, you are also paying back a home loan. Is that also included?
Yes, all the expenses of my loans are included in that.
Okay. Okay, so we've got clarity. And let me just spell that out. I didn't mention that when I introduced you, but you've got a 36 lakh outstanding home loan, which you're repaying right now. And what is the period of completion?
So I took the home loan for 15 years. The total home loan amount is 48.5 lakh. So I am doing some repayments for that. So that's the reason it's come down to 35 lakhs today.
Okay, so you've already prepaid quite a bit, is it?
Yes.
And you also have this personal loan, 2 lakh, that is outstanding, that is going to be closed by October of 2025. This is an EMI for a personal consumption that you've done?
Yes, I use that amount to buy a plot in my hometown.
Okay.
So that's the reason I have that home loan.
Okay.
Sorry, personal loan.
Gopinath, one other question. Are you using the, home loan benefits, and the old tax regime or the new one?
I'm using my old tax regime only. So that's the reason I have that.
Okay, so we'll come to that. But coming to emergency fund, because you have senior citizen parents whom you are responsible for, and medical emergencies can happen, it's important. Normally, if two people are working, we would say that 6 months worth of emergency corpus is good enough. But in your case, right now spouse is not working, and you're the single income earner. Plus, you have parents to support. Therefore, 9 to 10 months of expenses, 1,10,000 into 9-10 months is a good amount to start with.
Which is what he has, more or less.
Which you already have. Where should you park that? We'll come to that. It's possible that we'll come from there to, you already have that corpus. Where should you park that? Because your spouse is not earning, it may make sense to invest it in her name, because you will be taxed at slab, whether you're in a fixed deposit, whether you're in a debt fund. And emergency corpus, you're not looking at the returns, you'll have to look at what, how much liquidity can it give you. So definitely you should have something in FD, because even on a Saturday, Sunday, at the press of a button, you'll be able to access it. Debt funds, yes, it'll give you good returns, it's tax deferred, etc. But part of it can be in debt funds, rest should be in your bank account, preferably in the name of the spouse.
Okay. So now that we've established that and we've set the ground, let's move to how he can solve his primary issue, which is how much should he set aside for his retirement?
So normally when people are talking about expenses, they do not imagine how their expenses is going to go, in the next 10 years, 15 years, 20 years. Today, the way we stand, we take that the inflation will be 7%. Lifestyle inflation included, not what is on the headlines, but lifestyle inflation included. Your expenses will go up at least by 7% for the next few years. Of course, it may come down as we become a developed country. So if it comes down, it's good, because we've been conservative and we're taking a higher inflation. So today, if you're spending 1,10,000, in 20 years, you'll be spending, say in 10 years, it'll double. 1,10,000 will become 220 and it'll become 440 at the age of, in 20 years. So we just calculated how much would you require to retire and completely not be dependent on your income at the age of 60, 25 years from now. The amount which you require is close to 18 CR. While this amount itself seems very large and alarming, you're already well on your way to that, because you have very well thought out investments in mutual funds, which you also plan to step up. You clearly mentioned, which is what we tell most people to do, because their incomes go up. At least step it up by 10% every year. So if you look at a normal SIP which is required to reach this corpus, you would require about 1 lakh SIP on a monthly basis. But because you have time on your hands and you're willing to step up, a 41,000 SIP starting now and then step up by 10% every year will take you to your goal in 25 years. Now, obviously, if you want to retire earlier, the corpus will be lower, not higher, because the corpus which you've accumulated also will keep growing with time. So that's the good part, that you don't have to do any extra investments, etc. for retirement. You're well on your way. Out of the investments which you're doing, 55,000, you earmark 41,000 for your retirement. And the 5 lakhs which you've already accumulated towards in mutual funds can also be earmarked towards this. So it comes down to 17 crores is what you require, and because at 5, while it looks okay today, it can grow to 85 lakhs in 24 years, and that's a large amount of money. So if you earmark it for retirement, you'll be well on your way.
Just want to clarify, Gopinath, this 18 crore number sounds absolutely huge, right?
Yeah.
Did you think that you would need that much?
I never expect that amount is required for me. 18 crores is nearly impossible, as I thought of, unless I have a huge sum, lucky lottery or something.
But okay, let me ask you a couple of questions. I find that these numbers are quite fantastic as well, but the reality is that once you cross certain thresholds, it becomes very easy to see that accumulation of wealth, particularly that 1 crore mark. Once you cross that mark in terms of the corpus that you have, the acceleration of growth in your corpus is quite dramatic. But let me ask you this. Do you foresee that you will stay in Hyderabad for the rest of your life?
Maybe yes, because I need to work for the rest of 20 years till my kid complete his graduation. So maybe in Hyderabad or out of India is the only option for me.
Out of India is also an option?
Yeah. I'm actually looking for any opportunities which may come for out of India. So if I get anything which...
In which case your earnings would also reflect that, I think, and then some of the math in this will change. Pratibha will obviously explain this to you.
Yeah, so we can't, it's very difficult for us to imagine not only that the expenses will grow, income also will grow, At this point, at 34, what seems like a large portion will start looking significantly smaller as time goes up and your income goes up. Well, while I come back to retirement, there's one thing which I'd like to point out. You have a personal loan which you're paying of 2 lakhs, which you said you'll clear by October. Normally, personal loans come with a very much higher interest rate as compared to, say, a home loan. So your priority should be actually to pay back that loan, even if it means that, you reduce your emergency corpus by 2 lakhs right now, and then build it up eventually with the EMI which you are paying towards it. It still makes sense for you to pay it back because you will be earning 6-7%, 7.5% at max with your, 10 lakhs which is lying in SB, and you'll be paying much higher rate for your personal loan. So I would definitely suggest you do that. That will free up your cash flow by 22,000 also, which can be added to bring your the emergency corpus back up. Secondly, you have a home loan, and we are talking about investing your money in FD or in a debt fund for retirement. But if you have a home loan, you can also explore, having a OD loan. When you have an overdraft loan, you can park this 10 lakhs in that account and you can access it whenever you feel like. Any emergency, you can access it. And there is no tax payable on it. And whenever you're paying your loan, it will be considered as if 10 is already paid back and you're only paying on 25. And therefore, your loan will get over faster. For a person like you who has the corpus, I think it's very desirable. The difference in rate is only 0.5. You must explore that.
Okay. So those are two very appropriate suggestions, I think. And the other thing that we've not focused on, Gopinath, is that you've already prepaid your home loan quite considerably. You've brought it down to 36 lakh. And if you continue to do this over the course of the next 5, 7, 10 years, you might actually end up completely finishing that home loan, in which case you will have a sizable amount of money left over to invest, right? So you won't have an outgo in terms of that EMI, and so you'll be able to bolster your investments every month to the extent of that 50,000 rupees, right, Pratibha?
Absolutely. But my suggestion to you would be, Gopinath, don't pay your home loan in a hurry. Your home loan, you're taking tax advantage. You're getting it at 9.3. If you take the 30% tax away, you're getting it at less than 7%. If you're getting money at less than 7% and you're able to earn, even if you're very conservative, 11-12%, it's a fabulous deal. Your EMI should be close to 36,000 for the 35 lakhs which is outstanding. Even if it's 40,000.
He's paying 50,000.
You're paying 50. So you can check out. You will get the OD loan at these rates at 9.35%. Number one, it will help you pay back just for your mental satisfaction. But don't pay higher than EMI. Don't try to close the loan. Instead, add that amount to your SIP, it will give you a huge, corpus, and that corpus is earned for free because the difference is 7% versus 12%, 5% you're getting on somebody else's money.
Yeah, and as things stand, I must put that as a caveat. We're just a couple of weeks away from the budget, and hopefully the old tax regime still stays, Gopinath. But see, we've more or less, or Pratibha has more or less given you some perspective. I also want to ask Pratibha, he's investing in a few schemes. He shared them with us. He's got the Nifty, the Next 50 Index Fund. He's also got a Quant Mid Cap Fund, Nippon India Small Cap Fund, and Motilal Oswal Flexi Cap Fund. It's actually a very pragmatic scheme selection, in my opinion. What do you think?
Yes, the scheme selection is good, but I have a point here that the small cap component of your portfolio is higher than what it should be. It's close to 38-40%, and the large cap is slightly lower. While you would have had a good run for the last couple of years, maybe 2-3 years, it's difficult to hold on to portfolios which are very volatile. So it may make sense for you to reduce your small cap component and increase it to in the flexi cap. Flexi cap, you only have a 5,000 which is running, either in the same or a different SIP. You can start, reduce 5,000 and add it there, so that your large cap will then become 40% and 30% will be mid cap. That will be a little less volatile portfolio for you.
Okay. Gopinath, this is more or less what Pratibha had. Do you have any questions for her?
Yeah, I would like to ask some questions.
Please go ahead.
Related to these, we are not expecting that the old tax regime will be continuing in the near future.
We don't know that yet, Gopinath.
Yeah, we don't know that. So that is the reason I'm closing my loan. So I will take a note of it. Investing that excess amount in SIPs instead of prepaying my loan. This is the one point. And the second one is the present portfolio that I am having. So presently I invested around 5 lakhs and the existing amount now is 4.8 lakhs. So I'm in 20,000 less only. And I want to rebalance my portfolio. I would like to know which are the funds that will provide me a safe avenues for the next 20 years so that increase my corpus and a little downside risk for the market fluctuations.
Protection of downside. That's exactly what she said just now, Gopinath, which is your small cap allocation seems to be a little high. And so from the perspective of rebalancing, she's saying that you can put more money into the flexi cap. Motilal Oswal flexi cap is what he's chosen, which seems to be, according to Pratibha, a decent choice. But you can maybe reallocate towards the Motilal Oswal flexi cap fund and out of the small cap fund. The Nippon India small cap fund is by far and away one of the best performers in the space. But at the same time, small cap as a whole looks a little difficult at this stage. The avenues look a little difficult, or the sentiment looks a little difficult for the broader markets. And so from that perspective, while the opportunity for growth is tremendous, the potential for downside is also there, Gopinath. That is why she's saying remove a certain amount. What is the ideal allocation in your opinion?
I think the large cap, if it's about 50%, 50 to 60%, even for a very aggressive person, it makes life easy to stay invested for 20 years because volatility can actually be very depressing.
Okay, so 50% and then the rest divided equally, you're saying between...
No, the larger quantity in mid cap, so 30-35% in mid cap and the rest 15-20% in small cap is good enough.
But he's got a flexi cap also. So you're saying flexi cap, which is largely, I would say,
65%
large cap oriented. Yes. So Gopinath, your flexi cap plus your index fund, which is the Nifty Next Index Fund, cumulatively what Pratibha is saying is that if it accounts for about 60% of your portfolio and you divide the rest between the remaining two funds that you have, is that correct?
Absolutely.
Then that is more appropriate of an allocation and you would be protecting against downside risks better in this kind of a situation. Does that make sense?
I have a question related to that.
Yeah.
The historical returns from large cap funds shows that the index funds, the active managing large cap funds are not able to beat the index.
Correct.
So is it right? Do I need to invest only on index funds in the large cap, or I can go for any actively managed funds? If so, can you suggest me any funds that can invest in?
Pratibha?
Yeah. You can.
I think he's been watching our shows. So.
Yes. So yes, you can stay invested in the index fund. If you do want to, go with a large cap fund which is actively managed, I would think that Canara Robeco Blue Chip, Mireg Blue Chip are good funds. You can choose one of them. You will have to keep monitoring and seeing if there's an alpha creation which is possible. Even in index, you can look at smart beta funds and you can look at factors, but then you'll have to be, you'll have to choose a factor, right? Or use multiple factors instead of one.
I think
but don't complicate things. What you have is good enough. Your fund selection is also good.
Yeah.
It's only the market cap. Once you rejig that, you will be able to, reach your goal.
I think you've been very pragmatic, Gopinath, in the selection that you've made, and even the Nifty Next 50 fund. Actually, the Nifty Next 50 has outperformed even the mid-cap index in 2024. I don't know if you've seen that, but 27% was the point-to-point return in 2024, which was nearly 3 times what the Nifty 50 returned. I'm not saying that will happen every year, but you've already done pretty well in the selection that you've done. Any other questions?
The funds that she is selecting is the Canara Bank.
Canara Robeco. Which one is it?
Canara Robeco Blue Chip Fund, large cap.
So what she's saying is, if you want to look at options in the actively managed space, you can consider the Canara Robeco blue chip fund or the Mirai large cap fund, but you don't need to do that. You've actually done pretty well in the selection that you've made.
And you've also restricted the number of funds to a manageable number and not over diversified all over the place. So this is a good fund selection. I don't think you need to change that. Not in a hurry, at least.
Right? Okay. Gopinath, I hope that this has been useful for you. Thank you so much for joining in. And I think by discussing your financial goals, I think a lot of people have benefited from this conversation. Thank you so much.
Thanks a lot. Thanks a lot for your time.
All right. So, I don't know whether he's been listening to our programs, our conversations, but he's certainly taken some very pragmatic advice, I think, that he's listened to, and he's put together a very good plan already. So basically what you had to do was pat him on the back and say, you're doing well.
Absolutely. Very few people are always, completely on track, and very well thought out, has not missed out anything.
So the one aspect that struck me about this conversation, Pratibha, is that we've looked at 7% inflation, and I know that you said that this is lifestyle inflation, but these numbers that they throw up are very, very stark. We're talking about 4 lakhs in 20 years. It's very hard to wrap your head around it. From the perspective of a financial planner though, or when you're making these plans, why is it important to look at that?
Most people underestimate it. They look at today's expenses, they plan their retirement from today's expenses, and inflation can really create havoc. If you ask them for expenses, very few people track it, diligently. But if you ask for expense, you'll see that most of them are much in excess of 7%. And we have existing people come to us with expenses every year, and we see they've shot up by 10%, 15%, we'll have to bring them down. So it's a most important critical aspect of retirement planning is keeping your expenses in check and ensuring you're not going overboard, and for 7%, stick to 7% if it's...
So overestimate your expenses, underestimate your returns. Pratibha, on that note, thank you so much for joining in. Pleasure speaking with you.
Thanks a ton for having me on the show, Alex.
That brings us to the end of this edition of Your Money Matters. Do stay tuned. Lots more coming up on NDTV Profit. It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold, into the mutual fund industry over the past couple of years, will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are 2 types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Do you really know the company you invest?
Well, it's the first day of the World Economic Forum at Davos, and it's a packed day at NDTV Network and NDTV Profit. So remember, we'll start off with global voices like Florence Merzelin of Dassault Systems and Dr. Peter Coate of Siemens, who will be essentially talking about the AI impact on manufacturing and services businesses, as well as their exposure to India and how is it that they are looking to take it up a notch. We'll of course also be talking about how the world looked different in a Trump 2.0 and a Modi 3.0 era as well. We'll pose that question to the Maria Vasalu of Pictet and Gautam Kumbra of McKinsey. And we'll round off the day with conversations with Bharat Forge and Welspun Group, talking about Trump tariffs possibilities and the impact on some of the exporting businesses in India. Of course, don't forget to tune in for Roshni Nadar's conversation with Vishnu Shom of NDTV as well. It's a packed first day right just before the Trump swearing in begins. So promises to be an exciting day at the World Economic Forum. Back to you.
Well, year after year, the World Economic Forum brings together some of the world's biggest leaders, the biggest thinkers. It's an opportunity to reflect on some of the biggest concerns around the world, the biggest opportunities around the world. And who better to start off our World Economic Forum programming than the president of the World Economic Forum, Borger Brender. Thank you very much, Mr. Brender, for being with us. India has a huge presence at the WEF every year. And one of the primary themes, of course, is growth. You would have seen the latest numbers. India just under 7%. But among large nations and growing nations, it is still quite formidable. So how would you look at the India growth story first up?
So India has a great potential, and it is still growing pretty well, maybe 5.5–6% this year. But there is no reason why India cannot pick up again and do 7–8%. Of course, provided that there are reforms when it comes to investments, reforms also in infrastructure, reforms in investing in education and R&D. We do expect that in a few years, India will be 20% of the overall global growth.
Yeah,
that is quite incredible. And what works also for India is the enormous strength in startups. There's more than 120,000 startups in India. I think is more now than 120 unicorns. So that ecosystem, I think, is the basis also for future growth.
India has targeted 2047 to become a developed nation. Do you believe that's realistic? Do you believe it can be achieved?
I think India will be a $10 trillion US dollar economy pretty soon. What also works in the interest of India is that trade is now pivoting more towards digital trade and services. That's growing 3 times faster than traditional goods. And these are areas where India is very strong.
You've come out with lots of fantastic reports in the last couple of weeks. You do this every single year ahead of the World Economic Forum annual general meeting. You deal with the future of employment and jobs. What are some of the key challenges or opportunities that you see with greater digitalization of the workforce?
So it's increased productivity, and productivity is like producing more with less resources. And of course, this will challenge some jobs that are back offices today or other jobs. But if that can lead to people moving into areas where you produce higher up in the value chain, you can pay better, you can produce more, and that's prosperity. So for India, there are, of course, huge opportunities when it comes to the new technologies. But short term, it also creates challenges because one has to upskill and reskill people.
One of the big concerns is, of course, climate. And that's another big agenda this time around. The world isn't really doing very well in trying to stick to that 1.5 degrees centigrade and below that. How is that a primary driver in your thought process at WEF this year?
It's incredibly important. And I think you just came back from Los Angeles. You saw the wildfires.
Absolutely.
We have seen droughts. We know that agriculture production of food is being more challenged now because there are areas there you can just grow what you use to grow. So in general, I would say that the cost of inaction far exceeds the cost of action when it comes to climate change. So we need to keep up the momentum. We will need to emit less CO2 in the years to come to even be able to stick to a 2% degree target. And that, of course, means a lot, especially to those countries that are most vulnerable. And those are often countries that have emitted the least CO2 traditionally, being African countries, but also including India, that already has seen so much heat waves and have seen the cost of this.
Yeah. Artificial intelligence, that's also a key issue. There's the entire issue of artificial intelligence and regulation, because artificial intelligence can be potentially dangerous as well. There's the entire issue of access as well. Going forward and looking beyond the technology to policy, who decides?
I think humans should be on top of the algorithms and not the algorithms on top of humans. And AI has a lot of potential, but it can also get out of control. If you have billions of algorithms reproducing other algorithms, and you combine that with quantum computing in the future. Quantum computing is like you can then get through all the security walls you have today. That's very negative. At the same time, you can use AI in detecting cancer, in health, in more cost-effective way of, for example, dealing with energy. You can see breakthroughs that we haven't seen in generations. So maybe AI at least is as consequential as the computers, as the intranet. Some people even claim as electricity. The jury is still out, but let's make AI work in the interest of humankind. And there we also should establish some traffic rules.
Sure. You've come out with a report looking at some of the biggest global threats. We've identified, obviously, we've identified climate. Conflict is also a huge issue. But then there is misinformation and disinformation. We live in a social media era. You've got huge companies like Meta now having a rethink as far as fact checkers are concerned. Statistically and otherwise, how does misinformation and disinformation have a profound impact on billions around the world?
It has profound impact. The challenge is that if you look at social media and take it with a pinch of salt, then you're fine. Unfortunately, a lot of people read on social media and they think it's an editor that has edited it, so it's fact-checked. But you have to read and follow social media and say, okay, this is maybe just an input, this is maybe not correct. So I think we also have to have a change in our mindset. But we have seen in elections, but also on a lot of important topics like vaccination and etc. There's a lot of myths out there created by social media, and we just have to discuss it very openly. And the wrong things that are and not fact-based things in social media, we have to fight.
Just two more questions. Today's a day of great hope when you look at West Asia. The fact that you've got the hostage swap taking place, or not the hostage swap, the release of hostages for prisoners from Israel. Conflict obviously has hit our world profoundly over the last few years. I mean, it was COVID and then this. Are you optimistic that, this is the beginning of what should be a more lasting peace in West Asia?
I hope so. I think the hostage deal and the ceasefire in Gaza is positive. Let's see how it unfolds now in Syria, but hopefully there will be a more inclusive solution there too. We also have to hope that there is no escalation between Israel and Iran. If that was to happen, I think that would also have a very negative impact on global growth. In general, the geopolitical backdrop that we are faced with is not as beautiful as this and sunny. It's probably the most challenging geopolitical backdrop in generations. So I think we need to learn also to deal with that, because before cooperation was kind of the basis of interaction. Today it's competition. So countries will compete in a very severe way, especially G2, being China and US, but also other nations. But even in a world where countries compete, there will need to be areas where you then also collaborate when it comes to dealing with future pandemics, the algorithms and AI, cybercrime, and also climate change, as we already mentioned. These are challenges that don't stop with the country's border, they're transboundary.
A final question, a huge change coming up day after tomorrow, tomorrow in fact, in the United States, the Trump administration. So much of the world and global policies depend on that. How does the World Economic Forum look at the change of guard in the United States?
I think Trump 2.0 will have as much impact as Trump 1.0. We will also be privileged to listen to President Trump here in Davos on Thursday, where he will make a speech, but also interact live with some key CEOs. I think he will act fast on the immigration side. He will insist on stopping illegal immigration, but I think still he will, as also Elon Musk has underlined, he will need to get engineers and people that apply for then a visa or a green card also in the future, because that's part of the American kind of fabric. But we will also see possible changes when it comes to trade. But, things are also, Trump can also, surprise.
Sometimes a bit too much.
Yesterday, he had a call with President Xi Jinping of China, and they discussed many topics. That was maybe less predicted that early in the presidency, or even before the presidency. So for India, though, I think India is in a pretty good position, because in a situation where you'll see more friendshoring, people trade more with the countries they like. Currently, everyone wants to be friends with India. Of course, there are a few exceptions in the neighborhood, but generally India can maybe benefit from this too.
Borgo Brenda, wonderful speaking to you. Thank you very much indeed.
Thank you.
Well, there you have it, Borgo Brenda, the president of the World Economic Forum, telling us about so many things, the profound challenges which we face across the world, the incredible opportunities which exist, but also about the India growth story. What are some of the areas India can improve on as we target 2047? and the hope that we become a developed nation.
Well, it's our first conversation out of the World Economic Forum Davos 2025. It's Monday morning and it's biting cold here. Or maybe, as our guest Florence Verzelim would say, not so cold. But of course, for the uninitiated, Dassault Systems, strong presence in India, Mumbai, Pune, Bangalore and Chennai. And she, of course, is the Executive Vice President of Industry Marketing and Sustainability of Dassault Systems. And had told us the last time that she loves India. I'm sure the opinion is same this time. But Florence, thank you so much for speaking to us.
And I still love India, of course. Thank you so much for inviting me in Davos.
Yeah, but it's a bit of a perfect storm of sorts to be in Davos, right? I mean, the cooperation in a fragmented world is the Trump swearing-in ceremony today. How do you view the world from your prism currently, Florence?
Well, what I can see is that the world is getting more and more complex, which is weird because at the same time, it's never been so easy to do amazing things, especially with the power of digital twin and AI. But it's getting more complex because a lot of my customers in India, in Asia, are very worried about taxes and like the fact that it's going to be more complex to do a trade with the United States. So really, I feel huge enthusiasm about AI and the power of Gen AI, but at the same time, like worry about how are we going to manage it? Do we need to be more efficient in terms of operation, cost of manufacturing? Do we still need to be investing a lot in innovation? And like there is this kind of weird moment where there's a lot of enthusiasm of what can be done and a bit of fear about the effect of the new US government.
Yeah. So, I mean, let's talk about that for a moment. Donald Trump coming in, very likely tariffs will move up. We don't know the extent, but let's assume they move up a little. That may lead to a year of higher interest rates as opposed to lower interest rates as well. How do you see growth in such a scenario, Florence?
Well, it's a very interesting question. I see growth because, in a way, companies will need to invest a lot in order to keep up with the operational efficiency, to drive costs down, to kind of match the taxes. For example, in India, lots of investment on electric vehicles, especially two-wheelers. I think India is really running the world when it comes to electric two-wheelers. And what is great about India is they're doing that. For example, Simple Energy, who are working with us, by driving all costs down. And in that regard, I think India has really an advantage because they've always worked on frugal innovation. So compared to other countries that were not in that model, they really are going to get an advantage on it.
Interesting. I mean, the India Forum or the India Pavilion this time around speaks about how 40% of the vehicles in a few years will be totally electric, so on and so forth. So you hit the nail on the head. Just talk to us about how do you see policies in India, one, supporting growth, two, attracting capital into India to become, for manufacturing in India for India and manufacturing in India for the world.
What I think is the most impactful among all the Indian policy to attract investment from everywhere in the world, that's what they've done on skills. I can tell you we've been working with India since 20 years, and the improvement in education skills development is just amazing. Our people in Pune, they're among the smartest we have. They're not only the smartest, but the most innovative and the most enthusiastic. And it's really helping because over the past few years, India has been the country where we have invested the more when it comes to people in R&D, of course for the Indian market, but more importantly for the rest of the world. When it comes to software for EV innovation, but also for marine and offshore, for consumer goods, now for life science. 2 years ago, we opened a life science lab in Pune in order to serve the world. We are making it in India because of the level of education of India. So this is something very smart. And then the other very smart thing is also all the Indian schemes when it comes to cities, digital twin of the cities, sustainability in cities. I think India is the country which is investing the most. And the third one where I'm seeing a lot of impact, it's renewable energy. On Q3, India was a country in the world where there was most investment in renewable energy. Before it was China, now it's India. And this is thanks to an Indian government putting scheme to attract companies, but also putting scheme in order to make sure that the R&D is happening in India with Indian people.
Thank you, Florence, and wishing you a happy 2025 and have a great Davos.
Thank you very much. You too.
Thank you so much, and viewers, thanks for tuning in. Well, at the World Economic Forum in Davos and in conversation with somebody who is, well, in some sense, running a business which gets impacted in multiple ways with the policies taken by various governments, Trump 2.0, Modi 3.0 and more. Priya Agarwal-Hebbar, thank you so much for joining in.
Thank you so much, Neeraj, for having me.
The pleasure is entirely ours. So, okay, let's start off with the conversations at Davos. It's day one, so it's early days as yet, but I'm told that you have packed 4 days. What is a metals giant doing here in Davos in terms of meetings and policies, etc.?
We're talking about Vedanta 2.0 because Vedanta 2.0 is, evolving. It's transforming. We say transforming for good. And Vedanta 2.0 is going to be committed to transition metals, critical minerals, energy and technology. And, Davos is the right place to get really the learnings, the understanding on what's critical, what the globe needs, what the world needs for us to do. And we're really here to support it in our new avatar.
Yeah. Well, so before I talk about Trump 2.0 and those policies, I mean, China has gone out and, for example, spoken about aluminum targets, etc. Right. There's a lot of question mark around what extent of stimulus can they give, which will have a big bearing on metal prices too. Right. What is your internal assessment of what could happen on those counts, and therefore what could happen to metals 2005? Fraught with risk, I know the answer, but still.
So no, frankly, India's in a sweet spot. Critical minerals, transition metals, what everybody is talking about now is it's not possible for the energy transition to happen without it. The World Bank suggests we need $1.7 trillion of mining investment just for the energy transition to happen. So the eyes are on the industry, and India is at that sweet spot because while the rest of the world have really done everything, we've not even started exploring what we have.
Right.
We have reserves with so many critical minerals that are necessary. We see that every day, and even in our businesses, Hindustan Zinc, aluminium, and all of the other businesses that we have, the reserves are so large. Hindustan Zinc is is working towards 2 million tons, doubling the capacity. Aluminium is working towards doubling its capacity. Oil and gas is working towards doubling its capacity. So it's all there. It's all there domestically, and it's time for us to harness what we have and produce for the world.
So you reckon the existing businesses as they stand right now, which is not necessarily new age commodities, if you will, but the traditional ones, 2025 could be a year which will essentially help, because 2024 was a mixed one, if you will, right? So could 2025 transition into something more positive which can give you cash flows in order to both, one, service debt, and two, in order to invest for the new age metals?
If you look at our debt situation currently, I think we've reduced our debt by $4.6 billion. And $3.6 billion have been raised globally for Vedanta. The kind of excitement for this sector is huge. This is one of the largest fundraising that's happened globally for an Indian company of late, and we're very, very excited for the future of this commodity. And even the government, the critical mineral blocks that they're aggressively auctioning, we're very, very much out there. We've already auctioned, and we're preferred bidders for 6 of them. We're focusing our energies more and more on these critical minerals, and we want to make sure that we do our best to do what we can domestically to produce and really help and support India in this space where it can shine. It really is China plus one, what the world is talking about.
Okay. So therefore, cash flows will help you bid and gain into some of these critical minerals that we're talking about.
Absolutely. I mean, a lot of our cash flows is going to be targeted towards capex investments and evolving and expanding our portfolio into these more, futuristic areas.
How are you thinking about Trump 2.0? Because tariffs might go up, that might have resultant cascading effects on maybe interest rates, maybe even what China will be forced to do, if you will. Any thoughts here?
I think, generally with politics across the world, whether it's US politics or any other, I think we just have to wait and watch. A lot is said, a lot of promises are given. I think generally in life you just have to wait and see what happens. And I don't really want to comment more than that.
Okay, fair call. One last question. You spoke glowingly about the kind of stuff that is being done by the government in order to tap into some of these key resources as well. One of the thoughts is that in some cases India is ahead, some cases India is maybe slightly lagging, maybe in critical resources. I mean, China has taken a leapfrog into some of the other areas as well. How do you see the next 3-4 years into a lot of these areas where India has the advantage, not yet tapped into? and private sector might make its way into doing so.
We've only explored less than 15% of our natural resources. And and I think I don't see it as us being behind. I think there's a lot of potential now for us to really shine. And I think the government support, the critical mineral mission, listing out the critical minerals that are required, the kind of support that's there from the government is unparalleled. And I think, working with corporate India, we can really harness the, what India has to give, and we're very excited about it.
Okay.
I think the future of India is very bright in this area.
Well, lovely talking to you. Thank you so much.
Thank
Have
you
a
so much.
fantastic remainder of, or rather, the next 4 days of Davos, and look forward to talking to you soon.
Look forward to talking to you. Thank you, Neeraj.
Thank you. And viewers, thanks for tuning in.
Thank you.
I present the budget for a historic
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming Union Budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably, the July budget increased the standard deduction to 75,000 and revised both tax slabs and rates. Under the new structure, income up to 3 lakh is tax-free with progressive rates ranging from 5% to 30% for higher income tax brackets. As Budget 2025 nears, there are growing expectations for reforms aimed at easing tax compliance, particularly for NRIs, that is non-resident Indians. Here are the key suggestions highlighted by Deloitte. Firstly, simplifying the tedious process for property transactions involving NRIs. Currently, buyers must withhold tax at a higher rate, obtain a TAN and file ETDS returns. Introducing a challan cum statement system similar to residential transactions could streamline the process and reduce the burden on buyers. Second, enabling tax payments from overseas bank accounts. Presently, tax payments must be made through Indian banks, making it cumbersome for NRIs. Allowing payment
It's the biggest political comeback we have seen in decades. Donald Trump as the 47th President of the United States is a story that has echoed around the world, whether it's global markets, whether it's just those who are enthusiastic about politics, even if it's American politics. This isn't just another presidential inauguration. It's a spectacle of historic firsts at various levels. First, Trump becomes only the second president in the 200-plus years of American democracy to have served a non-consecutive presidential term. That means he sat out for 4 years and he was voted back. He is also the first ever president in US history to make a comeback to the Oval Office after being impeached, not once, but twice. At 78, Trump will also be the oldest elected president when he takes office. From controversies to comebacks, Trump 2.0 has already been writing its headlines itself all around the world. The world is in fact bracing for what a Trump 2.0 looks like. Will it be more of the America First doctrine? But amidst the buzz, the big question really is, what does a Trump 2.0 mean for India? Now, during Trump's first tenure, the relationship saw a mix of personal camaraderie with Prime Minister Modi, trade disputes as well, and strategic realignments, especially in the Indo-Pacific. But now the world has changed in the last 4 years. Geopolitics is even more fragile. There are 2 ongoing wars. Economies are recovering from global shocks. New alliances are reshaping the balance of power. For India, the opportunities and challenges are equally important. Trump has already talked about his protectionist trade tariffs. The question is, will it hurt China more than possibly India? The same policies, which is why opens up opportunities for IT, pharmaceuticals from an Indian perspective as US looks to reduce its reliance on Chinese imports. Both countries have much in common when it comes to defense cooperation. The growing challenge posed by China is just one example. As for immigration policies, for decades the H-1B visa program has been a cornerstone of Indian professional success in America. During Trump's first term, it faced some disruptions and could once again pose challenges. This might even have a ripple effect on students wanting to study in the US from India. Currently, Indian students comprise the largest group of international students in the US, accounting for 29.4% of the total international intake. With such high stakes, the big question really remains, what does Trump really mean for India? Meera Shankar is joining us to speak more on this. She's former Indian ambassador to the United States. We're speaking today with Jayant Krishna, Senior Fellow, Center for Strategic and International Studies, and Amit N. Mahajan, Director of Paris Defense, is also with us. We'll be joined shortly by Dr. Zakir Hussain, foreign policy expert. So welcome to all of you, and thank you so much for speaking with us today. As we try and break down what does he really mean for India? And I suppose every country, every emerging market is asking themselves this question. Meera Shankar, let me begin with you. And first, the difference we could see between Trump 1.0 and Trump 2.0, because a lot has happened in the interim, including 4 years of Joe Biden.
Well, I would like to emphasize that there's likely to be both continuity and disruption. Continuity because the framework of the relationship will continue to be guided by the increasing strategic convergence of the two countries in the Indo-Pacific as they try to deal with the challenge of an increasingly assertive China, and also to shape an Asian balance which is sustainable and conducive to peace and prosperity in the region. This is reinforced by the growing economic ties, technological partnerships, and the increasing interaction between the people of the two countries, spearheaded by the Indian American community. So this would be the broad framework within which the relationship will unfold. Then you have policies which will flow from Trump's domestic Make America Great Again and America First agenda, which can prove disruptive. For instance, the whole focus on illegal migration. Now, the US has a legitimate right to deal with it, but over the years, it's acquired a considerable magnitude. Right now, there are about 1.5 million individuals who have been ready for deportation because they've completed legal processes. Out of these, 18,000 are from India, from Punjab and Gujarat mainly. Now, Trump has said that he will impose tariffs on countries which do not speed up the taking back of their nationals. Okay, this is a relatively small number, but of the 11 million or so illegal migrants who are believed to be residing in America for quite some time, whom Trump has also threatened to deport, about 7.25 lakhs are assessed to be of Indian origin. So, if deportation at that scale takes place, it could be difficult for the two countries to navigate this issue. Of course, it's not going to happen immediately.
Right. So deportation is one part of it, but the sense that Donald Trump is getting from what he's saying already is that everything is a negotiation, like it always has been. I mean, okay, let's take the example of TikTok. He's coming ahead of his inauguration and saying, don't worry, I will save TikTok. He's speaking to the Chinese about keeping TikTok on. So there's always a chip to negotiate with. Jayant Krishna, let me come to you for a quick response to what you make of the fact that Trump is keen to speak with China and India as soon as he takes charge, even ahead of the usual circuit any US president makes, where he goes to Europe, he goes to Canada, etc., Mexico. He wants to get off the bat with China and India.
Absolutely, Tamanna. I mean, the impression that he has conveyed is that he means business and he's ready to engage even before he officially becomes the president. And I mean, let us be very clear. In today's day and age, countries in the world don't necessarily get what they deserve. They get what they negotiate. So I think it's very, very important, from Indian perspective, that, the foreign minister, the external affairs minister, Jaishankar, is already there, that, the right signaling, the right posturing is done right from the beginning. My biggest worry is on the trade. US happens to be India's largest trading partner, whereas India is their seventh largest partner. And US is the only major country with which India has a trade surplus in its favor. So what I'm essentially saying is that the US imports from India, add up to 125 billion, whereas Indian import from the US are just about $80 billion. So we import less from the US than we export to the US. So it is to our advantage, And any fiddling with the tariff structure is something which is to be seen. And, with China, he has talked about 60%. In India also, he's talked about it being a tariff king, and in retaliation, he will raise the import duty and so on and so forth. So I think that is something which India needs to, look at very, very seriously. And the second issue is of, the immigration, especially the visas, the H-1B visas. US, has to understand that by giving more and more H-1B visas to India, they are not doing any favor to India. As a matter of fact, India addresses very beautifully the skill deficit in the US. And also, Indians working with such a large number of Indians, be it the IT techies, be it the doctors, be it the space scientists, they're working in that country. It makes their economy globally competitive, their industry and their business more competitive. So I think, these are the
absolutely. And if he wants to de-risk from China, then India is the only option, and it's going to play out in all sectors. In fact, I just want to get Mr. Mahajan's view. Now, Paras Defense, okay, a company which has been making great strides in this space, not only in the indigenization that we are seeing in India in the defense play, but also from the American perspective. How do you see this, Mr. Mahajan? When Trump says tariffs, he says make in America. Are you worried? Or are you seeing opportunities?
I would like to see this as an opportunity. I think his visit to India and China, and like people have said before me, is he's addressing the biggest markets in the world today. If there are any consumers, there are no bigger consumers than India and China today. If you look at defense technologies, you have the biggest Indian defense market, which is currently looking inwards. Make in India is a counter statement to what Make in America is. Now he's looking at exploiting this particular market, which is about to mature to a level that will be ready for the world. He will get this as his supply chain to boost his economy. If you look at Indian industry, he will look at it as a deterrent to maybe a Chinese supplies.
So explain to us, say, in the defense sector. So all of this we're saying, give us an example. So in the defense sector, for example, where is the opportunity?
The opportunities lies in multiple technology domains. Now, you look at from optics, you look at from technologies related to land, you look at technologies related to space, you look at technologies related to quantum communications. You have a huge opportunity which he can get developed in India, sourced from India, and then further mature those technologies and grow much bigger. He would look at rather outsourcing to India than China.
Okay, rather India than China, but India has to be as competitive as China. Dr. Zakir Hussain, my question to you is, and great to have you on the show as well, that how much of what Trump says will actually translate? There is a bit of discounting, if I were to put it in markets terminology, of the things that Trump claims sometimes, the size of the tariffs, the intensity of the action, etc. How do you see that perspective?
Thank you. Before taking oath, he has shown his commitment in Gaza and Israel deal. And he has been the main person who stipulated this deal. While his statement with Putin also shows that he is going to have a very lucrative relation with Putin in Ukraine, particularly in mineral sector, because Ukraine supplies 55 minerals to America, which is critical to its security and defense, and 22 is very important in terms of lithium, in terms of rare earth material, all sorts of things are there. So what I find that he is going to materialize a deal with Putin to cut down the size of China in rare earth metal and other metals. And with India, he's trying to balance between India and China. He's trying to cut the import of low manufacturing item from India, while he is cutting with China high in technology. Look about the statement on TikTok. He is telling that if there is a joint venture, it is good, because Elon Musk want to capture the space world, and for this he has already bought X for $26 billion, and now he is ready to take perhaps TikTok, and he is trying to control the space, and through space he will try to control auto sector. Trump is there, but the circle which is surrounding Trump are totally business tycoon, and the policy, if goes like that, then it will be a very problematic issue with us. But we hope that they fall in line with Trump, and if Trump is satisfied with their ambition, that is okay. But we find that if they are going away from the ambitions of Trump, Trump will not hesitate to fire.
So short answer to the question: is Trump good for India?
Yes.
Okay.
To some extent, he is good. To some field, he is not good, because
obviously,
we have to balance.
Obviously, you can't have a
everything.
very yes or no answer
Everything
to a
you
nuanced
cannot.
question.
Yeah.
But the broad takeaway. Okay, Ambassador Shankar, I want to come to a point which Dr. Zakir Hussain alluded to, which the world is excited about, but of course India will also have an impact. Trump coming and saying that I'm going to end the wars. Now, for those who would scoff and say, okay, this is just talk. The fact is that you've seen the first hostage exchange between Hamas and Israel. A ceasefire is in play. Just a couple of days ahead of the inauguration, these things are happening. He is talking about ending the conflict between Ukraine and Russia.
Yes, I do think he will seriously try to end the conflict between Ukraine and Russia. In Israel, the challenge will be to see that the deal that has been reached for phased return of hostages and for phased withdrawal of Israeli troops is actually implemented without a glitch. In Ukraine, his envoy Keith Kellogg has given us some idea of what a potential deal could look like from the US point of view. And this would be a ceasefire, leveraging of defense supplies to bring Ukraine to the table and to the point of a ceasefire, which would be on as-is, where-is basis, and a demilitarized zone along the ceasefire line, and suspension of processing of Ukraine's NATO membership for 20 years. Now, Russia has said it's ready to negotiate. Of course, it's placed its own conditionalities, and this is not something which will happen overnight. But Kellogg is now saying, give us 100 days. We should have an agreement to halt the conflict in Ukraine within 100 days. So let's see, but clearly there's going to be a serious effort, and this is something that India will welcome, because it will create more space for India to navigate its separate relationships with the United States and with Russia. Again, in West Asia, if the hostage deal eventually leads to a longer-term peace in the region, then India would have very vital stakes, because our energy supplies are from there. We have 8 million people in the Gulf. They send remittances. And now, of course, we also have the initiative for the Middle East Europe corridor. And this would be able to take off only if there is peace and stability in the region. If conflict continues or the peace is fragile, it will be difficult to get it off.
So a couple of questions that come to mind, that if it was possible to end these conflicts earlier, why has it taken so long? What can Trump do that Biden hasn't? I want to come to Jayant Krishna on this, if I can. And get a sense from you, Mr. Krishna, on what is the possibility of all of this panning out?
So, Tamanna, I think, during his campaign also, Trump mentioned very clearly that, during his presidency, there were no wars happening anywhere in the world. And now, there are two major wars happening between Russia and Ukraine and in the Middle East, what we have seen. So I think, he would be more businesslike in settling this. That's what, and he's not a soft president. I mean, President Joe Biden was also quite good for India in multiple ways, but he was not an aggressive person, kind of a thing. So I think that should help, but only time would tell, as you rightly say. That, these are, if they were as easy things to do, these would have been sorted out by now. I think...
Either that or the will wasn't there and the Democrats were maybe, busy cleaning up their mess or their internal issues. All right, so the other question, we've talked about what Trump can do for the world, etc., what it means for India. What does India want from this relationship? Because one thing we know for sure from Trump 1.0, that it's always a negotiation. So we know what Trump wants. He wants access to, one of the fastest growing markets in the world, which is India. He wants more American goods here. What do we want, Mr. Krishna?
So I think just look at the, what India gets from the US and what we supply to the US. I mean, if you look at the US imports from India, the largest chunk is IT enabled services, software, textiles, some of the machineries, gems and diamonds, chemical, iron and steel, coffee, tea, pharmaceutical. So these are things which US imports from India, If you look at Indian imports, what India imports from the US, they are generally finished goods, like medical equipment, like aircrafts, like fertilizers, like computer hardware, these kind of things, So I think, in terms of what India wants from the US, I think two things, that even if they want to import, a higher tariff barrier in terms of import from India, it can't be across the board. It has to be only in some sectors. It has to be reasonable. I think, therefore, the right signaling from day one is very, very important. And with President Trump, I think everything is up for negotiation. And of course, second, to my mind, the major stuff would be, on the immigration and especially the H-1B visa issues. I think there India has to place its cards very, very well. And somewhere, I think we have to send the signal in a world where, global leaders need to behave more multilaterally. I think one fear is that he would his entire endeavors would be more unilateral and America first and that kind of a thing. So that's not how things operate in from a global perspective today. So I think these are the few areas where India has to be very, very cautious in terms of what it wants from them. And one thing which we should not forget is there are far too many Indians or Indian Americans who are there in very important positions.
In his government, that's the other thing that strikes me. Dr. Zakir Hussain is smiling. I mean, it's
I want to say that
it's a low-key sort of takeover. The biggest companies in the US have those with Indian origin, and they're all in key positions. Dr. Hussain.
But remember that
I want to say that we need a trustworthy partnership based on natural trustworthy relation based on natural partnership. Then other things will fall down automatically. So it's working.
Yeah, we can hear you. We can hear you.
That's why other thing will fall down. Either he wants China, we should contain China, give us latest cutthroat technology. If you want IT sector, if you want job backs to America, make our trade liberal, invest in our country, we will reciprocate them. If you want to respect our talent worker, we will facilitate your emergence. And we can also mediate in several areas. Like you are becoming expansionist in the world now. You are claiming Canada, you are claiming Mexico, you are claiming...
I don't know if anyone's taking that seriously. Is he really going to take over Canada and Mexico? Some things have to be for his Truth Social fans. So we have to... we have to make out the difference there. Okay, quick word from Amit Mahajan. What do you think India needs from Trump? What should we ensure we get out of this relationship, considering we're in a very good position now versus Trump 1.0?
You ask me, from my perspective, I need two things. One, advanced technologies. When I say advanced technologies, it is semiconductors, it is quantum, these are the areas that we need to work on. Second, I need a lot of FDIs from US. today India's FDI dream can be fulfilled better by a United States than any other country. So I need to attract the most important parts, the advanced technologies and the funds.
Ambassador Shankar, last word from you, and I'm running out of time, so I request that we keep it sharp. What's the one thing that India should have very clear in her mind when we go to the negotiating table, because it will be a negotiation?
Yeah, we want access to advanced technologies, as the previous speaker said, because that is really what we need to pull India to the next level of growth economically, both in the defense sector and in dual-use technologies. We want the commitment for the GE, HAL jet engine deal to go through and not be held up. We want the initiative on critical and emerging technologies, which provided a new strategic thrust to the relationship, to continue and be strengthened rather than thwarted, because there are some doubts about how far Trump supports technology cooperation. But the point is that this technology cooperation actually strengthens US global competitiveness and also de-risks supply lines for the US. Now, the key question is, how is Trump going to deal with China? Because he's already softened his tone. From 60% tariff after his election, he's talking about an additional 10% tariff on China. He's also talked about a 10% tariff globally. So would it be on par with India, or would there be some extra tariffs on Chinese goods? And strategically, how does he propose to deal with China? Again, there are question marks. He is very keen to visit. There have been back-channel contacts between the Trump...
His tone, I think his tone on China will be something to watch, because he's already saying, I spoke with Xi Jinping, I'm going to fix TikTok, etc. So he started off with a benign tone with China versus what we saw in most of his first presidency. But yes, this is a story I think will unfold. We'll have so much to talk over the next 4 years, because now it's an even closer world, isn't it, post-COVID? So we'll keep an eye on what he says in his inauguration. Of course, you will see all of those updates live right here on NDTV Profit. So stay tuned for that. But for now, that's all the time we have on Big Question. We'll return tomorrow, same time, same place, and we'll talk about what Trump means for the world. Stay tuned.
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are the Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
अगर मुझे इस महाकुंभ का वर्णन एक वाक्य में करना हो तो मैं कहूंगा ये एकता का ऐसा महायज्ञ होगा जिसकी चर्चा पूरी दुनिया में होगी।
संग संग चले हैं ढोल मंजीरे संग चंग गंग नगरी बम 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 लहरी।
अजर हो गया है अमर हो गया है शहर तंबुओं का शहर हो गया है
जनता के बड़े सौभाग्य की बात है।
ये एकता का प्रतीक है।
The largest gathering of pilgrims and devotees on earth has begun. Lakhs of seers and Naga sadhus from across the world have assembled in the historic city of Prayagraj to celebrate the biggest Mahakumbh in history. It is a global congregation of seers at Mahakumbh this time. Naga sadhu Anjana Giri is from Italy. She has come to Mahakumbh with thousands of seers of Atal Akhada, one of the most ancient akhadas.
What is the significance of Mahakumbh for you?
It's a big festival.
Big festival?
Yeah. Yeah.
You're from which country?
Italy.
इटली से आए हो आप?
जी.
अच्छा. तो ये पहला महाकुंभ है आपका?
हाँ, पहले महाकुंभ.
रिलीजियस सिग्निफिकेंस क्या है इसका आपके लिए? महाकुंभ आपके लिए?
ये तो तीन नदी का जॉइंट है. मतलब all together we can make a good things.
Around 40 crore pilgrims are expected to take part in history's biggest Mahakumbh in the historic city of Prayagraj. As millions of pilgrims congregate from more than 50 countries to take a holy dip at Sangam, they're also witnessing the most green and sustainable Mahakumbh ever organized. From Prayagraj city to Mahakumbh Mela ground, the walls are covered with colorful messages of sustainability and the importance of no plastic use.
One time use plastic एवं पॉलीथीन का प्रयोग नहीं करेंगे.
A special campaign has been initiated to promote the idea of sustainability and sensitize common citizens and visiting pilgrims.
कितना शौचालय इस बार? कितना शौचालय का?
1.5 लाख शौचालय बनाए गए हैं जो पिछली बार की अपेक्षा लगभग 1.5 गुना है.
1.5 गुना ज्यादा है और सभी घाटों पे भी आपने इंतजाम किया है?
इंतजाम किया
50 घाट हैं.
जी हाँ जी.
Lakhs of trees have been planted in Prayagraj to make it a green city. In this AI-powered digital control room, officials are monitoring the implementation of UP government's mega cleanliness drive across Prayagraj city and the Mahakumbh Mela ground.
Absolutely. It will be very green. We're not only doing a seminar or a conference on that, but we are ensuring that plantations, no use of plastic, use of materials, which are very friendly that way, restricted use of electricity and in the matters of, using for the street lights, the banned use of plastics of that micron size will absolutely not be permitted. And we've seized a large number of such materials already. But we are encouraging and making people aware on how to use these, alternatives.
इस लोगों को दिखेगा जो विरासत और विकास के साथ जुड़ते हुए पूरी दुनिया को अपनी ओर आकर्षित करेगा और उस आकर्षण का केंद्र बिंदु देश के अंदर उत्तर प्रदेश, दुनिया के अंदर भारत और भारत के अंदर उत्तर प्रदेश बनने जा रहा है. उसके लिए हम सबको अपने आप को तैयार करना होगा.
A sustainable tent city with specially constructed 200 recyclable green tents. This has been designated a no plastic zone.
200 टेंट्स की प्रॉपर्टी बनाई है और ये 6 एकड़ लैंड में है ऑन द बैंक्स ऑफ द रिवर गंगा और इसमें करीब 400 लोग एक दिन में हम लोग केटर कर सकते हैं. वी वांट टू ब्रिंग ग्रीन. हमने प्लास्टिक कहीं भी यूज़ नहीं किया है. वी हैव ग्लास बॉटल्स, वी हैव ये हमारे जो डिस्पेंसर्स भी हैं वो हम नॉर्मल प्लास्टिक बॉटल्स नहीं कर रहे हैं, हम डिस्पेंसर सिस्टम रख रहे हैं.
तो एक नया एक्सपेरिमेंट है. दिस इज अ टेंट जो कि ग्रीन है और इसमें प्लास्टिक का इस्तेमाल नहीं किया आपने? हाँ,
एवरीथिंग इज आइदर वुडन.
हाँ, ओके. और ये किस कैटेगरी का रूम है?
सो ये प्रीमियम कैटेगरी, दिस इज अ टॉप कैटेगरी रूम्स एंड इसमें अगर आप देखोगे वी हैव अ स्मॉल बेड, सिटिंग एरिया, अ लगेज एरिया, जी, तो हम लोग इसमें ये
2 लोगों के लिए है।
2 लोगों के लिए है जी
और ये लग्जरी सेगमेंट वाला टेंट
जी
है।
सर।
तो इसका कितना फेयर रखा आपने?
Around 35,000 rupees a night.
35,000।
So these are all waterproof canvas.
अच्छा, waterproof canvas।
जी।
मतलब अगर बारिश भी होती है तो
कोई प्रॉब्लम नहीं आएगी। We are not using वो छोटी वाली प्लास्टिक बॉटल्स जो होटल में होती हैं। We are all doing dispensers and glass bottles and everything. तो
जिसे completely green।
Yes. जी।
Sustainability is a major theme of Mahakumbh 2025, with a focus also on promoting renewable energy sources. In a 400 crore ambitious mega electricity plan, the thrust is on promoting solar lighting systems. Thousands of hybrid solar bulbs have been installed in the 17-kilometer long and 14-kilometer wide Mahakumbh Mela ground.
हम लोग 2000 सोलर हाइब्रिड लाइट लगा रहे हैं। बेसिकली हाइब्रिड लाइट की परिकल्पना हम लोगों ने 1 साल पहले की थी और इसको माघ मेले में ट्रायल भी किया था। इसका फ़ायदा ये रहता है कि मेला चूंकि जब होता है तो उस समय फॉगी रहता है, तो सोलर की चार्जिंग नहीं हो पाती, इसलिए हम लोग हाइब्रिड पे गए। हाइब्रिड के कारण वो बिजली से भी चार्ज होता है और जब धूप रहती है तो सोलर से भी चार्ज होता है। ये लाइट स्वतः शाम होते ही अपने आप ऑन हो जाती है।
Guinness Book of World Record holder and international moustache dancer Rajendra Tiwari Dukanji is the brand ambassador of Swachhata during Mahakumbh. He's roaming around the Mahakumbh Mela ground wearing colorful placards with one message: use cotton bags in place of plastic bags.
मैं ज़्यादातर पूरे शहर में हर जगह प्रोग्राम रैली में घूम घूम कर लोगों को जागरूक करता हूं। संतों महात्माओं कल्पवासियों से निवेदन कर रहे हैं कि इस बार का महाकुंभ पॉलीथीन मुक्त रहेगा। इसलिए आप सभी से निवेदन है कि आप मिट्टी के कुल्हड़ और ग्लास और कागज के कप ग्लास का प्रयोग करें।
To make Mahakumbh 2025 a plastic-free and sustainable event, lakhs of plates and bags from across the country are being distributed to the devotees under the Ek Thali Ek Bag campaign. 9 ghats have been reconstructed to make them more sustainable and environment-friendly. Mahakumbh brand ambassador Dukanji says pilgrims should not throw flowers and other puja material in the river.
माँ गंगा में माला फूल हवन सामग्री न डालें, लेकिन जब मैं ये शब्द कहता हूँ तो यहाँ की जितनी सम्मानित नागरिक हैं वो हमसे ये कहते हैं कि माँ गंगा में माला फूल डालने से गंदगी नहीं होती है। हमने कहा ये बात सही है। गेंदा का फूल और गुलाब का फूल इतने केमिकल के माध्यम से वो बड़े हो रहे हैं और जब वो फूल माला हम गंगा जी में डालते हैं, माँ गंगा चिल्ला के कह रही हैं, मेरे प्यारे भक्तों, अगर इसी तरह आप हमारे पर प्रदूषण करते रहेंगे तो मैं एक दिन इस धरती से और प्रयागराज की पावन धरती से चली जाऊंगी।
Clearly, Mahakumbh 2025 is all set to be the most eco-friendly, sustainable and green Mahakumbh ever, a truly sustainable experience for millions of pilgrims. With Himanshu Shekhar and Sachin Gupta in Prayagraj, Anasya Mathur for NDTV.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. the mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company.
The biggest congregation of pilgrims and devotees in human history at Mahakumbh 2025 is making headlines across the globe. As thousands of Indian and foreign pilgrims arrive from more than 50 countries, Mahakumbh has emerged as a global platform to showcase India's cultural and spiritual identity on the global stage. The idea of a new India, the rising India, the vision of a Viksit Bharat is visible everywhere at the Mahakumbh ground. While inaugurating development projects for Mahakumbh 2025, Prime Minister Narendra Modi highlighted that Mahakumbh would take the spiritual and cultural identity of the nation to new heights, arguing that the Mahayagya of unity would be discussed around the world.
हर रोज लाखों श्रद्धालुओं के स्वागत और सेवा की तैयारी लगातार 45 दिनों तक चलने वाला महायज्ञ एक नया नगर बसाने का महाअभियान प्रयागराज की इस धरती पर एक नया इतिहास रचा जा रहा है।
From a young skydiver in Prayagraj, Anamika Sharma, jumping from 13,000 feet in Bangkok with a Mahakumbh flag, to the Indian missions abroad popularizing the idea of a global Mahakumbh. It has become a manifestation of India's soft power on the global stage, a tool of cultural diplomacy to showcase India's ancient cultural and civilizational roots. The list of VVIP pilgrims in Mahakumbh includes billionaire American businesswoman Laurene Powell Jobs, the wife of late Apple co-founder Steve Jobs. A disciple of the Acharya Mahamandaleshwar of Niranjani Akhada, Swami Kailashanandagiri, Laurene Powell Jobs has flown from the US to take a holy dip in Sangam during the Mahakumbh. In this mega shivir of Juna Akhada head Acharya Avadeshanand on the banks of the Ganga, an international desk has been specially set up to welcome foreign pilgrims from across the world.
इसमें विदेशों से कितने मेहमान आएंगे और कितने देशों से आएंगे?
हमारे यहाँ यूरोप से, अमेरिका, न्यूजीलैंड से, ऑस्ट्रेलिया से और मिडिल ईस्ट से भी काफ़ी आ रहे हैं। हमारे प्राय प्रवासी भारतीय जिन्हें हम NRIs कह सकते हैं, उनकी भारी संख्या है। ऐसे अभी तक तो कोई 1,500 लोगों की रजिस्ट्रेशन हो चुका है।
सिर्फ विदेश से आएंगे?
लगभग 1,500 लोगों का रजिस्ट्रेशन हो जाए।
At the Mahakumbh Mela ground in Sangam, foreign pilgrims are arriving in large numbers to take part in the historical Mahakumbh to immerse themselves in a world of spiritualism and divinity.
हम लोग क्यों आए? क्योंकि यहाँ शक्ति है, एक अमृत। वे लोग बोलते हैं कुछ अमृत है, तो क्यों एक आदमी औरत जापान, कनाडा, अमेरिका यहाँ आएंगे?
Sanskrit mantras hold so much power. They are the divinity, the Shakti in sound form. And they're a way for us to activate that within us when we chant them. The Sanskrit holds the power.
A world-class infrastructure has been readied in Prayagraj to host an expected 40 crore pilgrims at this global event, with world-class facilities created all along the 17-kilometer long and 14-kilometer wide Mahakumbh Mela ground to provide seamless connectivity in Prayagraj to pilgrims.
This will be the first Mahakumbh in which artificial intelligence and related technologies will be used at a very large scale. I'm in the Command and Control Center of Prayagraj Nagar Nigam, and I have with me Principal Secretary Urban Development Amrit Abhijat, and I'm in fact in front of a very big digital screen.
Here you are looking at the use of AI in its best form in the operations of the municipal corporation. We are here seeing the location of stray animals through the use of AI, which is being located by cameras installed all over the city. And they are able to track the movement of these vehicles, which then creates an event on the computer center here. This event is then reported to a person who is managing the operations of whether it's a stray animal, whether it's collection of garbage, whether it's street light limit.
प्लानिंग होती है, यहाँ पे एसटी लाइनें, एलटी लाइनें, सब स्टेशनों का निर्माण किया जाता है। ये पूरा एक अस्थायी शहर है जो लगभग 4,000 हेक्टेयर में बसा हुआ है। इस अस्थायी शहर को 24 घंटे बिजली आपूर्ति देना, इसमें तमाम कैमरे लगे हुए हैं जिनको 24 घंटे अनवरत बिजली देनी है। लगभग 4,25,000 कैंपों को हम संयोजन देंगे जो मेले में आएंगे। विभिन्न अखाड़ों के लिए हमने अलग व्यवस्था की है। हमने इस पूरे मेले क्षेत्र में जो करीब 2 महीने के अंदर ही 1405 किलोमीटर एलटी लाइनें बनाई हैं। बेसिकली एलटी केबल है।
कुंभ में बहुत अच्छा लग रहा है। इस समय तो कुंभ अभी लगा नहीं, लेकिन घूमने के लिए हम पहले चले आए, नहावन से पहले, कि हमको देखना मिल जाए।
कितना रेट कितना है?
50 रुपया है।
50 रुपये?
50।
एक बार कहाँ तक ले जाते हैं?
आगे ले जाएंगे, आगे से फिर नहीं ले जाए थी, बस एक राउंड।
नाम बताइए बेटा। वानी।
वानी, आपने कैमल राइड किया, कैसा एक्सपीरियंस रहा?
अच्छा लगा।
I present the budget for a historic.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the Finance Minister takes up when she presents her budget for 2025.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda.
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm your host Himakshi Bahugana. Along with me is my co-host Puneet, and together we will be taking up all your queries. So viewers, don't forget to call us on the numbers flashing on your screens right now. You can also reach out to us.
It's attractively poised because if you look at the stock had a vertical fall from the highs of 445, 450. It has witnessed a good support near to its 100-week average and witnessing some amount of up move. And with the budget in focus, the power sector would continue to remain in focus. It has also crossed its short-term band of averages. So we believe it's a good time to enter into the stock. On the higher side, we believe the stock can move higher further near to 385 to 390 over the next 3 to 4 months.
All right, so that's the view coming in on the short term. And Mahesh, if you could just tell me, how are the fundamentals of NTPC looking like for the long term? Are these the correct levels to enter?
Definitely, he can enter from current level also, and I will advise him to add in staggered way. If any downside coming in 320, 325 zone, he can add further. From longer term view, we can see 30 to 35% upside from here also. So 1 year horizon could be 30% upside we can see. But I will advise if any correction come, then he can add further. So my advice is add in staggered way in NTPC.
Got that view, Mahesh. Now, let me go on to the second query, a very interesting stock, Kalyan Jewellers now. that is, has been buzzing in this particular month as well. We're getting this query from Jose from Bangalore. Now, he holds roughly about 74 shares at 679 rupees. Currently trading slightly at loss, but just wanted to get in, Mr. Ojha now. Mr. Ojha, what kind of view do you have on Kalyan Jewellers? We did see that there was a conference call held recently as well, where the management did try to alleviate some of the concerns that investor had. That has not impacted the stock price very positively, but just seeing some positive moves today. What is your outlook on Kalyan Jewellers currently?
I think a stock was trading at much more higher P. So my advice is exit on a higher level. It could be 580 to 600 range that investor can book, can parcel book losses or profit, whatever they have. But from my suggestion is exiting the stocks from in higher level, because the stocks was trading at much more higher P than profit.
Which it bounce back near to those 575, 580 levels, which is the 200-day average. Again, would be a strong resistance area. So the structure has turned weak. It's better to exit on rallies and invest into some other stocks.
All right, so that's a view coming in on Kalyan Jewellers on the short term. Now we're getting a first caller on the show. Keval is calling from Surat. Hi, Keval. How can we help you?
Hello.
Hi, good evening. Please go ahead with your query.
I have purchased 200 shares of BLS International, so I just wanted to ask about the short-term.
Short-term view. And when did you buy it exactly?
Yes, last week.
Last week, because I can see the stock was down significantly, over 6% today, and you have bought at 480 and currently it's trading at 469 levels, and you're sitting on a loss of almost 2,000 there in just 1 week. So Vikas, coming straight to you on this, how is BLS faring on the charts?
Well, the stock has just declined from its 52-week high for 510, 515. So he has almost bought near to the peaks. Some double top has been emerged at 515 to 520 levels. So we were advised to maintain some stretch stop loss at the current area, because if you look at when the structure turns weak, the sell-off would also be equally sharp. So I would advise to trail a stop off.
Let me go across to Mahesh, because we did see that the company came out with its Q3 earnings today as well. Any kind of outlook do you have, Mahesh, on the stock?
Definitely, the result has posted some weak number, and commentary of the management is also weak. Further, stock has a potential of upside, but current commentary is weak. So we can see some consolidation between 200 to 210 zone. So from shorter term period, he can exit and re-enter at lower level. Further, from 1 year horizon, we can see 280 to 295 range further. So from shorter term period, we can see some consolidation, lower consolidation zone. And after that, we can see further their quarter-on-quarter results, so we can decide further. From 1 year horizon, still we are positive to 280 to 295 zone.
Okay, so that's a view coming in on Zomato. Now let's go across to one more caller from Vizag. Hi, Sai Kumar. How can we help you?
Good evening.
Good evening. Please go ahead with your query.
My query about ITC.
Okay.
I have 100 shares of ITC.
Right.
And the average price of 289.
Right. And now.
So it is taken out.
Yeah, and when did you buy it?
Yeah, it is almost 4 years ago.
4 years ago, because I can see that you're sitting on a profit of almost 15,000 there. Currently, the stock is trading at 437. You bought it at 289. And Nuvama also came up with a brokerage note on ITC. So it said that you can retain buy with the target price of 571. So, Sai, are you looking for a long-term view or a short-term view on ITC?
That's
Are you looking for a long-term view? Sai, are you looking to hold the stock for a longer period of time or a short term?
No, next coming 6 months I'm here.
6 months picture. All right. So I'd like both the technical and fundamental view on it. Coming to you, Vikas, what do you have to say on ITC?
If you look at some major corporate action has taken place in the last month, the ITC hotel shares would be received by the investor. So the stock has witnessed some amount of corporate action, due to which the stock 25-30 rupees, which was the value in the terms of ITC hotels, has been declined. So we believe once the ITC hotels has been listed, and we would see some amount of traction with the hotel business coming through. In terms of ITC, it is at multi-month support area. So 410, 420 is a strong support area from where we have witnessed strong amount of accumulation. So it should continue to hold on. We believe once the ITC hotels has been listed, it would again regain its glory to 475 to 480.
Right. And Mahesh, for the long term, how are the fundamentals of ITC looking like?
Definitely, in a particular space, the ITC is a lower P in compared to other peer, other peer. So I think ITC can be accumulated from here also, and if anyone want to accumulate, then he can accumulate also. 1 year horizon 550 to 560 range could come, and further we can see in budget, if any taxation part on cigarette not came, then we can see some more upside, and from 6 month horizon we can see 480 to 500 range. Immediately if in anything not negative came in budget. So my optimistic is more positive side on ITC. So 1 year horizon 550 level could come.
Got the view, Mahesh, but we're also getting a next query on a caller as well. Ravi is calling up from Andhra Pradesh. Ravi, if you can hear me, what's your query?
Yeah, I'm thinking to invest in Bharat Bijli stock. Is this the right one?
And what's your current time horizon? Would it be a long-term or a short-term view that you're looking for the stock?
Yeah, 2 to 3 years, I am thinking.
2 to 3 years. Okay, let me go across, to Mahesh. Mahesh, do you cover this particular stock, Bharat Bijli, and any kind of outlook that you have on the same?
Not particular capturing that stocks, but we can analyze share some thoughts also. So we can investors should keep an stop loss near 2890 or 2850 level, and upside could be in 1 year horizon 3800 to 3900 odd level. But I think much more other attractive stocks are available compared to Bharat Bijli. So investor can look on that part also. In defense sector, actually is more promising from other space, and I think more upside could come in that level. So if investor is looking for a further a different type of investment, then HL can be preferred from here also. For Bharat Bijli specific, 3850 to 3900 level could come with the stop loss. Need to keep near 2850 level.
Vikas, let me just quickly ask your view also, because the last 6 months the stock has been down around 20-23%, but the last year has been good for the company, but it's seen some correction the last 6 months. Any kind of view that you have on the same?
The whole PSU basket has witnessed correction over the last 6 months. The same simultaneously went into through for Bharat Bijli. It is forming some amount of formation base area near to those 3300, 3400 levels. So 3300 is a good 20-month average to hold on. So we believe some bounce back cannot be ruled out from current levels, as we have witnessed good amount of move into the other PSU names. So the stock could move higher near to those 3850 to 3900 levels. And if some budget news flow comes in positive, then it would move further.
So view coming in on Bharat Bijli. Now we're getting a caller from Delhi. Hi Gaurav, how can we help you?
Yeah, ma'am. I have a Reliance share for 1120.
Okay.
I just want to know that should I hold it or should I sell it?
And when did you buy it exactly?
Year or two back.
Okay, and you're looking for a longer term?
Yeah, longer term, ma'am.
Okay, because Reliance just came up with its Q3 earnings. The profit was up 13.5%. Revenue was also up 4%. EBITDA was at 43,789 crore versus margin at 18.2%. So Mahesh, coming straight to you, is it advisable to hold RIL for a longer term?
Definitely, he can hold because already lower consolidation zone completed in the Reliance. I think much more upside potential of Reliance from 1 year horizon. It could be 1,400 to 1,500 level. But immediate, if anyone looking for immediate 6 month horizon, then 1,420 to 1,440 level could come in near term in 6 month horizon. But longer term view, intact 1 year view, we can see 1,500 odd level in Reliance easily.
We're also getting a next query coming in from Amit, who's calling us from Hyderabad. Amit, what's your query?
Hi, good evening.
Good evening, Amit. What's your query and which stock are you looking for an outlook for?
Yeah, I am looking for the stock known as Sagility. Actually, I wanted to ask, can I add this stock as the rupee is depreciating and their business is completely to US, right? So their income is about to go up. And I'm holding about 1,200 shares at 45 rupees each.
Well, that's a great query, Amit, because it's a recent listing as well. It's done very well for us investors. Amit, just before I go to the guest, what's your current time horizon that you're looking to hold? Any kind of additional shares that you might buy?
My time horizon is at least up to 10 years.
Okay, it's a long view that you're looking for this particular stock. Mahesh, let me go across to you. Sagility, very recent listing, has done very well for us investors as well. Any kind of outlook that you have, especially anything that you can add in terms of rupee depreciation as well? One of the biggest beneficiaries are export-oriented companies. Any outlook that you have for Sagility currently?
Definitely, you can add further from these level. 1 year outlook could be very positive from here onwards. So, what's their client base in the US, and their major client base is from US healthcare technical clients. So, I think more revenue could come in from US also, because Trump joining, and we have what we are seeing is Trump is policy. So, that Trump policy could be more beneficial for stocks that also. So from longer term perspective, we are optimistic for much more upside. If anyone looking for 1 year horizon, minimum 85 to 90 level could come. Last quarter result company has posted last quarter result superb, and commentary of management is also very good. So from the from upcoming 1 to 2 quarter, we are seeing much more upside in Sagility. So currently stock is consolidating, and because the stock is trading in T to T, so some consolidation are visible in the stocks. But from longer term horizon, definitely he can add further, and much more upside could come in this stock.
Right, so for long term, you can add on Sagility India. That's the view coming in by Mahesh. Now let's go across to one more caller from Bengaluru. Zenith is calling. Zenith is a very regular caller on our show. Hi, Zenith. Good evening.
Hello. Good evening, everybody.
Please,
thank you for accommodating me every single time.
No, it's our pleasure. Thanks for calling us, on a day-to-day basis. Now, what's your query for today, Zenith?
Okay, I'm holding 200 shares of CDSL.
Okay.
And at the price of 1,761 rupees.
Right.
And it's almost 10% down.
Yeah.
My query specifically would be so is it true that when these kind of stocks rallied up within a year, so much so it will go under consolidation phase for a year or maybe more? And how's the outlook looks like in next 3 to 6 months? And also, since there's Q3 results are upcoming on January 25th.
Yes.
Is there do we have any preview? Will it be, are we expecting a positive note on it, or?
Okay, because yes, I can rightly see that you're sitting on a profit of almost 33,000 there. Mahesh, I'd like to come to you on this, because the stock has fallen over 14.34% in just 1 month. So, should Zenith stay invested in CDSL for another 6 to 8 months?
From 6 to 8 months, we can see some more consolidation in the stocks. If his horizon is more than 12 months, he can hold because what we are seeing is marketing, seeing some profit booking and consolidation zone. So all the stocks are facing some selling pressure, and further their margin are some consolidation margin also. So from result perspective, we are not much more optimistic from 1 to 2 quarter. So further, if anyone horizon is more than 12 to 18 months, then he can hold further. We can see much more upside from the recent high also. But from 1 to 2 quarter, I'm not much more optimistic. From 1 to 2 quarter, he can book in exit in a higher level. That could be say 1,650 to 1,700 odd level. So from shorter term, exit from my side.
Okay, so that's a sell on short term, but I'm sorry, he is sitting on a loss of 3,000 there. By mistake, I said profit. Vikas, what do you have to say on CDSL for short term?
Well, the stock is at the support area. No doubt it has witnessed good amount of 15-17% correction, but it has been the new entry into the F&O basket in December. So it is witnessing some amount of unwinding from those few long-term holders in terms of selling it as an arbitrage, but it is at near to support areas, so should witness some amount of strong positive up move. So on the higher side, 1740, 1750 should be easily tested if the market continues the move near to those 23,800 to 23,900 levels.
Got that view, Vikas. We're getting a next caller from Mysore. Chandan is calling us with a stock query. Chandan, what's your query?
Hello, sir. Good evening, sir. Sir, my query is I bought Sterling and Wilson Renewable Energy 6 months before at a price of 618, quantity 150. But today it is trading at 385 levels. Last week it has received order of 2,500 crores from Gujarat government. That day it has touched upper circuit of 10%. From the next day itself, it is moving in a downward trend. So is there any chance that it will bounce back so that I can exit in near future?
So you want to exit in the near future? Okay, I'll just get that query. Okay. So Sterling and Wilson, let me get both a technical and a fundamental view. Vikas, the counter has been very volatile. Any kind of outlook that you have on Sterling and Wilson, and if not this particular stock, do you recommend getting out of the stock and getting into any other renewable player at this point of time?
So in the near future, as the client queries, investor queries, so we believe it will take time to recoup its losses because it has seen a vertical fall and post-result reactions, also the stock went lower circuit. So we believe it's some more time pain has to be correction. Maybe price-wise, the stock would have finished its correction, but some time correction and consolidation cannot be ruled out. So the investor will have to wait for another 6 to 9 months to recoup on the higher side into those 455 to 480 odd levels.
Mahesh, any kind of fundamental view on this particular stock? We have seen, the company's Q3 results also come very recently. While the profits have grown quite decently, it's on a low base of just about 7 crores. Any outlook on Sterling and Wilson at the moment?
Definitely, company has posted good numbers, but what we are seeing is that management is not much more optimistic for further quarters. So stock was beaten down. So I think much more some more already priced in. Don't see think much more downside from here onward. I think 360 to 385 could be consolidated. Stock could consolidate in these level. From 1 year horizon, we are optimistic for 500 to 540 level. So if investor horizon is 1 year, then he can hold further.
Okay, so that's the view coming in on Sterling and Wilson. Now we're getting a caller from Delhi. Hi, Prabhash.
Hello, good evening, everyone.
Good evening. How is Delhi's weather treating you?
Yeah, it's a little cold and up and down and with a little bit of pollution.
Yeah.
It's okay.
So please go ahead with your
on.
query. Yeah.
Yeah, thank you so much. Yeah, I have a query regarding my investment in SAIL stock, Steel Authority of India. I hold like 1,050 units purchased at 128. Actually, I've been averaging down from an earlier price of 155.
Okay.
And I'm willing to hold the stock for around a year, but I'd like to understand if there's any scope for growth or recovery in this time frame.
Yeah.
Could you please share your expert advice on the prospect of SAIL and whether holding on will be beneficial or so?
Of course.
Will it be futile?
Yes, I'll directly go across to my expert on the fundamentals there. Mahesh, the stock was down over 23% in the last 6 months is what I can see. Prabhash had bought it at 128. Currently, it's trading at 109. Do you see the stock reaching those levels in the near 6 month or 1 year down the line?
Definitely, stock has potential to go upside up to 140 to 150 odd level. But what is we are seeing Trump in joining his office, and we from China onwards, what is their impact and their policy could come in on tariff level. So that should be watchable from that perspective. Any investor should keep stop loss near 94 to 90 level zone level. So 1 year perspective still is hold, and we can see 140 to 150 level, but keep strict loss near 90s.
Got that view, Mahesh. Let me go across to our next caller from New Delhi as well. Chandan has a query. Chandan, if you can hear me, what's your query?
Hi, good evening.
Good evening.
My query is regarding Prakash Industries Limited. I am having 6,000 quantity at average price of 168. and this stock has made high of around 240 just few months back, and during this recent correction, it has come down to 145, so around 30% correction, and now again it has reversed, and during the last 1 week it has gained around 17%, and today it closed around 174.
And what's the kind of outlook that you have? Is it for the short term or the long term?
3 months max.
3 months. Okay, let me go across to Vikas very quickly on Prakash Industries, a small cap stock, 3,000 crores of market cap. What are the charts suggesting to you, Vikas, on Prakash Industries?
Well, the stock, what he suggested, the whole pattern as it's described, from 235 to 40, it witnesses good corrective action here to 140 levels. So we believe the price correction is over. Now it's on version of the breakout. It was band of averages near to those 178 to 181 odd indicates. The ball stock has witnessed good amount of price and volume both action on the positive side. So if 182, 183 has been crossed, then we could expect a further up move to 205 to 210 levels. So we can continue to hold on. If he wants, he can keep a trailing stop of around 163 from current levels. Otherwise, the potential target could be 205 to 210.
All right, so that's a hold view coming in on Prakash Industries by Vikas. Now we have a caller from Hyderabad. Hi, Prabhakar.
Yeah, hi.
Good evening. How can we help you?
See, in the recent time, I have purchased NetWeb Technologies at an average price of 2773. The quantity is 1000.
Okay.
Actually, I have seen there is a sequential growth in the sales and net profit, everything. And yesterday also the result came. When the result came, that means that there is a increase of 31% in the sales and 16% in the PAT and EBT. Even though there is a sequential increase in the sales, I am seeing today that means there is a 10% drop in the price.
Yes.
So what exactly happening? The thing is, I am having a view of long term.
Okay. Because I can see that you're sitting on a loss of almost 6 lakh rupees there, and the stock was down over 6% today itself. And if I talk about last 1 month picture, so it has been down over 20%. Vikas, coming straight to you on this, is it advisable for our caller Prabhakar to stay invested in NetWeb Technologies, because he is sitting on a very big loss there?
I would recommend to avoid to invest further, because if you look at the stock has almost multiplied by 3x over the last 2.5 years. From a base of around 1100 odd levels to it has made a high near to those 3300 odd. So maybe probably the timing in which he invested was near to those 52-week highs. The volume and price pattern suggests there would be some further corrective action, because it has witnessed a strong breakdown from its 200-day average with sharp volumes. So we believe it's better to avoid. If the stock exits, some amount of consolidation or bounce back comes near to those 2350, 2400, that would be an ideal price to exit the stock.
All right. And Mahesh, do you also hold the same view on NetWeb Technologies for the longer term?
Definitely, stock was trading at a much high P, so profit booking was came in the stocks, and further all the stocks are facing corrective mode. So I think a stock can consolidate further, and similar view to Vikas is that he can exit in further any high.
Got that view, Mahesh. We're getting a next call from Bangalore. Vishwas is calling us. Vishwas, what is your query?
Hi, sir. Good evening, sir.
Good evening.
Sir, Varun Beverages 200 stock, average price 600. Older buy, sir, short term, sir, 6 months.
Okay, short term view on Varun Beverages. Let me go across to Vikas on this. Vikas, Varun Beverages, while a high PE stock has seen some correction, any kind of view that you have on Varun Beverages currently?
Yeah, you can continue to hold on. The stock has been a consistent wealth creator. No doubt, immediate basis, we have witnessed good corrective action from the highs of 675, 670 to 570. So the stock is completely oversold. So we believe some bounce back from the current levels should not be ruled out, because it is almost near to its last quarter 52-week lows of those when the stock went for a stock split. So we believe the stock can equally bounce near to those 610 to 620. And as it has been a new entry into the F&O segment, so some amount of volatility has been increased into the stock, but we can hold on at current levels for 610 to 620 odd.
Okay, so that's a whole view coming in on Varun Beverages for short term. Now we're getting a caller from UP. Hi, Shyam. Thanks for calling NDTV Profit. How can we help you?
Madam, position Imco Elecon, madam. Imco Elecon.
Mm-hmm.
It's a mining company. They are doing that coal mining.
Yeah.
Underground mining company. Underground coal extraction in the company, that is.
Yes.
Yeah, I've been holding that 250 shares at the price of 2,950.
Right.
But it is under loss, madam. Should I hold or exit?
Are you looking for a longer term picture?
Yeah, I'm long term interested, madam, and fundamental view only.
Okay, so Mahesh, as I can see that Shyam is sitting on a loss of over 2 lakh rupees there currently, because the stock is trading at 2080 levels, and if I talk about last 1 month, it was down over 5%. What do you have to say? Should he stay invested in IMCO for let's say 1 year?
Stock is not in our watch list, so I couldn't comment more on this my side. But he can keep stop loss near 1840 and further upside. Any upside to 2,400 to 2,450 could be any upside for exit zone. So not much more from my side.
And Vikas, do you have to add on to it?
Just a minute.
Yeah.
Well, the stock has witnessed good corrective action. So along with the line, the whole mid cap and the small caps where we have witnessed. But it is being crossing in the short-term band of averages. So some bounce back cannot be ruled out. But I would stick the view with Mahesh that he should keep a trailing stop on the downside near to those 1850, 1800 odd levels. Because if that is being breached, then we could see further decline.
Got that view, Vikas. We are getting a next caller from Amty Mumbai itself. Dinesh is calling us. Dinesh, what's your query?
Yeah, good evening, sir.
Good evening, Dinesh. Go ahead with your query.
Yeah, my inquiry about GA Entertainment.
Okay. And how many
I
shares
have
do you hold?
9,000 shares at the rate of 123.75.
And what's your view? Is it a short-term or long-term view that you want to hold for the stock?
I can wait. If I get the profit, then I can wait.
Okay.
Whatever time.
Let me actually go across to Mahesh on this. Mahesh, Z Entertainment has been in the news not for the good reasons. Failed merger with Sony as well. That's been, hampering on the stock. Any kind of outlook that you have on Z Entertainment?
You see, stock is already corrected from higher levels, so not seeing much downside from these levels. So I can think if anyone horizon in more than 1 year, he can hold further. From any upside level, 138 to 145 range could be for profit booking range, and above 140-50 range, one stock can see 165 to 170 odd level. From current perspective, he can hold further.
Vikas, would you concur with the view? It's seen a lot of price correction in the last 1 year. Would you concur with this view of staying invested at this point of time?
Yeah, I would agree with Mahesh, because if you look at the stock has already been declined by 50% from its recent top, but it is making some formidable bottom-up formation into those 115 to 120 levels. So it's at multi-year low. Some announcement related to the results which are due in the current week. If something comes through, then we could witness some amount of strong traction. So it would continue to remain invested. We believe first the band of this 135 to 115 band has been there, which has been consolidating. A breakout above clear 135 to witness the stock to move to 165 to 170 levels.
All right, so that's a whole view coming in on Z Entertainment for short term. Now we're getting a caller from Kerala. Hi, Kanan. Good evening.
Yeah, thank you.
Yes, please go ahead with your query.
Yeah, my query is regarding IRCTC. So I'm holding 43 shares at an average price of 675.
Right.
So I was confused if I should book my profit and enter another stock, as many stocks are in a correction phase, or should I hold it for 1 more year? And can I expect better returns in IRCTC if I hold for 1 more year?
Of course, I'll get you the view on it because the stock was also up almost 2% today. Currently, it's trading at 790, and there's a lot being expected from the railway sector, from this upcoming budget. So, Mahesh, coming straight to you on this, how are the fundamentals of IRCTC looking like?
No, fundamentally, stock is very good, but what you are seeing is the stock is consolidating in a narrow range. So, not seeing much more upside from 1 year perspective in stocks. We can, I think, 880 to 900 level could come in 1 year horizon timeline. So, from current perspective, he can hold further. But if you want to switch the stocks, then RBN could be better if any downside coming in RBN.
Okay. So, you are suggesting a sell currently?
No, I'm not suggesting to sell at these level. I'm suggesting to sell on higher level because the stock is consolidating and today is given some small breakout. So on a higher side, he can exit and from other type of stocks, if you want to add, then RBL could be better pick in any downside.
Got that view, Mahesh. We're getting a next caller from Bangalore. Venkateshwar is, connecting to us with a stock query. Venkateshwar, please go ahead with the query.
Good evening, sir. Good evening, sir. Sir, I'm having 300 shares of Keltron Technologies. Sir.
Got that.
I purchased recently at the rate of 152, sir.
And is it a long-term view on the stock that you want?
Long-term view, I want to keep it for a long-term view, sir. What my question is whether I can accumulate it at this level because today it has gone up to 164 rupees, sir.
Yeah.
Okay. Shall I hold it for a long term? Shall I accumulate? I want to know, sir.
Got that view. Mahesh, any kind of outlook that you have on this stock? It's a small cap stock, so roughly 1600 crores in market cap. But it's maintaining its profit margins over the last 2 to 3 years. Would you advise, do you have any kind of outlook on this stock?
Definitely, if any investor want to add on these levels, they can add further. But what we are seeing is it's a small market cap stock, then volatility could be there. So any 5 to 6% is normal in these type of stocks. So he can add further from 1 year horizon. The stock could touch 220 to 230 level, odd level. But in lower side, if any selling pressure could come, then we can see 145, 150 zone. Then that could be a good level for entry for new investors.
Okay, so that's the view coming in by Mahesh. Now we're getting a caller from Pune. Hi, Tejaswini.
Good evening.
Good evening. Please go ahead with your query.
Actually, I'm holding the stock Vedanta from last 1 year.
Okay.
I have purchased at 328, 70 shares.
You purchased at 320?
328.
328, all right.
Yes. And 70 shares I'm holding. Actually, twice it has reached to 520. So what should be the target? Till where should I wait for this?
Okay, and are you looking for a short-term view?
No, long-term only.
Long-term view. Mahesh, coming straight to you, how are the fundamentals of Vedanta looking like? Should Tejaswini stay invested for another 1 year?
She can stay invested because the stock is fundamentally good and demerger is on the card. So stocks could come give some more upside in the demerger type of scenario. So from current perspective, hold from my side.
Okay.
Got the view, Mahesh. The next query that we're getting is from Bangalore. Kumaran is dialing into us. Kumaran, what's your stock query? Hi, Kumaran, can you hear us? I think we can't get to the caller, but I think I'll just take his query across. He's looking for outlook on IDFC First Bank, holding a sizable amount of shares at 75 rupees per share, seen some correction there. And I think he has a 1 year outlook on the stock. Let me go across to both Mahesh and Vikas on this. Mahesh, let me come to you first. These smaller banks have seen a lot of correction because of asset quality issues that we've seen over the last 2 to 3 quarters. Any kind of view that you have on IDFC as well as the smaller private banks as a whole?
His price is 75 odd level. That level could become in near term. I think stock could see some upside. From current perspective, he can hold and stock IDFC First fundamental is good, but already priced in all the things. So from my perspective, he can hold. His price could come in near term.
Okay, Vikas, any outlook that you have on this mid-tier private banks and especially IDFC as well?
He can continue to hold on. No doubt the stock was been a lot of promissory events but it would continue to deliver. The merger process, which was been hanging around, has also been completed. Now the stock is witnessing some amount of traction from the lower part of the range. So good support area near to those 58-59 band, from where it has witnessed some amount of bounce back. And if some totally result updates, some surprise pair, the stock would again regain its glory near to those 73-75. So we can continue to hold on at current levels, and if he wishes to add, he can add further with a stop of around 58.
Okay, so that's a whole view coming in on IDFC first, and the viewer can also add on at these levels is what Vikas is suggesting. Now let's go across to one more caller from Mysore. Raghunandan is calling. Hi Raghunandan, good evening.
Good evening, madam.
Good evening.
Madam,
Yeah.
I bought today HCL Technology.
Yeah.
That is there. Can it increase or decrease, madam?
So are you looking for a long-term view on HCL Tech?
Yes, madam.
For how long are you planning to hold the stock?
2 years, madam.
2 years, okay. Mahesh, coming straight to you, how are the fundamentals of HCL Tech looking like?
Fundamental of HCL Tech is very good, but stock is corrected from 2000 level to 1740 odd level. So stock is consolidated already, and from number perspective and guidance perspective, some management has given some highlights. So after that, what stock seen some selling pressure. From 1 year horizon, stock could touch 2100 to 2150 odd level. But in this space, TCS could be a better pick than any other, because TCS posted good number, good dividend, and also guidance are TCS are much better. So from my perspective, he can hold further, but TCS could be a good pick from my side.
Got that view, Mahesh. We actually have a WhatsApp query now from Raj from Bangalore. He's holding roughly 2,000 shares of Yes Bank at 23 rupees per share. Let me go across to Vikas first. Vikas, we've seen, the last 3 to 4 years have not been very strong on the fundamental side. Anything that you're seeing on the charts for Yes Bank?
Nothing great, so because the stock is just languishing around at this price. On the higher side, it moves near to 21, 22, then again gets back to 17.5, 18. So unless until this 21.5, 22 brand breakout doesn't come through, we could not witness anything major up move. It was lately, the last month, it has been added into the F&O segment, so it is witnessing some amount of price and volume action, but difficult to make money. Instead, it will switch on to some other private banks like IDFC First or Federal Bank.
All right, I'm afraid with that, we'll have to slip into a short break. There's more lined up on the other side. Please stay tuned to NDTV Profit.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at
Welcome back. You're watching Profit Insights. Now it's day 4 at the Bharat Mobility Global Expo. The Expo serves as a key platform for companies to launch new products and connect with potential customers. Car makers announce a slew of offerings, especially in the EV space, specifically priced for Indian markets. My colleague Rishabh spoke with the management of Gensol Engineering, Car Dekho, Map My India on new innovations.
We're at Hero Vida's exhibition right here at the Bharat Mobility Global Expo, and what we are seeing here is the world's first 3-wheeler that's convertible to a 2-wheeler. Now this is a 2-in-1 built electric vehicle that is being innovated here by Hero Vida. What we'll also see is that how this process will take place in terms of converting a 3-wheeler into a 2-wheeler and a 2-wheeler into a 3-wheeler and vice versa. It's a very interesting challenge here, and as you can see, the 3-wheeler component of it is currently going down. The 2-wheeler part of it, the scooter, has been set into